Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, August 5th. We are live about an hour early from where we usually begin because we have President Donald Trump, who will be on the airwaves in about 5 minutes being live, and he's going to be interviewed on CNBC. CNBC is a business network. He has not done an interview with CNBC, I think, since he became the president in January. So this one's also going to be very important to kind of see what Palantir, what I was talking about has nothing to do with Palantir. I was talking about the president on CNBC, and I'm trying to get my thoughts together, and Palantir pops out of my mouth because it's really hard to not focus on Palantir. But we're going to see what Trump says when he goes live. That should be live in a couple minutes. Folks, I don't really know what to say. For a guy that talks for a living, I am quite speechless. I got 3 hours of sleep last night. My sleep score is freaking like 65. It's a horrible sleep score because I couldn't sleep. Palantir's at $171.54. It's up 7% in the pre-markets. I don't know. I don't know, dude. I know you guys are probably speechless. I'm speechless. If you've been on the journey for the past couple of years now, it's really hard to kind of put into words what this moment looks like. But I bought more shares this morning. I bought 100 shares at 169.32. I posted it on Twitter. Why did I buy more shares? Because this was one of those quarters where you buy more shares. Everything the company did gave me excitement and energy to continue to wanting to own more of this stock. And, obviously most people will be upset about the valuation. I get it, but this is one of those quarters where you look at the nature of the business, the way it's supposed to be analyzed outside of just the market capitalization. And you realize that every single penny that this business is getting in terms of value is deserved. And this was one of those quarters to justify that. So we will talk a lot more about Palantir. I did buy more in the morning. 170, 150. It's at all-time highs. It's likely going to open up at around 400 billion, just about in terms of market cap. It is a unicorn that is hard to explain, but the unicorn is taking shape in front of us and it is growing. And given the math that Steve and I were doing last night, it is going to continue to keep growing at pretty astronomical levels. So very, very, very exciting stuff to see on Palantir. Trump will be live in a couple minutes, and then I'll switch over to him. That's why we are live early. I don't know how long he's going to be doing the interview, but probably like 10, 15 minutes, and then we'll go back to talking about the broader markets. We'll see what Trump says. We do have some macro headlines around Switzerland. The president of Switzerland is apparently flying to the U.S. to negotiate tariffs because he doesn't want 30% tariffs, which makes sense. So we got that going on. The EU just paused all their retaliatory tariffs to finalize trade deals with the United States. So that's good. And then we have a ton of upgrades across the board on Palantir. You have Wedbush, Dan Ives bringing it to 200. You have Citibank bringing it to 158. And you have Morgan Stanley upgrading it from 98 to 155. Morgan Stanley's upgrade, by the way, when we read through it, well, let me just bring it up right here. They were as speechless as I am. I mean, they didn't know what to say. It's quite incredible. I'll bring it up right here. Basically, they were like, oh, so Palantir is the winning recipe to deploy AI. Wow, is our reaction to the Q2 results. And then they go deeper into the numbers and discuss why they are so surprised by these results. We're live early today because Trump will be on CNBC in about 3 minutes, and then I'll switch over to him and we'll listen to what he has to say. But yeah, this was one of those quarters. Yeah, Deutsche Bank, we got a couple other upgrades. Deutsche Bank upgraded them to 160 from 80, Baird from 100 to 170, Mizuho 135 to 165, Piper Sandler 170, which they initiated freaking last week, to 182. And then Loop Capital from 178 to 180. I mean, when you talk about a quarter that has nearly, zero sort of core red flags or things that you would be scared about. And I've been going through the quarter for the past 24 hours. I can't find it. If anyone has it outside of international growth, which is not really Palantir's fault. It's a structural problem in Europe, which to me is important because that means that a lot of other companies are not going to be able to easily grow in Europe until Europe opens up. And that I think will be a tailwind in the future, even if it's a headwind right now. But outside of that, it's really hard to find a critique of this quarter. It really is. And the reason the stock is getting multiple expansion in the pre-markets, and we'll see what happens when the market opens, is because the entire world, it's a quarter that wakes up the world, is what I'm trying to say. This was the type of quarter that, when NVIDIA had that type of quarter back in May of 2023, woke up the world. I'm not saying this type of growth is NVIDIA level growth yet. And I'm not saying Palantir is going to be able to sustain it as aggressively as they're doing right now. Although I think there's a possibility for that, which is why the market is so excited. Because if they can sustain 45, 50% for the next couple of years, this is going to be pretty incredible. But it's one of those quarters that gives you the necessity to take a deeper look, especially if you've ignored it. And it wakes up a lot of the world that has felt Palantir was expensive or Palantir has this problem or that problem and says, wait a second, maybe I missed the story and I need to take a deeper look. And I think that's what's happening right now. So yeah, dude, pretty exciting. Pretty exciting. And yeah, I barely slept, dude. I slept like 3 hours last night. It was a bit hard to sleep. I actually went to the gym after the call, and it was one of the best cardio sessions that I had in my life. I was running on that treadmill. I was I was lip syncing the most gangster lyrics. Yeah, I was talking about killing people and selling drugs. And I was just like straight up just mouthing those lyrics. There were two girls, one on the left, one on the right side. I could tell they were so annoyed because I was animated, bro. I obviously wasn't saying it out loud, so they couldn't hear me. But if you took a look over to this guy running, I mean, basically this is what I looked like. Someone had a GIF of it. Or GIF, however the hell you say it, GIF, whatever it is. This is basically what I looked like, bro. Let me see if I can pull this up. It was just me running on the freaking treadmill. Very, very excited about Palantir. Okay, I can't find the reply, but I'll show you guys in a bit. But yeah, I was excited yesterday, and it was hard to sleep. Oh, there it is. This thing. This is what I looked like. Literally, this was me, bro. This was me yesterday. But there were two people on each side of me. And they were probably like, why is this guy so animated? Like, what is going on? What could he possibly be this excited about? Like, I was on my hand movements. Everything was there. I don't even know what movie this is from. But apparently this is from a movie. This was me yesterday. It had so much energy. It was hard to focus on anything else. Trump is not live yet. He should be live in about 2 minutes, and then we'll see what he has to say. But that's why we're live early, to see what Trump is going to be saying on CNBC today. Let's see if they are live.
Here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, who is at the Aspen Economic Strategy Group meeting. Former Treasury Secretary Hank Paulson and former Treasury Secretary Tim Geithner will be joining us from there in just a little bit. In the meantime, take a look at the futures this morning. They are in the green after a big day of gains for the markets yesterday. Right now, the Dow futures are indicated up by just over 50 points. You've got the S&P futures up by about 15 and the NASDAQ indicated up by 80. The NASDAQ yesterday up by 2%. We will be getting international trade deficit data. That's due in just about 30 minutes. Ahead of that, we've been watching the treasuries, and you can see right now the 10-year's at 422, the 2-year at 370.
And now to the guests that we've been talking about all morning. President Donald Trump. Mr. President, welcome. Thanks for calling in. Wish you could be here in person, but we'll do this.
Good morning, Joe.
We've been talking about the BLS and the employment numbers all morning long. Sometimes I know you get a chance to tune in. I want to bring up a chart. I hope you can see it, or else I'll describe it to you. This is the response rate over the last 10, 12 years for the BLS, the household survey. It's dropped from 90% or so on time down to 60 and sometimes even lower. It's arguably the most important number we get about the economy. Yesterday, we had Wharton professor Jeremy Siegel on. Just bear with me, Mr. President, and listen to this. I know you're familiar with Wharton, but unsolicited, this is what Jeremy Siegel said yesterday about the numbers.
I'm not going to let the BLS off the hook. I mean, you talk about how to fix it. Make these questionnaires mandatory and give them a time limit to fill it out. I think the response rate's down to 60%. I mean, that's unacceptable for the most important statistic that we have. It's almost like we're sending them out, fill it out when you can. We know you like to go to the beach in the summer, so it might be a little bit late. this is just not acceptable today. We need that response rate has to go up. And when you make the biggest mistake in 50 years, why? Why wasn't there an explanation?
It's 258,000 less in 2 months. That was the biggest revision since 1968, Mr. President. So we're in the internet age. We still can't get any instant data. We're still using snail mail to get the responses back. It is the government, after all. Antiquated, no doubt, and certainly suboptimal, but rigged? Where do you get the notion that it's rigged, or do you have any evidence there?
It is antiquated, but it's also very political. And, I had an election recently where I did very well, won every swing state, won the popular vote, won everything, all right? Won all the counties. It's, I think, 87% of the counties were Republican up. That's never happened before. And yet I had to go through hell. And just days before the election, they put out numbers that it was like the country was on fire. It was doing so well. And then they did a revision about 2 weeks later, and the revision was down by almost 900,000 jobs. You remember that? And I said, I said, what would have happened? What would have happened if I lost? Think of it. I would have said, they gave phony numbers, and then they revised them a week and a half later.
Those were benchmark numbers, though, Mr. President. That happens. They do that. They do that twice a year, and it reconciles the monthly figures with, like, the overall numbers. And it was a big number. And obviously,
the numbers were rigged. The numbers were rigged. Biden wasn't doing well. He was doing poorly. They announced these phenomenal numbers 2 days before the election. And a little bit before that, always these great numbers. And you knew it wasn't doing well. You knew prices were through the roof and inflation was terrible. The whole thing was bad. But think of it. Then they did the biggest revision, I think, in history of almost 900,000 jobs. And it turned out to be more than that because later on they did another revision. And so they gave phony numbers in order to win the election. After I won the election, I said too big to rig. But after I won the election, then they announced a downward number, in other words, to bring them back to reality. And I said, wow, supposing I would have lost, I would have blamed that. And people would have said I was a conspiracy theorist. It's crazy.
Elaine Chao was on yesterday, and I know, she was, I think she was labor secretary for 8 years under Bush II, and she was your transportation secretary as well. And she said, the commissioner doesn't really even get involved with the actual minutia of putting all these things together. And there's no way that it could have been, that she could have chosen to rig these numbers to make them look bad. And these are statistical changes based on this antiquated system. And it's just a big leap to go to rigged. And then it also, Mr. President, it makes anyone you pick is going to be, critics are going to say, hey, he's picking a guy that's going to give him or a gal that's giving him the numbers that he wants. So it undermines confidence in the system to some extent. You had, according to many people, all the rights in the world to try to replace a commissioner when hasn't gotten any better. But that is maybe a bridge too far, according to most people.
Well, I think when somebody says the commissioner is not involved, I don't want to get into any arguments with anybody. Why should I? She's a very nice woman.
Exactly.
But when they say that that nobody was involved, that it wasn't political, give me a break. Look, before the election, I had this massive outflow of beauty for Biden. I mean, he didn't know he was alive. And for Biden, the economy was roaring. It was a beautiful thing. And I said, there's no way this is happening. It's going the opposite direction. And 2 weeks later, they said I was right. But even if you look at the original, the ones from the other day, the numbers were very timid. And then they announced something that made them even more timid on top of it. On sort of a reporting day, I don't know why, it just seemed a little bit more important than most times when they announced these numbers.
We talked earlier that the unemployment rate is still low. It's 4.2%.
It's fine. I'm not saying earth-shattering. But I will say this. The numbers before the election were earth-shattering. I'm not saying these were earth-shattering. But then they announced a couple of 100,000 to make it look a little bit worse from, months before. I said, where did
But
those numbers come from? So
for as much as you want
it's a highly political situation. It's totally rigged. Smart people know it. People with common sense know it. And a lot of people to keep their head under the covers. And
let's move on to this. Which number do you believe at this point? Because if you noticed, suddenly the chances of what you've wanted for months and argued for months, the chances of a rate cut soared because of these numbers. Do you not believe the current numbers because they're playing right into what you want the Fed and Jay Powell to do? They're not horrible, as you said, but perhaps with the tariffs, some businesses delayed some spending. Some consumers may have been less certain about the future. So maybe we're seeing a slight slowdown in labor, but you're going to get exactly what you want based on these numbers. Which ones do you believe? Do you not believe the revised numbers either?
It's not what I want. I don't want that. I wanted it a year ago. I wanted it a long time ago. Jay Powell is highly political, and I think, I call him too late. Jerome, too late. Powell, he's too late. He's too late always. He always has been, except when it came to lowering interest rates before the election, he did. He worked that out.
Who would you replace him with? I know you watch the show occasionally, and we had an extended interview with one of the prospective replacements, Kevin Warsh. Were you watching that day, or? I
was. He's very good. He's very good. He's very good. Sometimes they're all very good until you put them in there, and then they don't do so good. But a lot of them, I think he's a very good guy. I think I say Kevin and Kevin. Both Kevins are very good. And there are other people that are very good too. But
Kevin's a lot of times, I don't know if that's good.
A lot of times they're very good. Like this character that we have in there now, Jerome Too Late Bell. He was very good. He said, "Sir, I'll keep interest rates so low. I'm a low interest rate person, sir." You could hardly hear him talking over the desk.
Is Warsh
somebody that worked for him? He was a big fan of his. Not a fan of his. He hardly knew him, but he wanted him so badly. I did somebody a favor. I put him in there. No, he's too late. He's too late. That name will stick to him.
Can you handicap it at all? Who you're, or you won't know? When will you know? And when will you announce it?
I think the two Kevins are doing well, and I have two other people that are doing well. Look, it's in the end, there are numerous people that are qualified. Everyone on your phone right now, in terms of at your beautiful studio, would be very qualified, in my opinion. You guys are better than most of the people that do it for a living. But I watched a lot, actually. No, I think that it'll be one of four people.
Are the other
I'm going to make
names...
the decision soon. And don't forget, we have somebody that left early, which was a pleasant surprise. We have a woman that left early. She announced 2 days ago that she's leaving, and I'm going to be announcing that very shortly, too. That will be, most likely it'll be for the 4 months, for the short period of time. But a lot of people say that when you do that, why don't you just pick the person who's going to head up the Fed? That's a possibility, too.
President Trump, you said there are four names. There are two other names that have been mentioned in the press. One is Governor Waller. The other is the Treasury Secretary, Scott Bessent. Are those the four that you're considering?
Well, I love Scott, but he wants to stay where he is. I'll take him off because I asked him just last night, is this something you want? Nope, I want to stay where I am. He actually said, I want to work with you. It's such an honor. I said, that's very nice. I appreciate that. But no, Scott wants to do what he's doing. He's doing a great job, and he wants to do what he's doing. So I just take him off. He does not want it. He likes being Treasury Secretary. He's doing a really good job. We made the greatest trade deals in the history of our country. We had to because we were being ripped off by the world. It's not like we had a choice. If we would have gotten these trade deals, if you would have had a normal president that would have just continued to allow every country in the world to rip you off, we would not have a country anymore. Your show would be off the air. There'd be nothing to look at. It would be a disaster. We were in such bad shape when I took over. Eggs had tripled in price, more than that. Everything was up and prices are down, and it bugged me. I looked at CNN the other night, which is a failing deal. It's got no ratings, and I'm probably the only guy watching. And I watched these guys talking about, well, with Trump, prices are up. No, prices are down since I came in. Down. All prices just about, except for the price of stock. The price of stock is way up, okay? But prices are down. And if you look at energy, I'll give you an example. Joe, look at energy.
Some of them, but,
yeah. Energy is way down. Energy is down to $2.20 a barrel, a gallon now for a car. It's down to a level. You're down, I guess, around $65 a barrel, but it's going down. There's tremendous energy. And if you notice, OPEC and OPEC Plus they're drilling more. They want to drill more because I think they want me happy. Because if energy goes down low enough, Putin's going to stop killing people. That'll be nice, even though they're his own people that are dying, him and Ukraine. But Putin will stop killing people if you get energy down another $10 a barrel. He's going to have no choice because his economy stinks.
Mr. President, it's Andrew here. It's great to speak with you. I just wanted to ask you about, you mentioned tariffs. And on Sunday, you talked again about this idea of dividends for middle and lower income folks that might come off of the tariffs, meaning the revenue that's coming in from the tariffs. And I wanted you to maybe explain how that might work in practice and how you're thinking about that and the trade-offs between paying down the debt, which I thought was something you had been talking a lot about, versus sending checks out, because obviously that creates its own debt for us.
So we're taking in trillions of dollars, Andrew. If you look at Japan, we're taking in $550 billion. And that's like a signing bonus that a baseball player would get. He would get slightly less no matter how good he is, right? But they give a signing bonus of $1 million or $2 million or $20 million or whatever the hell they give today. It's so out of control. But a signing bonus. So I get a signing bonus from Japan of $550 billion. That's our money. It's our money to invest as we like. European Union, $650 billion. Think of it. And they're going to buy $750 billion worth of our energy. And they're going to do this and they're going to do that. And by the way, they're going to open up their countries, which they've never done. Japan has never. If you did business in Japan, they would arrest you. You're not allowed to do any business. And now Japan has totally opened up their country. They're even taking our rice, which is something that nobody said was possible. But more importantly, they're taking our cars. They're taking the very beautiful Ford 150, which does very well, and I'm sure will do very well there. And other things that do very well here will also do well there. You'd be surprised at some of the great things we make. But Japan has opened up. All of these, Indonesia's opened up their country. South Korea has opened up their country. But not only open up, and that's going to be huge business. When you open up South Korea, it's a closed country. And now all of a sudden we're allowed to sell cars into South Korea and trucks and SUVs. I mean, we're really opening it up. Vietnam is opening up their country. You know, these are all closed countries. But the EU was closed. They wouldn't take our agriculture. I said to, let me just say a prime minister, a very nice prime minister, a couple of years ago, I said, how many cars are you taking a year? Let me guess, is it one or two? She said, no, we don't take any of your cars. I said, that's right. That's not nice. I said, that's not right. That's not a nice thing, Angela. But they took none of them, and now they take all our cars, all our trucks. Everything is open, 100%. In addition, the EU is going to pay us $650 billion. We're going to round it off, actually, because of certain things, to $600 billion. And think of it. They're going to put up $750 billion. We're a rich country again. Now, these are just deals that I'm announcing. These are the biggest ones because EU is, essentially Europe. We made great deals with all of the countries, and they're being fair about it. One other thing, I mean, for your listeners that perhaps are a little bit less wealthy than some of your listeners, I'm doing something that nobody's ever done before. As you know, for 30 years, Europe has had drug prices that are, in many cases, 1/10 the cost of drugs in here. Same manufacturing plants, same everything. 1/10. I've invoked favored nations. Now, there is no favored nations clause. I've just said there is, okay, because we're not going to pay 10 times more per pill than they pay in Europe. Then that's going to have a tremendous impact on the price of medicine.
Mr. President, what kind of teeth, though, are in those investments? What kind of teeth are in those investments, meaning that would force the EU to make those investments? If they don't make those investments, what happens on the other side?
Well, then they pay tariffs of 35%. No, they brought down their tariffs. So they paid $600 billion, and because of that, I reduced their tariffs from 30% down to 15%. And a couple of countries came, how come EU is paying less than us? And I said, well, because they gave me $600 billion. And that's a gift. That's not like, a loan, by the way. That's not a loan that, 3 years comes up, we have to pay it back. There's nothing to pay back. They gave us $600 billion that we can invest in anything we want.
the deal that you
and nobody
now,
knows it, Becky. Nobody knows it because, you know, they don't know.
No, that we have been trying to figure out the details on that, Mr. President. So
well,
we
there are no
appreciate the
details.
clarity on
the
that.
details are $600 billion to invest in anything I want. Anything.
Okay.
I can do anything I want with it. And the purpose was they've been, you know, ripping us for so many years that it's time that they pay up, and they have to pay up. We couldn't afford to have the deficits. Look, I did something with Switzerland the other day. I spoke to their prime minister. The woman was nice, but she didn't want to listen. And they paid essentially no tariffs. And I said, we have a $41 billion deficit with you, madam. I didn't know her. I said, we have a $41 billion deficit, and you want to pay 1% tariffs. You wanted 1%. I said, you're not going to pay 1%. We lose, because I view deficit as loss. You know, you have some people, by the way, I think
pharmaceuticals are a big issue with Switzerland. I think.
Well, I'll go into pharmaceuticals. Yeah. They make a fortune with pharmaceuticals, and they make our pharmaceuticals in China and Ireland and everything else. And within the next week or so, we're going to be announcing tariffs on specifically. This is this is a separate class than the 15% tariffs on sort of everything. These are excluded classes, I call them. I like to call them excluded, like steel, aluminum, etc.
Right, the
well,
232.
We're going to be announcing on semiconductors and chips, which is a separate category, because we want them made in the United States. And by the way, they're being made in the United States. You know, we have the biggest in the world, as you know, from Taiwan is coming over and spending $300 billion in Arizona, building the biggest plant in the world for chips and semiconductors. But on pharmaceuticals, we'll be putting a initially small tariff on pharmaceuticals, but in 1 year, 1.5 years maximum, it's going to go to 150%, and then it's going to go to 250%, because we want pharmaceuticals made in our country. And that's not the CHIPS Act like Biden did, because he didn't know what he was doing, where they gave billions of dollars to companies that had more money than they knew what to do with.
President Trump, can I ask you about something that you're doing that's opposite of the Biden administration, too? And that's the latest deal that you've announced. The latest deal, though, that you're announcing with India, you're upset with the trade deal there, especially because they're buying Russian oil. The Biden administration sanctioned Russian oil, but then they kind of winked and nodded and appreciated that India and China were buying some of that oil because they were worried it would raise oil prices and thereby prices at the pump. To you, is it more important to shut down the Russians on this than to worry about oil prices?
I'm not worried about prices because we're drilling at levels that nobody's ever seen before. And what Biden did is he stopped my drilling. And then prices, if you remember that first couple of months, prices went through the roof. And he immediately said, let's go back to what Trump was doing. Let's go back to it. But by that time, they had blown it, and the energy prices were so high. And that's what caused that, and his crazy spending is what caused, by the way, the largest inflation in the history of our country was during the Biden administration. Not 48 years. You know, they like to say 48 years. It was the largest in the history of our country, the inflation that we had during Biden, because the man obviously didn't know what he was doing. But with India, what people don't like to say about India, they're the highest tariff nation. They have the highest tariff of anybody. We do very, very little business with India because their tariffs are so high. So India has not been a good trading partner because they do a lot of business with us, but we don't do business with them. So we settled on 25%, but I think I'm going to raise that very substantially over the next 24 hours because they're buying Russian oil. They're fueling the war machine. And if they're going to do that, then I'm not going to be happy.
There are a lot of deals signed. And I don't know, you know, I thought India was imminent. I'm not sure what the sticking point is there, Mr. President. But let's just, since we don't have all day, we got to talk China.
Well, the sticking point with India is that tariffs are too high. Now, I will say this. But India went from the highest tariffs ever. They will give us 0 tariffs. And they're going to let us go in. But that's not good enough because of what they're doing with oil. Not good.
It looked like you were going to have a meeting and people were talking about it with President Xi. And then you went out of your way to kind of say other people are saying, I think you even called it fake news or something. It looked like you were indicating that you were unhappy or that talks had broken down. And we've had a couple of frameworks or some positive moves. And you know, China, you've had a lot of success with other countries. China is a big deal and a big, not quite the elephant in the room, but certainly an important trading partner. Where does that stand? Will there be a meeting between you and President Xi? Anything planned at this point? What's the sticking point now, and how optimistic are you that we get a comprehensive
Well, I can have
deal.
a meeting. We have a very good relationship, but I didn't call for the meeting. He called for the meeting. So the fake news announced Donald Trump wants a meeting with China. No, I didn't want it. No, he asked for a meeting, and I'll end up having a meeting before the end of the year, most likely, if we make a deal. If we don't make a deal, I'm not going to have a meeting. I mean, you know, what's the purpose of meeting if we're not going to make a deal? But we're getting very close to a deal. We're getting along with China very well. I will tell you, you know, you had a point when I had 145% tariffs on. I put in for fentanyl. I actually said to people, where are we now with China, by the way? Because I kept adding more and more. They said, sir, you're up to 145%. I said, you got to be kidding. So I sort of had to bring it down a little bit. But when it was up to 145%, meaning we were doing zero business with China, China was collapsing. I don't know if you know that. You haven't reported it if you do. But China was collapsing. China is very reliant on the United States. My relationship with him is very good. I think we'll make a good deal. It's not imperative, but I think we're going to make a good deal. But no, they had a thing that Donald Trump really wanted to go there. No, I don't. It's a 19-hour flight. It's a long flight. But at some point in the not too distant future, I will. And just to end this conversation in China, I have a very good relationship with President Xi. Always had, other than the COVID moment where I was very angry with him and essentially didn't want to talk to him, frankly, because, you know, it did come out of Wuhan, in all fairness, which I was saying from the day one. I was saying I knew exactly where it came from. But that did interfere with the relationship. But no, I've had a great relationship with President Xi. We respect him a lot. They respect us a lot. They didn't respect Biden. They thought he was a numbskull. They couldn't believe he was the president of the United States, and neither can anyone else that happened.
Mr. President, on a different topic, the Wall Street Journal is reporting that you're prepping an order that they say would punish banks that discriminate against conservatives, including potentially Bank of America. I'm going to be actually talking to Brian Moynihan here later today. Can you tell us about that executive order? What's in that? And what do you think the banks have done?
Well, they did discriminate. I had J.P. Morgan Chase. I had hundreds of millions of dollars in cash. I could see if they want to, if they want to do something bad because you don't have any money and you're defaulted and they took people out. But I'll give you me as an example. I had hundreds of millions. I had many, many accounts loaded up with cash. I was loaded up with cash. And they told me, I'm sorry, sir. We can't have you. You have 20 days to get out. I said, you got to be kidding. I've been with you for 35, 40 years. They said, and I mean, I had all this. I didn't know what to do with it. And I went to, and you could ask him, maybe he's not going to admit it. So I said, I was informed by my people that we have to get out of Chase Manhattan. That's Jamie and J.P. Morgan Chase. So I said, I can't believe it. Well, I was never in this situation before. I've never had anything like it. And it's not like, gee, you defaulted on a loan. Geez, if I could understand that, that's different. But there's no default. I mean, there's nothing but cash. I have a really great company. And then what happens is I call up Bank of America routinely because when I was president, this was after I got out, by the way, I call up Bank of America routinely. And I speak to him and I speak to a couple of people and they have zero interest. Brian was kissing my ass when I was president. And when I called him after I was president to deposit $1 billion plus and a lot of other things, more importantly, to open accounts, which banks always like. They like accounts because they get interest free, the overnights and things, a lot of reasons for it. But they like accounts. I had hundreds of accounts. And he said, we can't do it. No, we can't do it. So I went to another one. I ended up going to small banks all over the place. I mean, I was putting 10 million here, 10 million there, did 5 million, 10 million, 12 million. I have them all over the place, the craziest thing. And it's lucky I even had them. They were doing me a favor. And that's because the banks discriminated against me very badly. And I was very good to the banks. I had the greatest economy in the history of our country when I was president. And by the way, our economy now will blow that away. And you see it happening. But our economy now, because we're a rich country again, because of our trade deals, we've become a rich country again. But no, they totally discriminate against, I think me maybe even more, but they discriminate against many conservatives. I told that story and sitting around tables with other people that were conservative or Trump supporters. I think the word might be Trump supporters more than conservative. And I believe what they did is they went to the regulators. You know, banks are not afraid of anything but a regulator. They're regulators and their wives. They're more afraid of their wives than the regulators. But the group they're really afraid of is bank regulators. And I believe that Biden or Kamala, and I don't think they're smart enough to do it, but the people that are surrounding the beautiful Resolute desk, you know, the high IQ people that are radical left, I believe they told the banking commission, the bankers, that the banking regulators do everything you can to destroy Trump. And that's what they did. And guess what? I'm president. How did that happen?
Yeah, Mr. President, you've talked about you want success, not retribution. The Justice Department now tapping a grand jury to look into the intelligence community's assessment of what was happening with Russia. Is that you have nothing to do with directing the Justice Department?
No, I have nothing to do. Pam is doing a great job. I have nothing to do with it. I will tell you this. They deserve it. I was happy to hear it. I actually read it just like you did. I have nothing to do with it. But what they did in the election, what they did in even the last election, but it was too big to rig. But what they did in the 2020 election is grotesque. I mean, that was a rigged election, 100%.
Okay, we can't relitigate that. We can't relitigate that.
No, we're back to rigging again. Well, you can use it because everyone knows.
Yeah, we.
You know what? A year ago, you would have been upset if I said it. Today, it's different. I say it all the time. It was a rigged election. It was 100% rigged.
We can't relitigate because it.
And I'm sure that's going to be brought up.
Independent sources, even your Justice Department. But then I'm bringing up Bill Barr. But even they decided that there were things that happened, but nothing that would have swayed it.
Well, they were wrong, and Bill Barr was wrong, and Bill Barr didn't investigate, and he should have. And why didn't Bill Barr give the? Why didn't he give the Derma report? Why didn't he give that report? The stuff that's in there, that's all the stuff is coming out of it. Why didn't he give it earlier? I mean, why did it take so long to do it? And why didn't he give it? Why didn't they announce it earlier? Because it morphed. What happened is it morphed into the Biden administration, and the Biden administration buried it. So it's too bad.
How about Texas? Now we're going to do mid-year or midterm gerrymandering based on that's going to be a quid pro quo or something with. In blue states now, Mr. President, did you?
Well, they did it to us. Those blue states that you're talking about. Somebody gave a good example. In Massachusetts, I got, I think, 41% of the vote. It's a very, blue state. And yet it's got 100% of Congress, 100%. So I got 41% or something. And yet 100% of Congress in Massachusetts. No, it shouldn't be that way. We should have a couple of Congress people, but we have none. And think of this, 100%. In Illinois, where you have probably the dumbest of all governors, Illinois, that guy is really the business is flowing out of his state. It's terrible. It's a terrible thing that Pritzker's doing. He was the black sheep of the family. They threw him out of the business. But in Illinois, what's happened is terrible, what they're doing. And you notice they go to Illinois for safety, but that's all gerrymandered. California is gerrymandered. We should have many more seats in Congress in California. It's all gerrymandered. And we have an opportunity in Texas to pick up 5 seats. We have a really good governor, and we have good people in Texas. And I won Texas. I got the highest vote in the history of Texas, as you probably know. And we are entitled to 5 more seats.
I don't know. I have to check on that. And they expect.
Check it. Why don't you check it, Brian?
The fact checkers expect us to check everything you say on the phone.
I want you to check it.
But for 4 years, those fact checkers didn't fact check anything that was said about. We don't need to relitigate that either. But they expect fact checking.
Joe, why don't
you
check it? Okay, because I'd like you to. I got the highest vote in the history of Texas. Okay, by a lot.
Mr. President, can I ask you back to the economy and just on some of the things we've seen with the jobs report, the weakness in those numbers that came out last week? People are trying to figure out where the weakness is coming from. Part of it may be because of immigration. Now, people voted you into office because they were concerned about immigration policy in this country. But if you look at the jobs report last week, it did show a 1.7 million drop off of foreign-born workers from March to July. And
that's a great number, by the way. That's a great number because it means we're putting Americans to work.
Well, the problem is immigrants have accounted for more than half of the U.S. workforce growth over the last 3 years. And so you wonder if that gets into an issue. And I know you've spoken with farmers who have had concerns about being able to find temporary workers there.
That's right.
And I think their pleas have kind of hit you in a way where you looked at that a little differently.
Well, I think we're getting the criminals out of our country because they had an open border policy because they were fools, and they allowed people from prisons and gang members and drug dealers into our country. We're getting the criminals out of our country by the thousands, and they're taken. We have murderers. We have people that are mentally insane. They come out of insane asylums and psych wards, and they come out of places that you don't want to know about. You would not like to see it. But they dumped everybody in our country, from the Congo in Africa to all over South America. They dumped millions of people into our country that are dangerous people, and I'm getting them out. I'm working with the farmers, however, and the farmers have been great. I also got the highest vote for farmers, I think, that anybody's ever gotten. And I take care of the farmers. I love the farmers. They're a very important part of this country. And we're not going to do anything to hurt the farmers. And we're working on that. And we're going to be coming out with rules and regulations. I mean, you'll see a farmer with the same person working for him for 20 years. The person's even paying taxes and other things. And we're looking for the criminals, the people that murdered. You know, we have 11,888 people that came into our country under Biden, with our great czar, a border czar. She never called one. You know, she was a border czar. She never went to the border, and she never made one call to the Border Patrol. You know, other than that, she did a great job. But they had hundreds of people that were murderers, 11,888 murders, 50% of which murdered more than one person in our country. We've already gotten a lot of them out, and some of them are so dangerous we don't want to bring them back. We want to put them in our own prison because we don't want them coming back. But they allowed 11,888 murderers, many of which murdered more than one, into our population, and we're getting them out rapidly.
But Mr. President, I just want to hear you clearly. You're saying the people who have been here for years and who have been even paying taxes, you're going to look at them very differently, and maybe they belong here in the workforce?
I want to work with them, and in some cases, we're sending them back to their country with a pass back in legally, and we're doing things that are very difficult to do and very complex, but it works really well. We're sending them back, and then they're schooling, they're learning, they're coming in legally. We have a lot of that going on, but we're taking care of our farmers. We can't let our farmers not have anybody, these people that you can't replace them very easily. You know, people that live in the inner city are not doing that work. They're just not doing that work. And they've tried, we've tried, everybody tried. They don't do it. These people do it naturally. I said, what happens if they get it to a farmer the other day? What happens if they get a bad back? He said, they don't get a bad back, sir, because if they get a bad back, they die. I said, that's interesting, isn't it? You know, these are very, in many ways, they're very, very special people. Okay, go ahead.
No, okay. So, here we go. So you did get the highest number of votes in Texas, so that's true. But when you were talking about...
then you don't have to say anything more, Joe.
I got to say this.
No, don't say anything more. Don't qualify it by saying, I got the highest number of votes.
You did.
In the history
I'm moving
of
on. I'm moving on to your claim that revision helped Biden hurt you for the 800,000. It was in August. There was still plenty of time for voters to see that those weren't real jobs.
After the election in November, I believe it was in November something, there was a massive revision downward. The
first one, the 800,000 or 900,000, I think was in August, and then later it came out in March of 2025. It went to 598, not 818. But the original one.
Listen, 598. But there were other revisions downward from prior to the election because the numbers were rigged. Okay, and as you said, the number. Look, you take a look after the election. How many revisions downward there were? But let's get back to Texas because you said you were going to say something else. I got the highest vote in the history of Texas, a record that they say won't be beaten unless I run again.
Are you going to run again? The
No,
Constitution.
probably not.
Okay.
Probably not.
And you're not going to fire Jay Powell. We'll go all talk about all the stuff that.
Hey, Becky, I'd like to run. I have the best poll numbers I've ever had. You know why? Because people love the tariffs, and they love the trade deal, and they love that countries, and they love that foreign countries aren't ripping us off anymore. For years, they ripped us off, friend and foe. And the friend was worse.
Overall poll numbers, you don't have the best you ever had. In overall poll numbers, you do. I cited one of those.
I have the best. I have the best poll numbers I've ever had.
Among
I
Republicans.
have poll numbers where I'm 71%. I have the best poll numbers. Look,
those are among Republicans. You know you've got.
No. Among Republicans, I'm at 94 and 95%. No, I'm talking about generally. I have the. Let me put it this way: there was a gentleman on Harry Emden yesterday on CNN, and he went crazy over how well Trump was doing. Now, you don't put that on because I think CBS is a shade. Actually, CNN's a shade better than NBC. I think NBC is probably the worst of them all. But if you check CNN tomorrow, watch Harry Emden, and you'll see about the numbers. But that's okay. We have to defend ourselves, Joe.
I know, but there are other. They can cite. There's your haters cite polls that have you down in the 30s, Mr. President. And,
yeah, but they're fake polls, Joe. I had a lot of fake polls. You also have me in the 70s. I have fake polls. Fox gives me terrible polls all the time. They do nothing, but I've never had a good poll with Fox. And then I win an election and I go through the roof. Because look, I won every swing state. Did I not? I won every swing state. Andrew, I won the popular vote by millions of votes. Even though they tried like hell to cheat, I won by millions of votes. I won the counties and all of the counties. I won 2,750 to 502. And I won the election in a landslide. And obviously that's only, we're only 6 months in, but my poll numbers are better now, much better than during the election. And now part of that is because the Democrat Party is self-destructing. I mean, when you have low IQ people like Crockett, I wonder if she's in a relationship to the late, great Davy Crockett, who was a great gentleman. I wonder if she's got any relationship to Davy Crockett, the great old Davy Crockett. But you have this woman Crockett. She's a very low IQ person. Somebody said the other day, she's one of the leaders of the party. I said, you got to be kidding. The Democrats are lost. They have Trump derangement syndrome so bad that they can't walk. They can't talk. They don't know where they're going. Schumer is finished. Schumer, look, I watched him the other day. He's lost all of his confidence.
40% of the country has. So you're never going to get above 60 in any poll, and it's because 40% have TDS, and we know that. Mr. President, we used to do this every Tuesday. It was called Trump Tuesday. Maybe we can start. This is going to be the start of something again. But we appreciate all your time today, and hope to be able to continue this discussion on all these different issues in the not too distant future, if we could.
Joe, could I finish one thing?
Yes.
1 year ago, 1 year ago, our country was dead. Now we have the hottest country anywhere in the world by far. And that was told to me by every leader of NATO, which they do whatever I want. That was told to me by the King of Saudi Arabia, by the leaders of UAE, by the leader of Qatar, by many. We were a dead country 1 year ago. Today, we're the hottest country anywhere in the world, and I'm very happy to help.
Mr. President, once again, thank you. Thanks for your time.
Thank you very much. Thank you.
Okay, you're welcome. We'll see you soon. Thank you.
Okay, when we come back, a special interview with former Treasury Secretary.
I don't know what we just listened to for the past 30 minutes. I mean, that was, I really don't know what the heck we just listened to. Trump had his own issues in the interview, but why Joe Kernan interrupted him on every single sentence. I mean, like it was almost unbearable to listen. It was just not a good interview, dude. Like, forget whatever Trump said. Like, as an interviewer, as a host, there's a certain composure you have to have. He was getting irritated. It's like, dude, why are you getting irritated? You're the host. You're supposed to be getting the answers out of him. It's almost like he wanted to impose Joe Kernan's opinion, which no one cares about. We care about Trump's opinion because he's the president. and the inflection of his opinion within the way he's asking questions. No one likes that from an interviewer, especially if it's a business network where you're not supposed to be. Now, I know Joe's been doing this for years, but like, this was not a good interview. This was just not a good one at a lot of levels. So we got some quotes from, I'll just read off the quotes real quick. Trump says he will probably not run again. Trump says Trump says Scott Bessent will not be a Fed chair candidate. Trump says JP Morgan discriminated against him. Trump says he's putting out an executive order to get banks to stop discriminating against conservatives. Trump says he's going to meet with China's president before the end of the year. Trump said he will raise tariffs on India soon over Russia. And he was pretty hostile against India in this interview, saying that they're the highest tariff nation. He said he's not worried about oil prices. He said we'll be putting an initially small tariff on pharma. And then he says we're going to be announcing something around semiconductors and chips in the next week. So you didn't really get anything new from this. I mean, I didn't get anything new from this. He doesn't like India tariffs. We know that. Bessent was never going to be the Fed chair. We know that. He's not going to run in 2028, probably. I think we knew that. And then it was him bragging about winning every single vote in Texas. And part of that is because the questions, I don't think, were really specific enough. As an interviewer, you have to ask the right questions to get the right answers. And I think they just threw a hodgepodge of questions at him and then interrupted him every time he tried to talk. And that led him to go on these rants. And I don't know, just wasn't the best interview. And we didn't get a lot out of that. So woke up early to go live for that. It is now 8:45. So we are actually starting the market open as we usually do at 8:45 every morning. But yeah, I don't think we got much from that interview. All right. Yeah, I by the way, I don't know who this Crockett person is that he's talking. Who the heck is Davy Crockett? I have no idea. Oh, former U.S. representative. Okay, I didn't know any. Like at some point in the interview, he lost me. I didn't know what he was talking about. So, yeah. Towards the end, I was like, okay, whatever. I don't know what's going on. But there you go. Yeah, he said Jasmine Crockett is related to Davy Crockett. It was a bit weird towards the end. Anyway, let's get into what we've got going on. Folks, we are starting the market open and we are starting it looking at Palantir at all-time highs, $171.80. I barely slept last night. My sleep score on Fitbit is 68. I think I slept for about 3 hours. It has been a pretty wild 24 hours that is hard to comprehend into words, but I think we will do our best to try to explain what's going on with Palantir today. I think before we get started, I would just like to know everyone's like raw emotions and feelings. You can use one word, you can use a sentence. Just what are you feeling based on that quarter? Because it was quite emotional to see how they did it. $1 billion in revenue for the first time ever in Palantir's history of being a public company. And as a result, the market is basically waking up and saying, hey, it's really, really hard to ignore this. Even though the valuation is up there, almost a $400 billion market cap, it is just hard to ignore what we saw. And what did you see? $1 billion in revenues, up almost 50% year over year, 68% U.S. commercial revenue growth, government revenue growth up 49%, 850 customers, guidance raised to 45% year over year growth. They are the only software company on the planet that's growing at 45% top line and that has 46% adjusted operating margins on the bottom line. That's up 24% year over year. They closed 157 deals of at least $1 million. The rule of 40 is now 94%, and they have $6 billion in cash. On CNBC yesterday, Karp's statement was, just tell the haters, read them and weep. Read them and weep. I mean, dude, it was just one of those quarters. We were talking about $1 billion, right? On the Future show, we were talking about it could happen. I made a post over the weekend saying I wouldn't be surprised if it happened. On the weekly, Palantir Weekly, Amir, Arnie, all of us were like, like $1 billion would only be 70 million above what they guided for. Although we don't want to put the pressure on them to get to $1 billion, it's not incomprehensible that they could get it. But to actually see it yesterday, I mean, it is just remarkable. It is just remarkable. I bought more shares this morning at 169.32. The reason I bought more shares is very simple. Everything I saw in this quarter was a green flag, and I believe the trajectory of growth that they are going to be guiding for because I still think they're sandbagging their guidance for 2025. Going into 2026, 2027, and 2028 will be upwards of 45 to 50%. And when you have a company that's that much of a unicorn that can actually grow at that scale with the types of margins they have, you know, we were talking a lot about valuation yesterday on how much does valuation matter? And obviously valuation matters. Since 45.50, I've been saying valuation matters. And wrongly, I have not been adding since 45.50 as aggressively as I should have been adding, especially with all the conviction I have, which is why I did not make that mistake on Robinhood, right? You got to learn from your mistakes as an investor. When you find a generation, if you're lucky enough and privileged enough to find a generational company, I think the biggest lesson I've learned over the past 3 years is you double down, because it's so freaking hard to find them. And with Palantir, I should have doubled down more. Didn't, made that mistake, started doubling down on Robinhood because I believe it is also a generational company. But when you get results like this, I mean, at some point you got to bite the bullet and say, do I want to own more of the stock in the future? And if the answer to that question is yes, and you can mitigate your cost basis using covered calls and sort of option strategies to at least be able to generate some income, even if the shares were to come down, which they could, because obviously the share price is elevated at a high level. And I'm buying this knowing that if this falls 10%, I can't be mad at anyone but myself. Like, I can't blame anybody because obviously the stock is up a lot. That is sort of how I'm rationalizing it. And when I see these types of numbers, it is very, very hard to not continue to be bullish and say this might be the core conviction that I want to even more be allocated to going into, you know, the next 10 years. It was just a quarter that was flawless on many levels. The one critique I have is international growth, but I think that is more so a function of Europe and not really a function of Palantir's lack of execution. And I think that will change over time. Here was Karp's message to individual shareholders on the call yesterday night.
Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Maybe stop talking to all the haters. They're suffering. You know, don't tell them about how important the ride has been, how exciting it's been, how much you've enjoyed the ride, how much fun it is to send to write little emails to analysts that spent 20 years learning about software and have been wrong about every quarter. Maybe just, you know, just don't talk to them. There's some suffering going on. But for the rest of us, we are enjoying this time and we're enjoying it with you. And our performance and your support of it is both important because you deserve it. And we are grateful that you gave it to us, especially, and I definitely have not forgotten, there would have been no DPO. We would not have gone from our low share price to now. We would not have many of the clients we have, and we wouldn't have some of the pride we have without you. But I would also say our ability to win while sticking by what we believe is important for the world, because we live in a world where people are purveying half-truths, partial truths. Palantir gets attacked just because we help make this country even better, because we support the values, because we defend it. And, you know, us being able to win while having an opinion does have an impact on the world, if only because the people who think we are wrong or not good have to be a little jealous and suffer. And you know what? That's a good thing, too. So I'm very, very proud of this quarter. And by the way, obviously, to all the Palantirians who made this happen, you know, behind the scenes, we are just, to use Sham's term, grinding. Every day and all the time on our most important things we're working on. And, you know, we've had deployments here that because of their criticality, our people are working around the clock for half a month, around the clock on a cycle. And they're really proud to do that. And they have changed the arc of history. And your support inside the company and outside the company. And also, we're asking people to work in an environment when they come in here that is very different than anything they've ever worked on. You know, they most of them come from university where they've just been engaged in platitudes. Now it's frontline where things matter, and we do things very differently than anyone else. And the fact that Palantirians have aligned to do this, to work as a phalanx in the service of what I view as a higher purpose, and I think many agree with me, is an enormous accomplishment. And, you know, I speak for all of us who like work with these people. This is a very special environment, and I'm super proud to somehow ended up being your leader. So thank you.
Thank you. That concludes Q&A for today's call.
This is actually happening right now. And it's one of those things where it's like so many times in life, you embark on the adventure and the journey of trying to accomplish something. And Palantir has been on this journey for the past 20 years. All of us as investors have not literally built the company, but we have embarked on the journey of investing in the company. And as you can tell right there, Karp is pretty grateful for those that believed when no one believed. And so it feels like we are building this with Palantir, even though we're not literally building the company every day, but obviously our dollars and our capital is what's funding the company. And it's just incredible to be on the ride of a lifetime with this company. And what makes it more special than many other journeys that I've been on in my life, personally and professionally, and I think the same is for many other people here, is that this was a story that was not supposed to play out the way it's playing out. If you were there in 2022 and you dealt with the bear cases over and over and over again every day, the number one argument was that this company should not be a company that is eventually going to win. This company is not going to be able to scale. They're not going to be able to grow. They're not going to be able to be profitable. Karp is crazy. He doesn't understand business. He's too obsessed with philosophy. This. I mean, like millions of critiques of how this story was supposed to play out. And it went completely the opposite of what the mainstream media tried to convince the world what would happen to Palantir, because of retail saying, no, there's something special here. There's something special here. And part of the reason there's something special is because of Chad's comment right there. You guys are part of the soul of the company. Chad is one of the employees that a lot of you guys know publicly. He's been on my channel many times talking about Palantir. I mean, when you have employees that are as dedicated and motivated, like a Chad, who has a lot of busy things to do all day, but still he takes the time to answer our questions on Twitter about like, hey, what exactly is the ontology? Because he cares so much about people actually understanding what they're doing, because he was at a prior company that implemented Palantir. He saw how transformational it was, and then he realized this is truly going to be the future. It just goes to show you how exciting this journey can become. This is what he wrote this morning. The Q2 results outside of the share price are proof of three things in my view. Putting your customers' outcomes first is truly the best way to align incentives. AI is leverage for human agency, not replacing it. And the power of LLMs paired with the ontology is what powers number two, human plus AI teaming. AI is human leverage. I think one of the big motifs or ideas that I got from this earnings is the idea that Palantir is now embarking on the journey to communicate to the rest of the world that it is not about replacing human beings, which is what we're seeing through a lot of the AI doomerism, but it's about giving them agency. And that is a monumental change for human productivity, for margin growth, for GDP growth, and overall enterprise value. This is what Shyam Sankar, CTO, had to say yesterday about the idea of empowering humans versus replacing them.
With the factory worker in the fire cell, and the vibe could not be more different. What we observe is that AI is giving the American worker superpowers. Look at the nurses in the ICU who have more time to spend with their patients, less time munging around collecting the clinical notes to understand what care to deliver. Or the factory workers in the submarine industrial base who get back 3 days of quoting a part to actually spend time solving problems in production. And perhaps the use case that I'm most excited about around Panasonic Energy, where make electric vehicle batteries, actually being able to develop AI to train their workers to manage this exquisite high-end Japanese technology, where the background of the workers is casinos. You know, and I think this is job expanding. It's empowering. To Alex's point, it's really pro. That's a big reason why we've leaned into creating the American Tech Fellowship. Our lived experience is that.
Let me just, here we go.
Our lived experience is that.
Okay, I think that's a little bit more of a problem with the video versus my internet. Let me try one more time. It's like 20 seconds left on that video.
The American Tech Fellowship. Our lived experience is that some of those creative AI applications are coming from the blue-collar worker, the autodidact that has a little bit of self-taught knowledge, not the classically trained computer scientist. Not just using AI, but more importantly, building AI applications that are changing their business. We want to find these people. We want to empower them, credential them, put them through the training, and unleash them on the American economy.
So look, that was a big deal. And the reason that was a big deal is because I think one of the new narratives around AI is going to be, and this is particularly important, I think Palantir is kind of front running what a lot of governments are going to be talking about over the coming like 10 years, is what is the role of AI in regards to enhancing human beings' lives. I mean, you cannot have an economy where everyone's getting rich off investing off NVIDIA and Palantir, and then regular blue-collar workers are losing their jobs because of AI. That is not going to be a world where things are fine and dandy. Like, you're not going to be able to have a few people being that rich off AI and then everyone else is losing their job. Like, things are going to go pretty bad in that world. And, you know, Karp has talked about this many times before in the past as well. One of the first extensions they had with Stellantis back in 2022, Karp was talking about the idea of AI on the factory floor empowering the blue collar workers that are building the cars versus replacing them is very, very important. So I think one of the key themes we got from this earnings is Palantir is now going to start saying, hey, if you are an enterprise that wants to create your unit economics to be better than what they are today, Palantir-like unit economics, which are the numbers you're seeing right there on the screen, then you have to adopt AI, but you also have to understand how you can enhance AI to make sure your workers are more productive. I mean, the most obvious use case that Sham talked about were nurses. Like, nurses go through a very, very tough job. I mean, when I was with my grandfather, when he was basically on his deathbed back in December of 2022, I saw how much the nurses, I mean, I was just so unbelievably grateful to those nurses based on how they were cleaning up after him, giving him medicine on time, constantly being there whenever he needed them. Like, you know, it's like if I had all the money in the world, I would want to give like $1 million to those nurses, given how much they were helping. I mean, you just feel so grateful that those people take the time out of their day to help people that are nearing the end of their lives. And you think, what could AI do to make their lives easier, better, more enjoyable, to deal with the experiences, to not be constantly flipping through Excel spreadsheets on their scheduling? All of that stuff is going to be productivity enhancing for the hospital, because at the end of the day, the hospital is a business and they need to make sure that to offer the right care, they can have productivity at scale. And it's going to be better for the patients themselves. And so healthcare, at its very core, is another vertical that Palantir can jump into. And I think Sham mentioned that a healthcare company did a pilot with them, and a month later, they signed an $88 million contract. Like, the level of growth I think we are going to see over the coming decade on Palantir. And I say decade because that is what I think is very exciting about this. If the share price is able to maintain its momentum, it's because of continued growth, and that continued growth will probably span the next 5 to 10 years. And Palantir, again, only has 850 customers. So when you think, or when I think of like the ability for them to scale, when I think of them becoming a multi-trillion-dollar company, I think of continued growth for the next decade. And we have just never seen a company outside of NVIDIA be able to grow at these levels. Now, obviously, NVIDIA is a whole different animal here, but this is the first type of quarter that Palantir has set up to wake the world up, to say, no, we are here. This is our moment. This is our time. We are not going anywhere. And you either pay attention or you don't pay attention, but it's going to happen. And as a result, I think the market is waking up to that. All of the upgrades this morning: Wedbush, 160 to 200, CFRA, 152 to 199, Piper Sandler, 170 to 182, B of A, 150 to 180, DA Davidson, 115 to 170, Bard, 100 to 170, Mizuho, 135 to 160, Deutsche Bank, 80 to 160, Citibank, 115 to 158, Cantor Fitzgerald, 110 to 155, Morgan Stanley, 98 to 155. Our boy Rishi gave us from 40 to 45. So really appreciate Rishi giving us that extra 12.5% on the price target. I mean, like, it truly means the world. I'm unbelievably grateful for him as an analyst covering the story. So thank you to Rishi. But as a result, you can see the price targets on the street waking up and just saying, hey, this is a real thing. This is a real thing, and it's not going anywhere. And as a result, it's just very exciting. It's just very, 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 very exciting to be part of the story. It's just like, I don't even know what to say, dude. I can't imagine how the employees are feeling seeing this company become the company that they always thought it could become. I mean, there are employees. Palantir is one of the lowest turnover rates in the entire industry. So Palantir, I've met people that have been working at the company for 18 years. When I was at the last AIPCon, I met someone who's there for literally 18. I mean, like, that's outside of the executive team, to have an employee there for 18 years. It's a big deal, dude. You don't see that often in technology companies, but that's what you got with a company like Palantir. So I think these numbers were incredible. It's hard to find any critique. Over the next coming days, I'll try to go deeper and see what exactly is the critique. The only critique I think people can say is this comment right here. It's nice, but $1 billion quarter revenue on almost $400 billion market cap. I get it. There's not much I can say to the fact that, yes, Palantir is doing $1 billion in revenue and the market capitalization is $400 billion, but there really wasn't much I could say when Palantir was doing $700 million or $650 million a quarter and the market cap was $200 billion. So then it begs the question, like, what does it mean for a market capitalization to get that high, and what exactly are you paying for? And I think, quite frankly, what you're paying for is value. You're paying for something real. You're paying for a story that's playing out in front of us and a story that doesn't look like it's going to decline. And again, mind you, as much as we talk about all the qualitative arguments and reasons for why Palantir is gaining its momentum, if there was no growth, this would not be happening. It's just that simple. If there was no growth, this wouldn't be happening. Same thing with Robinhood, right? As great of a company as it is, Robinhood's growing revenues 45%. If they were not growing, they would not be getting the multiple. So at its core, the multiple is because of growth. It's just the multiple is very extreme. And the extremity of the multiple is not only because of growth, it's because of the potential of future growth and the unicornness of the story. And if you don't understand that, you don't understand that. You don't need to understand that. Quite frankly, you may not ever want to touch this stock or buy it. I was talking to some people last night. They were like, look, I missed it. I'm never going to get back in. As much as I love the company, I love the quarter, I'm just never going to be able to get the stock. And that's okay. Some people have that story with stocks, and some people miss things and they just never get back into the story, and it is what it is. Some people always think it's expensive. But for those that want to be part of the story long-term, eventually you have to DCA. Is today the day? I don't know. If Trump says something stupid in September and we crash back down to 140, is that the good day to buy? I don't know. But it's one of those things where as an investor, you have to make a personal decision on what you think about in terms of increasing allocation or beginning allocation. The beautiful thing about this story is most of us began allocating before it happened. It is just very rare, guys, for retail to find the gem. We got venture capital-like returns. This is what, at this point, more than a 30x from the lows. Even if you didn't get the exact lows, it's a 10x, 15x, 20, even if it's a 5x, those are VC returns. VCs spend decades trying to find the one company that'll return 10 or 20x. We got to find that because of YouTube, Twitter, Substack articles, all of us coming together, creating a weekly podcast discussing this story. And that is why it's so exciting. That is why it is so exciting. So when the market opens in about 25 minutes, we're going to see what happens to the stock. It's going to open up at about 400 billion. Again, when every analyst upgrades it across the board, it's very hard to deny the story. I think we've been talking a lot about valuations, and I don't want to sound like the guy that says valuation doesn't matter, but for some generational companies that can put up the growth, it is very hard to be strung up on just a price to sales or PE, because that misses the whole point. And with Palantir, it's just never been about that. It's been about a deeper story. It's been through a lens of viewing them via domination versus a lens of what the price to earnings will be. And the price to earnings matters, but if the company is dominating, the price to earnings starts to matter a little bit less if they actually have the characteristics that makes them one of the most dominant companies on the planet. And that's what we're seeing with Palantir. That's what we're seeing with Palantir. So congrats to everybody. We'll talk about it more throughout the entire show. I barely got any sleep last night. My sleep score is a 68. I slept like 3 hours. I was at the gym after the earnings because I had too much energy and I had to run, and I was mouthing the most gangster lyrics. I was talking about killing people and selling drugs and all that stuff while I was on the treadmill. There were 2 girls on the left and the right side of me. They must have been so annoyed because I was just at the hand movements, everything. I was freaking going off. But it was one of those energetic runs because I'm like, wait a second. They just did $1 billion in revenue in Q2. They just did $1 billion in revenue in 90 days in Q2. And I was looking like this guy. Apparently this movie has Brad Pitt in it. I don't know what the movie is called, but I feel like I have to watch this movie now. But this was literally me, guys. When I mean this was me, just imagine this guy's probably listening to I don't know, some rock band. I was listening to heavy gangster lyrics, pretty stuff that stuff that I'd probably never engage in real life, but the hand movements and everything. And I could just tell the 2 girls next to me were like, what is this guy on? Is this guy freaking why is he so excited? He's just at the gym on the treadmill, but I was in it yesterday. So that was my form of releasing some of the energy. It was incredible, dude. It was incredible. And what can I say? The company changed my life. The company changed all of our lives as a community. We are all regular human beings. We are all not super fancy executives at Fortune 500 companies. I don't think most of us went to the Ivy League institutions. I don't think all of us have an inheritance from our family's massive oil business. We are all regular people working jobs, trying to make a living, trying to be able to build something on the side if you have some side hustles, and whatever little income I had back in 2022, just dumped it into this name, assuming that something would work out, and it's worked out. And you're unbelievably grateful that it's worked out, and the market has started to wake up and recognize how much potential there is being early to that story for all of us is just, it doesn't happen often. And it's just very exciting to be part of this entire journey. So there you go. That's what we got. We'll get into more coverage later throughout the show. Let's see some of the other names that are moving in the pre-markets and all the other macro stories. But just an incredible day for Palantir. I think this stock is going to be able to hold 170 when the market opens. We'll see what happens. Maybe there's some selling pressure coming in. But after that type of quarter, it's hard to sell. Maybe it's hard to really buy. Agreed. Maybe it's very hard to buy. But it's also really freaking hard to sell. And as a result, I think you're going to have a lot of people that continue to hold this name because they just, I mean, you don't sell what you think could be a multi-trillion-dollar company that just grew 45% on the top and the bottom line. It's very hard. It's very hard. CNBC is talking about Palantir. Let's go to them real quick, and then we will move on from there.
At risk of saying the obvious, this is a perfect time for a revolution in the United States of America. We are very, very bullish on America. We have some really crucial and important clients internationally, large clients, commercial clients in Europe, and also government clients outside of America that we're proud of. But this is an American revolution. It's being led by ontology and chips, and to also to some extent large language model providers.
This is a stock, Jim, that came in as the best performer in the S&P, and that will not change this morning.
No, well, look, there's still a lot of analysts who are trying to deal with the fact that it was much better than you ever realized. People had to sell on the way. By the way, I wish, the international's not that strong. That was one of the, but that doesn't really matter because domestic is doing incredibly well. And they do have some great examples. Ryan Taylor, I'm not familiar with his work, Chief Revenue Officer, of how well, when you bring them in, the return. It's very, very fast. And don't forget, they're really focused on the philosophical study of being concerned with the nature of existence and the category of things and their relationship.
Even Kramer this morning started tweeting that I told you guys Palantir was going to go to 150 and 200. You got Kramer being Kramer. Kramer's always treated Palantir as a meme stock, and now he's trying to kind of flip the narrative, even though he still thinks it's a meme stock. So, even the Kramers of the world that really at $6, if you were there back in May of 2022, he said, and I will never forget this quote, Palantir is not a real business. Like, that was the quote. And, at $6, that was his argument. And literally the month after, they had GAAP profitability, and then they went off. And then, of course, Kramer then changes his mind. But like, even all the CNBC analysts, they can't give anything but praise. It's hard to not recognize the value of this quarter. And as a result, you are seeing a lot of momentum. So there you go. The coverage on CNBC throughout today is likely going to be lots of praise, but we're going to see the talking heads talk about is the valuation being aggressive, even with that praise. However, I think the valuation is aggressive for a reason. And even based on that comment that Kramer was citing right now about Ryan Taylor, about different hospitals that are getting so much value from the software. If you're paying for value, that's what Palantir is delivering. And the market's ready to pay a pretty big multiple for that value. All right, so what else do we have going on? AMD, they will have earnings today after the bell. I will be covering it. Again, I don't own AMD personally, but I have it inside of my stock draft ETF. We'll update that stock draft when the market opens and see what's going on there. In terms of AMD, I don't really know what to expect. It's had a massive run going into earnings. I think it should do very well. Obviously, up from 70 to 177 is good. I think Lisa Su's got to deliver the growth. She doesn't have to deliver NVIDIA type of growth, but people are talking about AMD becoming a $1 trillion company based on the thesis around inference, which I think is very possible. The question now is, are they going to put up the numbers to match that reality? Same question we had on Palantir yesterday, and today we'll find out. So as long as they can really put up meaningful numbers, then I think we will see acceleration in the share price, because obviously people are thinking it could be a little bit of a mini NVIDIA here, but that's what they got to put up. And so we'll see what happens with AMD. In terms of HIMS, dude, I have not gone through this quarter at all. Can someone tell me why the hell this thing is down 10%? Like, I have the only thing I saw on HIMS was that they missed revenue guidance quarter over, or they missed they like declined Q over Q, and they missed the guidance against the street expectations. I don't know, bro. Like, as much as I think HIMS is cool and it's an amazing company, like, you can't miss guidance, or you can't miss the expectations on the street. That's like not a good thing. Not a thesis breaker or anything, but this is supposed to be a growth stock. This is one of the best economies we have for, this bull market. Like, why are they missing against expectations? And maybe there's a legit reason. I did not go through the earnings. I didn't even look at the analyst reports or anything. I've not read into any of it. I don't know if 10% is appropriate. I don't know if that's going to rebound back to 65, but missing estimates is never a good thing. And so hopefully, we will see that get back to reaccelerating of growth. But Yeah, they bought a company called Zava for $250 million or something. I mean, I don't know. I guess the Novo stuff, apparently none of the analysts asked about Novo either, which was very confusing to me. I saw that the analysts didn't ask about that, which I thought was the most important thing to ask about. So this was a weird one. I'm going to have to go through the quarter and see exactly what happened. Again, Palantir was kind of my main focus yesterday, but I guess it's down based on the idea that you missed guidance, and as a result of missing it, that is going to create some problems. We streamed the Trump interview on Cnbc this morning, so if you rewind by about 40 minutes, you'll see the Trump interview. And it wasn't really a good interview, but you can watch what Trump had to say. So yeah, look, I'm not selling my hymns, but I mean, I'm just not the most excited about it. It's kind of one of those positions that's just there, and it is what it is, and it'll be there. I do think they have a really good future trajectory, but when you miss revenue estimates, it does get a little annoying. Now, granted, it's one quarter. I'm not freaking out over one quarter. I don't think any hymn shareholders should freak out about one quarter. I've got to dive deeper into the quarter, but it is a bit weird, especially when, you're a growth company. Now, granted, HIMS has a crappy multiple as a growth company. And, every HIMS bull says we should be expanding the multiple, like a Palantir multiple or a Robinhood multiple or a Rocket Lab multiple. But then if you miss on estimates, like, you can't do that. It's hard to expand the multiple when you miss on the estimates, right? So that is one thing that HIMS definitely has to get better in the next quarter, and definitely towards the end of the year, for this to have some more momentum. So I will go through the quarter a little bit later tonight, and then we'll go deeper and see exactly what they've got going on. Now, Coinbase, talking about a company that's missing on estimates. Not only did Coinbase suck in Q2 in terms of like their actual tangible results, like crypto volumes, everything, it just was not good. They announced $2 billion of convertible notes this morning and diluted. Coinbase plans to raise $2 billion in convertible notes, $1 billion due in 2029, $1 billion due in 2032 via private placement to qualified buyers. Buyers can offer $150 million more of each. Proceeds will fund capped call deals and general use. That's why Coinbase is down 4%. So Coin is diluting and Hood is buying back stock. This is why I continue buying Hood. This is why I bought Palantir this morning. Like, when you see the bullshit that a lot of other companies in these niches are doing, or in their competitor niches, you start to have more value for the companies that are actually the opposite. Coinbase is diluting when I don't know why the hell they're diluting. They have plenty of cash. Robinhood's giving shareholders back the money by buying back 700 million shares at $34 over the past year, which now the share price is up 3x since that. And Coinbase is doing no buybacks, from my understanding. They're using shareholders as liquidity. I mean, it's just not the best argument here, right? So when you look at what a Snowflake's doing in regards of stock-based compensation as a percentage of revenue of being almost 45%, and then Palantir's at 15%, like you see +1 to Palantir. When you see Coinbase offering money to the market with this convertible debt just to be able to raise more capital to do whatever they need to do, when they should have enough cash or should have enough organic cash flow to do it. And then you see Robinhood saying, hey, if we buy a company, we're going to buy back the same amount of shares of the company we buy back, so it's net neutral on shareholders. Point to Robinhood. Like, it's very, very hard to not double down on some of the companies that continually are becoming shareholder friendly by either putting up the growth or returning capital back. When you look at some of the competitors in their niche, Palantir right here, 172 in the pre-markets, up 7%. Robinhood right here, 105.94. So yeah, as a result, not that excited about what Coin is doing. And like, raising capital when you're overvalued should be a good thing. I agree. Like, obviously when you're super expensive, you should be able to raise capital, but Robinhood is super expensive, and I don't see them putting out any convertible notes, which, even if it's not dilution, taking on that type of debt, which is not shareholder friendly, unless they really take that money and do something good with it, which I don't know. Do you trust Brian Armstrong to really take $2 billion and make something good out of it to enhance shareholder value for Coinbase? Maybe. And I'm not saying Coinbase is a bad company. I love Coinbase. I love Brian Armstrong. I'm just saying it's those types of things that make you look at the competitors in their niche that are much more diversified businesses, like a Hood, that are not doing this type of stuff, that are giving money back to shareholders. And you just get more excited, even when they could be diluting, because obviously Robinhood's expensive right here, but they're not. And so, yeah, definitely, I think that is not the best for Coinbase. But again, Coinbase down 4% on that headline. They'll probably recover. It's not that big of a deal. It just puts into context what some of these companies are doing versus what other companies don't have to do. Rocket Lab right here, that's up about 1.7%. You got Apple at 203, Nvidia at 179. Okay, so one of the reasons why Nvidia is down in the pre-markets is because Trump said he was going to be announcing something new on semiconductors over the next week. And it looks like those semiconductor not tariffs, but regulations that he's putting out, we're going to see some different type of spin. And as a result, that's why NVIDIA and AMD are getting hit a little bit in the pre-markets. Again, I don't think anything Trump can announce or the US can announce in the context of semiconductors is going to be bad for NVIDIA or AMD because the growth and the demand right there is just too strong. But you might see a little bit of pain in the pre-markets to kind of see what that ends up playing out for. Now, drone stocks, we talked about this 2 weeks ago when Pete Hegseth came out with an announcement on drones and how the United States was going to invest a lot more in them. Well, they put out a new video recently, and basically that new video, not going to play the video, but the video talks about all the efforts they need to do when it comes to drone safety. As you can see right there, you have a bunch of companies, ONDS, Red Cat, Innovix, Katos, UMAC, all of them that could potentially benefit from these new purchase agreements from the United States. Nothing final yet, but that's what they announced. All the drone stocks you can see in the pre-market are green. UMAC up 4%, Red Cat up 5%, D-Pro up 4%, ONDS up 6%, Archer is actually up 1.8%, and then Katos is up 5% as well. So you got a lot of momentum there from the defense side as well when it comes to growth stocks, and you're getting some more arguments that defense spending is going to go up, which is obviously probably a good thing in the long term. So that's what we have in the context of defense. We talked about Palantir and we talked about some of this Coinbase Robinhood stuff. We do have some upgrades across the street as well, which are really important. SoFi did get an upgrade this morning from William Blair. They are pretty damn bullish on those results, and they're factoring in the dilution and saying, you know what, 1.7 billion they raised, not that big of a deal. We'll talk about Lemonade earnings in a second as well. So William Blair says, hey, we are continuing to feel that this is a strong buy. The $1.73 billion capital raise supports growth and potential accretive M&A, excess demand across the product suite, and new offerings, including crypto, provide visibility towards 20% plus 2026 revenue growth. And they are bullish on the overall margin enhancement that SoFi can have over the long term with an outperform rating. Coinbase is down pre-market because they issued $2 billion of convertible notes. So that debt offering is why they're down 4%. And that's why they are red. So that's what you got on Coinbase there. On top of that, you also had a pretty strong upgrade. We talked about all the ones on Palantir, but also for Oracle. So you got Oracle at $295. This looks like a street high price target from Bank of America. And essentially, analysts are seeing the ramping AI CapEx cycle boosting Oracle sentiment. They're citing cloud backlog and infrastructure demand that is really not slowing down. They're implying a 17% upside on this price target, particularly because Microsoft guided for over $30 billion of fiscal one CapEx in Q1 2026, and Meta raising their full year CapEx to $69 billion. All of that they're saying is going to be value creative for Oracle as well, which is going to be important. So you've got that momentum coming from Oracle, and you're seeing the price targets get raised. You know, August is supposed to be one of those months that kind of sucks. We have recovered, folks, pretty much everything we lost on Friday, August 1st. So we were down about 1.6%. The S&P 500 right here, based on what we got yesterday, is up almost literally 1.67%. And as a result, whatever dip that we had on Friday brought us down to what, 618 on the S&P. We're right back to 631. The resiliency of this market, it is very, very hard to ignore. And I think that's why we are continuously seeing a bid come into a market that is putting up some good earnings. Tesla, Elon is getting sued this morning over robotaxi claims. Reuters reports Elon Musk and Tesla sued by shareholders who accused them of securities fraud for concealing the significant risk that the company's self-driving vehicles, including the robotaxi, were dangerous. We don't have a ton of details on exactly what this lawsuit looks like. I think it's a nothing burger. I mean, you should probably expect a lot more lawsuits in the future for Tesla. I mean, when they really unveil robotaxi to the entire world, they will probably get sued like every other week. Like, it's inevitable. This stuff is going to happen. I think the lawsuits eventually will get ironed out by regulatory frameworks. Tesla probably also has a pretty, decent legal team that has there's a lot of things you have to sign in terms of terms and agreements when you deal with FSD or robotaxi, and it basically absolves Tesla of all the guilt. So whatever lawsuits that is out there, people can sue them all they want and make accusations, but will they actually win in those lawsuits? Very hard to imagine. So yeah, I think that's a nothing burger. Stock's down pre-market. Same thing with Coinbase. I don't think the debt offering is like that big of a deal. It's a nothing burger long term. It just goes to show what companies have the unit economics that don't have to take on dilution or don't have to bring on massive debt offerings via convertible notes, especially if they're not that friendly to shareholders, unless you find out what they're going to do with the cash, yeah, the market's going to react negatively in the short term. So the comparison to companies that don't need to do that, like a Palantir, like a Hood, I think only bolsters their argument. But overall, Coinbase news probably a nothing burger, and then Tesla news as well, likely not that big of a deal. Having said that, let's get into the earnings that we have this morning. So Navitas, I don't know if they had earnings this morning, but that stock's down 20%. Again, when you play with small caps, you're going to get some of this pain. So likely if they did have earnings, they probably missed on earnings, and that's why the stock is down 20%. But you are seeing some pain right there. The big company that had earnings today that I know a lot of people care about is Lemonade. So EPS up 26% year over year, revenues up 35% year over year. They are losing 60 cents a share, but they beat by 25%. And then 164 versus 160 million, they beat by 2% on revenue. Lemonade stock, I believe, is up 8%. It is up 7.3% in the pre-markets. Look, again, I think Lemonade's a great company. I'm not that excited about their overall growth story. Like the main pitch I've heard is it's insurance-based AI or AI-based insurance. And if you're investing in AI as like the moat, I think there's so many other companies to invest in. Having said that, they're growing fast. Eventually, they will be profitable. And if you really believe in the insurance market for Lemonade, I don't think it's like some massive, super asymmetric opportunity. But is there alpha there? Sure. I mean, they're growing top line at 35%. If they start increasing their operating leverage and get profitable, which hopefully is sooner than later, I don't know exactly when management guided to be profitable, but like that would really make the story more compelling to me. Then you'll probably see some momentum. So it's good, right? This is another retail stock. There's a big retail community around it. And so if they're excited about the name, these are some numbers, hopefully, that are proving that, this company can continue to expand. I'm just like, if the pitch is AI insurance, like if AI is the only argument, there's a lot of other, there's a company called Palantir that's doing some amazing stuff when it comes to AI. The argument will be, though, wait, look at Palantir's valuation, look at Lemonade's valuation. And my retort will be, well, look at Palantir's value to society versus Lemonade's value to society. Right. So it's like that's my own personal belief. Or NVIDIA, right? I would rather invest in NVIDIA than Lemonade if we're just talking about AI as the moat. A lot of these names are, one thing that we haven't talked about is Palantir is going to suck up liquidity from a lot of other companies when people kind of realize, do I really want to be in this name, or do I want to have more Palantir if you're already in Palantir? Or do I want to initiate a position in Palantir, or do I want to be stuck in the name that I'm stuck in that is not that exciting? And so when it comes to a pure play AI perspective, I think that's just like the thesis that I have on some of these names, but Lemonade's putting up the growth. And as long as they can keep putting up the growth, we should see some momentum there as well. So that's what we got in terms of some of the earnings. Some of the other companies, Marriott, they reported, consumer company when it comes to hotels, important for them to do well. And they beat on the top and the bottom, 265 versus 262, beat by 1%, revenue 6.7 billion versus 6.6 billion. EPS is up 4%. Year over year, revenue is up 5% year over year. That stock, Marriott Hotels, got the market open in about 5 minutes, is flat in the pre-markets. And then the other argument, or the other company that had earnings today, that I know people care about is Pfizer. This was at 11-year lows. They beat by 37% on EPS, 78 versus 57 cents. They beat by 8% on revenue, 14 billion versus 13.5. Revenue's up 10% year over year. EPS is up 30% year over year. That stock is also up 2% in the pre-market. So across the board, I've just seen companies beat on earnings. And this is why I think Tom Lee went a bit contrarian yesterday and said, wait a second, I'm seeing 6,500, 6,700 on the S&P 500 in August. I think he's saying, well, if companies are putting up earnings and now we're guaranteed a rate cut based on the labor market data not being that pretty, the caveat here is if the labor market continues to not be that pretty, even with the new Republican BLS commissioner, that could be, something that we really have to look out for. But if the labor market normalizes and now we're guaranteed rate cuts because of the jobs report that we got a couple of days ago, yeah, this is setting up a really strong environment for companies, especially when you have a company like Palantir that is enhancing productivity and margins across their client base and then putting up the actual growth. Like we looked at that example yesterday, McKesson, ticker symbol MCK, they do $360 billion in revenue. They have 1% margins. If you use something like a Palantir, for example, inside of their operations to get another 0.5% on margins, and you get 1.5% versus 1% margins, that's 50% EPS growth. Like if we're entering into a decade where that's how companies are going to operate, you are going to see margin enhancement, productivity growth, GDP growth across the board. If we have somewhat of a decent macro, aka lower rates to support that, you're going to have equities that go higher. And that is the exciting part about being in this market right now. Two quick pieces of news on Grab. So Grab this morning partnered with the Singapore Tourism Board. The Singapore Tourism Board intends to benefit from Grab's insights into dining and commuting. One key initiative is the enhancement of Grab Travel Pass, a convenient bundle offering discounts on Grab transports and services in the country. So you have a more formal relationship with the Singaporean Travel Board and Grab. And then you had this piece of news this morning. Grab and the Thailand government are now deepening their partnership as well. I'll link this in the chat and you can read through the entire article. But essentially, the Thailand government is saying, wait a second, we have a lot of people, 5.3 million, up 8% since 2019, that aren't just going to Grab for like a month and being a tourist. They're living in Grab because the cost of living is so cheap in Grab, and they're becoming real citizens of the nation versus just like visiting for a couple months and being on a summer vacation. As a result, I'll link this article right here in the chat. The Thailand government is calling on Grab to really help expand and solidify the partnership that they already have, their existing partnership, to make sure that those people that are visiting the country actually stay in the country because they have a lot of American dollars that they can spend on a lot of the local population. And that can further enhance the overall moat that, you know, the country has in terms of tourism revenues, which is like the biggest thing for a lot of these countries in Southeast Asia. I said living in Grab. I meant to say living in Thailand. Basically living in Grab, though. I know a couple people in Thailand, and dude, they use this thing like 30 times a day. Like I've spoken to the most people in Southeast Asia, not even from Singapore, but Malaysia, but from Thailand, because there's a lot of people in Thailand that use Grab, and their argument is like, dude, we can't live without this thing. So to me, on Grab, all I'm seeing across the board is growth in every single sector except margins, which is okay because market share matters more than margins at this stage of their journey. And I think eventually, once those margins inflect after they capture massive market share, this should be something that compounds over the long term. Just going to be a question of how it plays out. But it does seem like everything we're seeing is that it is going to play out. All right, folks, 30 seconds. You got Palantir right here at 171.80 in the pre-markets. It was an absolutely incredible quarter. It's one of those quarters that makes you just happy to be excited that you're on the journey. And for all of us as retail investors that have been on this journey for the past 4 or 5 years, for people that just joined a year ago when the stock was $20, it really has been the ride of a lifetime. And today the market is recognizing more of that as Palantir puts up some of the best quarter results that we've ever seen. $1 billion in revenue, folks. Tuesday, August 5th, 9:30 a.m. The stock market is now open. Wake your ass up, ladies and gentlemen, and it shouldn't be that hard to wake up. Palantir opens at 172. We got to 173 30 seconds ago. Let's see if we can hold the 170s or if there's a ton of people that are selling into this. We are up 7%. The market capitalization of Palantir is $402 billion. $402 billion. I mean, this is just incredible. This is just like, there's not much to say other than it's incredible. I'm sure we'll have a bunch of people that sell into this. You're going to have some people that take some chips off the table. But if you do have buying pressure and that buying pressure can sustain itself, then we might continue to see this momentum. 171.50 on Palantir. The fact that we got to 173.29 was also incredible. So seems like we have a shot to get back there if we can break above. NVIDIA goes red. Tesla goes red. Robinhood goes red. Grab goes red. Affirm goes red. Meta's green. Amazon's green. Boeing is green. Duolingo slightly green. We'll talk about Duolingo, by the way. I've got plenty to say on Duolingo. I know, I think you guys know what I'm talking about, but we will absolutely talk about Duolingo in a second. S&P 500, that is flat on the day, slightly green. American Eagle, it was up 15% yesterday after the Trump endorsement of Sydney Sweeney. That one's now down 4%. Uber is up 1.2. Alibaba's up 1%. Fubo's flat on the day. Navitas down 19%. Don't know why they're down, but looks like they're taking a pretty big hit. Costco right here down about 0.5%. Palantir, wow, 174. 174. My goodness. 174.3. 174. Palantir's up 9%. I think she's going for 175. I think she's going for 175. I did buy 100 shares in the morning at 6:30. I bought at 169.30. Again, I bought into strength, and obviously the market is buying into strength right here. After those earnings, it's just hard to deny the strength. 175 resistance, folks, has 9,000 shares. 9,000 shares. And there you go. Those 9,000 shares are done. $175 on Palantir. This thing was $6 in 2022, and I think it's about to go for 176 US dollars for Palantir Technologies. Market cap $415 billion. What you're seeing right here is the street is piling in. They are absolutely piling in because I don't think they can make sense of what we just saw, other than saying that quarter was damn near flawless and was incredible. Palantir to get a $420 billion market cap, which would be a very high market cap, if you get what I'm saying. 177.5. 177.5 would give us the $420 billion market cap. Well, you're at 174.90 on the day. Back to 175. The fact that we busted through 176 also just shows how much buying pressure is coming in. And the thing is, when you get this type of a 9% day everywhere across the market, people are getting alerts that Palantir is up 9%. They're looking at why, they're looking at that quarter, and they might be saying, you know what, I need to be exposed to Palantir. Robinhood down about 0.5%, Grab down 0.5%, Affirm down 0.5%, AMD down 0.5%, Nvidia down 0.5%. We're seeing a lot of red. Mercado Libre, decent quarter, but they're down 2.6%. They did have some issues with tariffs that we'll talk about in a bit. Palantir, one of the only names that's really green today, up 8.7%. Up 8.7%. I mean, it's just absolutely incredible. $175 for Palantir. Dragos, thank you for the 50 gifted. Appreciate you, brother. Thank you for the 50 gifted. 50 of you guys just got memberships based on Dragos being very kind. Lords, thank you for the $100 super chat with gratitude for all your great work, Amit. Lords, deeply appreciate the super chat. Again, this entire journey has been because all of us have been together. And as a result, it is just pretty incredible. Ladies and gentlemen, $175 for Palantir. I think we got to bring out this bad boy, because this bad boy, after that quarter, probably deserves it. 175. Congrats, everybody, for Palantir. The fact that this was given to me by someone in the community, the fact that they gave me a Palantir bell, the fact that we've been on this journey together, and the fact that I'm so excited that I just almost broke the bell, just goes to show how exciting this has really been. Just goes to show how exciting this has really been. I mean, this is, again, it's very, very hard. Very, 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 very hard to find these types of companies and to go on these journeys. But that's what's happening with Palantir. Axon, by the way, I don't know what type of quarter they put up. 16%. I guess it was a good quarter. Street likes it. So that one's green on the day. So Axon and Palantir really getting some momentum. Axon sells body cameras, for those that don't know. So that one is green. And then you got Palantir right here. That's up 7% as well. Yeah, they let me take this on the plane, but then they got rid of Vlad's gavel. Like, how could they how could they do that? Meta right here, 775. Affirm right here, 74.40. Meta goes down a little bit. Amazon 214, Boeing 224, Duolingo 352, S&P 631. Figma is actually green on the day, 4%. Alibaba 118. Axon again, 857. Got Palantir 171.50. Again, holding 170 to me would be very, very important. If we can even hold that 170 level, obviously 175 is pretty damn aggressive, $400 billion market cap, but busting through that was important. And now being able to hold some of these levels will also be very important as well. Snapchat right here, that's slightly down on the day. Circle right here, down about 1.2%. Mercado Libre, that one's basically going red. Tesla's down based on that robotaxi lawsuit. And then Robinhood down about 1.5. Coinbase with the $2 billion debt offering, that is down about 3% as well. That is down 3%. Where is Lemonade? Lemonade is, wow, 23%. Oh my, 23%. That was up 8% in the pre-market, dude. The fact that that was up 8% in the pre-market and that is now up 23%. Goodness gracious. All right, market liked it. Market liked it. That's up 24. And you got Palantir, that's basically up 7. Again, Lemonade beat on the top and the bottom. Revenue up 35% as well, which was green. So there you go. Tesla right here, 307, and then Robinhood right here, 105. Google, 195.91. Coca-Cola, 69. Pepsi, 140. Oklo, that's up about 1.1%. And then Reddit, wow, Reddit, 204. Reddit hasn't seen 200 since February. So Reddit breaking through 200 is actually very, very bullish for them. and that's getting some momentum. Yes, Lemonade does have high short interest, so you could have some of the shorts that are potentially covering right there. Grab right there at 495. Williams Sonoma, that's up a little bit. Axon 15, and then Palantir 172.50. That is up 7.3%. I mean, it's pretty incredible. It's pretty freaking incredible. And it's just, there's not a lot to say. There's actually a lot to say, but it's hard to say many things because it's almost like this quarter keeps you speechless. This quarter keeps you speechless as you try to analyze what results they put up. UNH right here, 242, that's a little green as well. This quarter was so good, guys. There's a friend of the channel who has, for the past 5 months, been saying Palantir is the most overvalued company in the world, and that it should probably be trading at 40, 50 bucks. And that person called me last night. You guys know who I'm talking about. He drinks milk. He enjoys his milk. And he is getting ready to buy more Palantir. That's how good this quarter was. That's how good this quarter was. He's coming out with his article in a couple of days. Then he'll be on the show to talk about it. But I think a lot of people will be very happy when we hear what he has to say. Because last night he called me at the gym and he was like, I got something to tell you. And I was like, what's up? And he was like, I think I'm buying more. And I was like, wow. And so he walked me through his thesis. Essentially, the thesis is growth. And he's going to talk a lot more about that when his article comes out. So it's pretty incredible. It's pretty incredible. 173.42 right here on Palantir. Again, that momentum to 176 was pretty aggressive. So a little bit of a sell-off from there makes sense. I mean, obviously, you're not going to have it just continue to go up without taking some consolidation, taking some breathers. But the fact that we're even holding 173 up 12 bucks on the day, 408 billion. Remember, anyone buying at 173 is buying a company that's doing 4 billion revenue at a $408 billion market cap. Obviously, it's expensive. There's no denying that. But based on the quarter we saw, you got people based on the stock price you're looking at that are buying in at 173. Volume is 27 million in the first 9 minutes. And it looks like people want to continue gaining some momentum. Where is HIMS? I have not looked at their quarter. I know that they missed on their revenue estimate. HIMS right here down 10%. Again, I really haven't gone through this. I did see a tweet yesterday, though, that was going a bit viral, and it was a rather bearish tweet on HIMS. I don't know if there is much juice to this, but I'll just read this one real quick based on what I saw. But the guy said HIMS bulls should be worried. HIMS revenue went from 586 in Q1 to 544, so it decreased quarter over quarter. They now need to hit 610 million in Q3 and Q4 to hit the midpoint. The midpoint of their Q3 guidance is still lower than their Q1 actual revenue, lower projection for Q3 than for Q1. What's this explosive growth that all these delirious bulls keep yapping about? Again, I haven't gone super deep into it. This is just one of those posts yesterday that really went viral on the bear side of HIMS. I'm sure there's plenty of responses to this. But at its core, missing estimates is not good. And if they continue to not guide as aggressively as some of these other growth stocks that are guiding, people that are asking for HIMS to get a massive multiple, it might just not get that multiple. NVIDIA goes green. NVIDIA back to 180. Palantir's results, by the way, were super bullish for NVIDIA. NVIDIA chips, the byproduct of those chips are Palantir software, because you need software to make sense of all the AI that the chips are being able to train. So Palantir putting up these results says a lot about the fact that NVIDIA's hardware and their infrastructure matters. And so I think it's kind of conducive. NVIDIA sells more compute. That's good for Palantir demand. Palantir delivers more results is good to prove the value of NVIDIA's compute. And as a result, there's a very good symbiotic relationship between both. And I'm just very happy that I allocated pretty heavily to NVIDIA in the beginning of this year. And I got to give Tanner and Steve a lot of credit for that, because I could have had any Mag 7 pick. I was thinking of Google. I was thinking of Tesla. I picked NVIDIA based on Tanner and Steve. And that and Palantir have really worked out this year. Palantir on the software side, NVIDIA on the hardware side. And so both of these doing very well. Palantir is trying to fight for 175 again. It's back to 174. Let's see how much volume comes in and see if they can take it back to that 176 all-time high. But maybe there's a shot they get there with the volume coming in. A Bionic, thank you for the gifted 5 memberships. Appreciate it. Thank you for spreading the love and being here as well. Derek Dagger, thank you for the $100 super chat. Admit, I've doubled my portfolio since October with everything I've learned from your show. Keep up the great work. Your passion for investing is infectious. Let me know your t-shirt size so I can grab you an NVIDIA shirt to give you at the Miami meetup. Derek, thank you so much again for being here. Just lots and lots of love to everyone who's been part of the channel and getting value from this community. My t-shirt size is a medium. I appreciate the gift and very excited to meet everyone at the Miami meetup. And this is going to be a fun Miami meetup now because, look, I don't know what the stock is going to be on August 23rd when we have the meetup, but if we're anywhere near 175, I remember we had the freaking Bay Area meetup when right after Palantir earnings, and they were at 125. Let's just say people were pretty happy at that meetup. You know, you got Palantir 125 all-time highs. It's like, all right, we're gonna buy some more drinks. We're gonna splurge a little bit. So yeah, this is incredible, dude. It's like, what more can you say? This is incredible. It is a one-of-a-kind company that just put up those types of growth numbers that is just hard to deny. Is really, really, really freaking hard to deny. And as a result, we're seeing this momentum. Palantir trying to break 175 again. Trying to break 175 again. By the way, for all the people that have been saying the big bell is a top signal, I think we need to get rid of that narrative. We rang the big bell at 125. We rang it at 135. We rang it at 150, and then we rang it at 160. And now we rang it at 175. So it's like, I think I can understand how it felt like a top signal because we rang it at 125. Also, it's obnoxious to ring this big freaking cowbell with a Palantir logo on it, and then we tanked to 60. But that was because of Liberation Day. That wasn't because of the bell. That was because of Liberation Day. So I think the bell is more so. We only do it when there's special occasions, when we get like a 5 or a 0, right? Like a 180, a 185, not just for like a 172 or something. And I think if we were going to ring it on any day, today is the day based on those results. And quite frankly, Palantir survived Kramer. Palantir survived the New York Times. Palantir survived the massive amount of mainstream media that tried to take this company down for the past 4 years. Palantir survived the spreadsheet warriors that have said this company has been overvalued since $20. Palantir survived everything. And I think they will continue to survive as the market just sees that this is not a story that you fade if it's a generational company. It's very hard. It's very hard to fade it. Lemonade continuing to run. Yes, Lemonade getting some momentum. That one right there. Wow, 30%. I guess I got to go deeper in the earnings. I mean, the top line revenue growth was good, but 30%. Now, again, the short squeeze might be contributing to it as well. But shout out to Love to Fly Pilot. He is the person who gave me the Palantir bell. And everyone gave him so much shit because we rang it at 125 and then Palantir dropped the day after because then the tariffs started happening and they were annoyed at him. But he did it with a lot of love when he gave me that bell. And that bell has survived the test of time, and Palantir survived it as well. So really, really appreciate you, man. And thank you for that community bell. It means it's a big deal for all of us to just have that, because the cowbell is kind of my thing. And the fact that it's branded with Palantir and we only ring it on special occasions, like it's just like the fact that as a community, we have those types of things that are so special and unique to us, like the currently right now, for example. It's a big deal. It's a very, very, very big deal. Palantir 175.50. All right. Can we break 176? Let's see if we can do it. There's not many other stocks that are moving. Everything else is relatively flat. Axon's up 15. NVIDIA's flat. AMD's up 0.25. We'll do a little preview of some of the earnings we have. There you go. Back to 176. Can we break 176.04? No, 176.33 is the all-time. Let's see if we can break 176.33. That would be all-time. That would be, if we get to 180 and we have to ring the bell again today, that would be insanity. Like actual insanity. But let's see. Google's up a little bit today. Amazon's still down. No, Amazon's actually rebounding 2% after being down over the past week. AMD again, 177. NVIDIA, 179. Palantir 176 for the 5th time. We hit 176.15. Let's see if there's enough buying pressure. 176.33. Can we break that? 176.33, 176.22. It's trying to break above it. That would be all-time highs. And then I will check 177 resistance. I think it's not yet. It's 177 is 31,000 shares. So not crazy. 31,000 shares. D-Wave got an upgrade to $25, or sorry, to 26. I forget from which firm. That's why that's up 6%. But basically they said, hey, quantum is real. And D-Wave has a ton of cash to capitalize on the opportunity. So that's why D-Wave is up right here. Palantir 175. All right, so Palantir is getting rejected at 176.29. 176.29 is where they're getting a little bit of a rejection. Tesla right here, 309. That's green after the lawsuit. And then HIMS is getting back to 60. All right. Even with a miss on revenue, it was down almost 14%. Now it's down 6%. So that's not bad, dude. You're seeing people buy the dip. So HIMS getting a bit of recovery right there, which is not horrible. UNH, that's up about 1%. Again, Palantir 175. And then AMD at 177. U.S. approves OpenAI, Google, and Anthropic to federal AI vendor list. So I think we saw a headline around this a week and a half ago. XAI came out. They had a $200 million contract with the U.S. government as well, the DoD. So you're getting a lot more federal AI vendors that are being approved. And obviously that is going to be bullish for a lot of the government growth when it comes to AI. Are you going to ring the bell when Palantir drops back to 100? I mean, look, I've heard over the past 12 hours of reading all the bearish tweets on this quarter that are not really bearish on the quarter. They're bearish on the valuation, that there's no way in hell Palantir can sustain this and they have to go back down to 100. Maybe those people will be right. Maybe they will. But the problem with that take is I think people are not living in reality. Like I just don't think they're living. I really think they're not living in reality. If Palantir goes to 150, people are buying that dip. If Palantir goes to 140, people are buying that dip. If Palantir goes to 125, people are buying. Like, so, and what it would take to get that type of a massive decline, I think is something macro, not independent on the company itself. Could something happen in the macro that causes that? Sure, anything can happen. You got to be humble enough to admit, like, you could get a recession, everything could fall. But that's not a Palantir thing. That's a macro thing. Palantir independently, for people to sell off the quarter they just saw back to the low hundreds or much below 100, like people are saying is fair value, I don't see that easily happening. Does it have to sustain 174? No, it could go back to 155 like it was yesterday. And no one would say that the company is cheap if it gets to 155, right? Because like still the valuation would be aggressive. But to get below 100, I just think it's hard. I just think it's very hard for that to end up playing out. Admit I won't be ringing a cowbell, but I'll be selling my house and ringing the buy button at 100. Yeah, I mean, I will definitely be buying that dip as well. The stock was $14 a share 3 years ago. Now it's up $14 in a day. It's crazy. Yeah. And look, stocks can get overbought. Like, the RSI on Palantir is high. Like, anything could happen, right? We saw what happened to Robinhood. Great earnings, but Robinhood fell. Palantir's earnings, I would say, were just so phenomenal. It was hard for the street to ignore it, which is why you're getting this 9% gain. Robinhood earnings were amazing, but, still just did not have the momentum to have that much of a gain. Also, Robinhood was up 3x in 3 months. Palantir was up like 1.2x. But when you see that type of a quarter and you ask yourself, where else is my money better allocated? And the only reason the money should leave Palantir is because the valuation is too aggressive. I think a lot of people are waking up and saying, well, maybe that's not the best reason. Because if you thought valuation was the reason, at $80 would have been the time to sell because the valuation was aggressive then. So at 175, the valuation is just more aggressive, but the growth they put up is also more aggressive. And it makes you think that the life cycle of growth will continue to take place. Here's the other thing. If Palantir is able to stay within this range, call it 150 to 200 for the next 3 years, they will absolutely grow into this valuation. Now, granted, if the growth is as explosive as we think it is, the premium will probably increase and it's going to be hard to keep it just range bound, especially if the macro holds up. But for Palantir to grow into this valuation is very possible based on the numbers that we got yesterday. They just have to be a bit range bound. And I don't know if the market will like them to be range bound because maybe the market will just have too much demand and the supply of shares will be too little, and that will create an appreciation in the share price. But the vision and the trajectory for them to legitimately justify the market cap based on the actual growth is real. And I think that's why the market is so excited here. NVIDIA 179.18, Palantir 174.87, Tesla 309, Robinhood 105.75, Meta 778, Amazon 215, D-Wave 1820, HIMS back to 60. Not bad. You got a nice little green candle from 53 to 60. Now only down 4% of the day. Axon, amazing quarter, up 15%. And then Palantir really trying to fight for 175, but holding it, which is not too bad. Yeah, they cannot afford one slip up. I agree. It's going to be very hard for Palantir to justify the market cap if they have a bad quarter. And I think they know this, which is also why I think Karp was as arrogant as he was on the earnings call yesterday, because he was speaking from a lot of confidence and a lot of power in terms of him. You don't speak like that as a CEO if you don't think you're going to really crush it for the rest of the year and over the coming years. I mean, Karp said they want to 10x the U.S. commercial revenue in the next 5 years. Like, if they're going on to 10x U.S. commercial in 5 years, I mean, this is just going to be a very, very exciting ecosystem to see how this ultimately plays out. And as a result, it's just hard to get, again, super, super bearish when Palantir is putting up those types of results. Now, Morgan Stanley, very bullish on what they got from Palantir today. They raised their price target from 98 to 1 55. Reddit right there, 207. So Reddit is getting green. Here's what they said. Palantir is the winning recipe to deploy AI. Wow is our reaction to Q2 results with nearly every headline metric and key performance indicator accelerating versus Q1. To contextualize how impressive the Q2 results truly are, we agree with CEO Alex Karp's suggestion to look at the rule of 40, which sums up revenue growth and operating margin. This came in at an astounding 94%. The real insight software investors are after is why Palantir has been uniquely able to deliver such best-in-class results. And it is because of software-defined data integration, creating an ontology that allows AI models to truly understand relationships between data, workflow automation, and grounding state-of-the-art models and enterprise data, and deploying highly technical engineers to help get customers complex use cases into production environments. I mean, it sounds like all the stuff we've been talking about for a couple of years. It's just now when Morgan Stanley says it, you got a lot of clients that have a lot of money that read that and they say, okay, cool. I'm going to buy 1,000 shares. I'm going to buy 100,000 shares. I'm in. You know, I pay Morgan Stanley a lot of money to give me advice. They just told me Palantir is a buy. I'm going to go buy it. And the fact that that's happening at these levels is just incredible. It's pretty freaking incredible. So that's what we're seeing right there on Palantir at 175. D-Wave, again, that one also is getting some momentum right here. 18.69. That's up 8% on the day. NVIDIA 179, Palantir 175.22. Big Bear AI, that one's up 3.3% as well. SoundHound's up 5%. Archer's up 1.4%. Joby, SoFi is about to be 22. Joby, again, had a great day yesterday. Joby's up another 1% today. This stock has been on an incredible run, and they've just had a lot of momentum after acquiring the Blade Air business in the tri-state area in New York and New Jersey. So that's helped them. And then HIMS, trying to get back to 61. Trying to get back to 61. Where is the Googs? Google this morning. Wow, Google trying to get to 198. Maybe 200. Maybe 200 is what we're going to see on Google right here. 197. Amazon again going green. Again, you know, this idea of August being bad, don't see it yet. It was there for a day. I mean, like if really our dip was 620 on the S&P and then people said, screw it, I'm in. We've got a long runway to go. If that was the extent of the pain in August, then maybe Tom Lee really is going to be right that more money is going to come in as these companies produce earnings. And by the way, at the end of August, to top it all off, we've got NVIDIA. So if this is the year where we buck the trend of seasonal weakness in August, it would be incredible. But again, we have to expect that we don't buck that trend just in case, because, you know, historically, that's what happens in August. Lemonade, 31%. Lemonade as well, pretty strong quarter. And that one getting some momentum. Oklo, from a nuclear perspective, that one is also green, 83.18. That's up 8.7%. Oklo continues to get a bid based on the idea that the government is going to need more nuclear energy and that AI companies and data centers are going to need more nuclear energy. And Oklo is one of a handful of companies, SMR, Nano Nuclear, et cetera, that can provide that. SMR right here is up 11% and Nano Nuclear is up 8%. Maybe there was some news specifically about nuclear companies, but all of them moving based on energy continuously getting a bid. No, I don't see any headlines. There should be a headline for all of them, but I don't see any headlines. It seems like, oh, this one. Maybe this is the headline. United States announced a plan to launch a nuclear reactor on the moon yesterday. Could that be the reason? Could that be? Maybe that's the reason. Maybe that's the reason for why we're getting some momentum. So there you go. Wow, Meta. Are we back to 780 on Meta? Are we back to 780? Meta, yeah, not bad. Meta back to the prices it was at after the earnings. All of the Max 7 really continuing to get some love on the day. Palantir just under 175. The only Max 7 that sucks is Apple today, and then NVIDIA is slightly flat. Apple back at 203. Apple back at 203. Bro, they can't even get the jobs data right. Yeah, that's fair. I mean, they can't get the jobs data right, so it's going to be hard to imagine nuclear reactors on the moon. But maybe that's what's pumping the nuclear stocks. By the way, take a look at the S&P 500 targets across the board. Again, this is what happens with a lot of the analysts, what you're seeing with Palantir as well. The price targets go up. So the initial forecasts were from 6,500 to 7,000 across the board on the analysts for Wall Street. The tariff reaction took them all the way down below 5,600. Again, 6,500 at the lowest to 5,600. Now all of them are back. Oppenheimer's back at 7,000. BMO's at 6,700. Goldman Sachs 6,600. Yardeni 65. Bank of America 63. JP Morgan 6,000. Citibank 6,300. I mean, you're getting all of them. Deutsche Bank 6,550 that are coming back. So when you have all the analysts reiterating their price targets after that initial tariff reaction took them all down, that also does create a lot of momentum on the broader market, saying, all right, maybe there's more room to run as the market starts to get a bit more bullish for the trajectory of this playing out. Tesla goes green even after the robotaxi lawsuit. So Tesla's still holding up 311. Again, Tesla kind of pegged at that 300 level, which to me is kind of range bound in, but that one doing a good job holding up. Google 197. Alibaba's up a little bit today. Ethereum 3600 BMNR. How's that one doing? That is at 31. And then Palantir is at 174.70. By the way, SBET now has like 500,000 Ethereum. They bought more. They bought more this morning as well. So you were seeing a lot more Ethereum get bought up by these Ethereum treasuries. I think we have some macro data in regards to PMI. Let me see if I can pull that up real quick. All right, let's pull this up. This is some of the PMI data we got this morning.
Yes, David. These are S&P ISM at the top of the hour. Services PMI, July final, improved from the mid-month. Mid-month 55.2. This reading 55.7. They both remain, even the revision, the highest level of the year going back to Dec of last year. Same could be said for the composite figure. Moved from 54.6 to 55.1. Best of the year, best since December. These are important service sectors, the largest swath of the economy. You may have noticed we're hovering in the low 420s in 10s for the third straight session in a row, as the ranges really are getting quite compact after the wild ride we had after Friday's jobs report. Squawk on the Street will return after a short break.
All right, so PMI not that bad. PMI not that bad, which is actually relative green. Open Door does have earnings after hours. Palantir 174.80, and we'll see what Open Door puts up. $2.40. I mean, I have no idea what to expect from Open Door, but we're gonna find out what they say. And I don't know, dude. You got people thinking this thing's gonna go to $82. Does that happen? Maybe. Seems a bit unlikely to me, but maybe they have one of those quarters that changes everything. Brandon says, my thesis is August may not be a bad month because of the retail investor movement. We buy and hold while the toots sell and go on vacation. Yeah, I mean, look, every dip is getting bought, not only by retail, but in large part because of retail. And if you're a retail investor that missed Palantir, and let's say Palantir gets back to 160 for some reason, I mean, like, you're going to look at that and say, all right, that's my entry. I get in, right? If you're an institution now with every analyst saying, hey, it's going to 200, I mean, that's your entry. So I do think in this market with the macro tailwind of AI, we talked a lot about yesterday, does valuation matter as much? Of course it matters. But when you have a like S curve on top of existing S curves that are compounding at rates that we had never seen before as a human species, when it comes to a technological revolution that then impacts the companies that are involved in it, that we can invest in, it's very hard to fade that just because of the price of sales. And I think that's what's going to create a bid as well. Meta right here at 780. Where is HIMS? HIMS 61.74. HIMS really rising from the dead. Rising from the dead. So quarter wasn't the best based on missing the revenue estimates and the guide being not that bullish, but I guess it wasn't enough for a 10% decline. And you're getting people to buy the dip, which is good. In a bull market, you want to see a good quarter, not a phenomenal quarter, be rewarded with a dip buy, even if the quarter, again, isn't like an NVIDIA type of quarter. Like, you don't want to see stocks go down 20, 30% just because a name had a good quarter, but not like a great quarter, right? You want to see people step in and say, hey, this is a deal. And if I don't have a lot of exposure to HIMS, or if I want to double down on HIMS in a bull market, you want to see that deepening of the diversification and broadening out of a rally, and people may be taking some profits on names that they're bullish on and buying the dip on things that are cheaper if the market becomes irrational. And, market taking down HIMS down 15%. I don't necessarily know if that's irrational yet, but given the stock recovered 14 out of that 15%, kind of feels irrational. And so that is not a bad thing to see right here. Amazon 215, that's up 2%. Google just below 197. Palantir chilling out in that 174 range. All right, ISM services, we just got that. ISM services for PMI, what does that look like? 50.1 versus 51.5, so that's a miss. 50.1 versus 51.5. I don't think that's the worst in the world. Market's going a little red. A little bit of a red candle on that. S&P, yeah, all right, little red. Services matters a bit more than the manufacturing number to some parts of the market. Let's get an update on that, but I don't know necessarily how aggressive the market will think of that.
Hi, Leslie. Indeed, we had S&P Global final reads for July. Now we're having ISM service sector PMIs. These are fresh, first-time look at July. Expecting 51.5-ish on the headline, comes in light. 50.1, sequentially lower and light expectations. The weakest since, well, just a couple months ago, May of this year. If you look at prices paid, it's going in the wrong direction. 69.9, following 67.5, well above expectations. 69.9 would be the highest rate of prices paid since October of 22. Look for yields to pay attention to that potentially. And new orders, 50.3, 51.3 in the rearview mirror. So that's sequentially light. Light is since a couple months ago, the month of May. And finally, the employment index, 46.4 follows 47.2. 46.4 would be the weakest since March of this year. So these numbers do disappoint on the service sector. But instead of paying more attention to the prices paid's inflationary implications, it's the weakness that seems to be taking the market as yields are moving down just a bit. But I don't want to overemphasize how tight these ranges are. Basically 421 and 10s. We've seen it a lot the last 72 hours. Mike, back to you.
Okay, so that's not that bad. It's obviously not amazing, but it's also not horrible. And so, you know, if you get a little bit of a red market on that or a red dip, that's fine. But are people really selling their stocks because of ISM services being a bit higher than expected? I mean, we care about these macro metrics because they give us a better picture into what's happening. But largely, they're irrelevant if companies can put up earnings growth. I mean, that's what really matters, unless they become such dramatic. Like if ISM services was at like 35 and the market expected 50, then you have an issue. But if it's 51 versus 50, I mean, you know, it's not the biggest issue in the world, even if it is one data point. Robinhood is about to go green, 106.14. You got Robinhood trying to catch up and go green on the day. It was at 104 this morning. Now you're at 106.26. And that getting a little bit of green. So you know how I said the bell is probably not going to stop Palantir? Ringing the big bell is not going to stop Palantir from getting momentum. Kramer just said Palantir is not that expensive. So although Palantir has survived Kramer for the past 2 years, I mean, if this guy, if this guy keeps touting this stuff, who knows, bro? Who freaking knows? Remember, he was saying Palantir was expensive at $6. He just posted Palantir is not that expensive. So if you're looking for a bear, and now you got Palantir with the red candle. If you're looking for a real bear case, like an actual red flag, I wouldn't say it's the community bell. I wouldn't say it's the valuation. I would say it's this guy going on CNBC and saying, actually, Palantir is cheap. That's like, we survived that. We can survive anything. So there you go. If you pass the Kramer test, you're going to the moon. And dude, and we have passed the Kramer test. Like we have. Robinhood and Palantir both have survived it. But it's almost one of those things where, like, can we keep surviving it? Because every time this guy comes out and says it's cheap, like, can we keep just pushing through? And hopefully we can. But no, in all seriousness, Palantir are doing a fantastic job holding the 170s right here. Like, doing a really good job holding this momentum. Oklo up 10% on the day. Lemonade up 27%. Hims, again, really getting ready to go green, folks. This is very bullish for Hims. Let me just say that. I don't know anything about the quarter because I really didn't go through it last night. But to see a 15% dip get eaten up after they missed revenue estimates is unbelievably bullish. It means that people think, regardless of the revenue miss, they are bullish on the quarter, and they think that 55 or whatever it got to was too cheap. And as a result, they're buying that dip. I mean, that is very, very nice to see on that stock. So if you're a Hims bull, you've got to be encouraged by that price action, even if the quarter wasn't as strong. UNH right here is up about 1%. Axon 17%. We'll get their results in a second. And then SoFi 21.86. SoFi trying to get back into that $22 range. Kramer was stressing me out when Palantir was $8, and now I hearing him tell us he knew all along. Yeah, that is kind of the nature of how Kramer acts. I wonder if Karp will ever give him the interview, because I think if he did, I think it would make Kramer's life if Karp just got on the show. But I think Karp has a lot of respect for the people that actually believed, and Karp is a very loyalty oriented guy. Like if you're loyal, he respects you, and he cares about you, and he rewards you. If you're not, I mean, why do you think so many people stay at Palantir? I mean, they have the lowest employee turnover rate in technology in all tech companies. You know, you are very well rewarded financially and I would imagine fulfillment wise by, you know, sacrificing your life for the mission that is Palantir. And I think he values that deeply. And Kramer has just been a bit of a flip-flopper for the past 5 years thinking about Palantir. So I think Palantir will survive it, but it's just incredible seeing them get this momentum. $410 billion market cap. BMNR right here, 3156. HIMS, do we get green? We are 40 cents away from going green, folks. 40 cents away from going green. It's pretty incredible. Yeah, 15% in 30 minutes, dude. That's not easy to do for a stock. That's not easy. And like, it looks like inevitable that HIMS is about to go green. It's 15 cents away. You've got to be bullish if you're a HIMS shareholder on this. You have to be bullish on that. There you go. HIMS is green. 63.40. 63.40 on HIMS going green. S&P is barely flat. Robinhood also going green. Dude, what is this month of August? I know we're only 5 days in, but I mean, it's not the doomsday that the charts were telling us, at least not yet. Maybe we're speaking to it. Maybe I'm speaking too early. But I mean, if the S&P were to go down another 2% like it did on Friday, who's not buying that dip? Like if all these stocks go down another 5-7% and we have to do this again, unless there's any new news that like triggers the market, like the thing about recovering after a dip, that's why I'm saying this is so bullish for HIMS, is it shows you how rare it is to get a dip. So Palantir up 8%. If that went to 160, people would really get excited from that. You know, Palantir recovering from 125 to 108 on Q1 earnings when it fell, and people who bought that dip and then it recovered within the next month, like HIMS is recovering within the next, hour. It just shows you how rare there is to find an opportunity, which forces people to buy at a higher price because you just don't think you might ever get that opportunity. And that creates even more bidders on the name, which gets more liquidity into the stock. And that's obviously very good for shareholders. So very important to see these dips get bought up across the entire market. Amazon right here, 215, Google 197, Grab 493. That's down 0.5%. Tessie 309, and then AMD trying to get to 177. What do you think about Palantir covered calls right now? I think the premiums are juicy. I would not blame anyone for selling like a 185, 190 covered call. You can still, I mean, if we look at the premiums today, if we go out 2 weeks, August 15th on these calls, yeah, I mean, you're still getting a pretty hefty premium, a pretty good. You're getting almost $4 a share. So $400 a contract for 180, 185. So I don't think it's crazy. Selling some covered calls right here. Obviously, could it bust through that? Sure, but Palantir is already up 9% after earnings. Could it keep going? Yes. And you can manage the covered calls, but the premiums there are very strong and obviously can lead to a lot of momentum based on those earnings that we got. Robinhood right here, trying to get back to 107. Open door down 3. Meta 780. Again, Meta and Microsoft holding their earnings pump as well. Meta more than Microsoft. Microsoft gave up a decent chunk of it from 560 to 534, but Meta's holding everything at 780, which is also pretty bullish for these big tech companies holding on to their momentum. Pfizer, yeah, great quarter. Great quarter on Pfizer. Beat revenue and EPS by almost 20% each, up 3.4%. Pfizer does pay a 7% dividend. Now, maybe the stock is going to be dead money the next couple of years, but it's trading at a decade level low, pays you a dividend, and they grew revenue by 10%. So, I mean, if you are a sort of fixed income type of investor, not the craziest investment, I just think there's obviously a lot of other opportunities here besides Pfizer that are very exciting. Hoodie 107, back to 107. There you go. It looks like Palantir wants to break through 176, dude. Like if they were going to give up 174, I think she would have done it by now. Every time it gets to 173.90, it just cracks right back above 174.50. But then you have a lot of sellers at around that 174.80 range. So if you get a bit more buyers coming in, I think we crack through 176.33 again. And then you got Robinhood, kind of the same story, trying to crack through 107. Not as much volume or momentum because it's not after earnings, but still nice to see it at 107 as well. So you're getting some momentum there. Now, Duolingo, let's talk about this for a second. I just want to give, Duolingo's up 1%. I just want to give a shout out to someone publicly. I want to give them a public shout out because I saw they posted a video yesterday and I could not believe that they posted this video, but they did it. And I just need to say thank you. I just need to say thank you. Ladies and gentlemen, one of the biggest financial YouTubers who gets a lot more views on his uploaded videos than I do. My style is more so live streaming versus uploaded videos, but who I consider a friend. We've done a podcast. I'm actually one of the only people he's ever done a podcast with. If you type in his name and emit on YouTube, you will see a podcast from 2022. So he doesn't do a lot of podcasts, but we're relatively friendly. Joseph Carlson, 400,000 subscriber channel. This video got 90,000 views. He bought Duolingo. He freaking bought the green owl. And I just want to say thank you. I really just want to say thank you to Mr. Joseph Carlson, because the reason that my stock draft has not been performing as well as it could be this year. By the way, we got to number 2 finally. So Matt's at 14, Tanner's at 7, I'm at 9.5. Steve's at 1.95. Kris is down 1. So we're finally above Tanner for now. We're in second place. Is because of that company right there, Duolingo. In the fantasy stock draft, I picked this one. If I didn't have Duolingo, I might have a shot to be dethroning Matt at 14%. If I picked like anything that didn't go down 25%. So, by the way, Palantir and Hoodie, some people didn't agree with those picks when we made them in June. Sometimes you trust in generational companies. Palantir's up 23% since the pick. Hood's up 40%. Sometimes you trust in generational companies, and then AMD right there is up 40%. Shout out to AMD. So we'll cover that after the bell, and hopefully AMD can continue doing well. But Joseph Carlson is now pumping my Duolingo bags. Even though I don't own the stock, but metaphorically, I own it. And I really want to do well in this ETF challenge. And I need someone preaching the Duolingo thesis. And your boy Joseph Carlson just told 90,000 people yesterday why he's buying Duolingo. So, I watched a little bit of it. I got to watch like 5 minutes of it, like more like 10 minutes. I got to go through like one of the chapters because I was just really sleepy last night, but I was listening to a little bit of it. It's not a crazy argument. He's comparing it to Spotify. And we all saw how Spotify played out from 80 to 700. And again, Duolingo's high share price is a function of the outstanding shares they have. It's not that, Spotify's at 700, Duolingo's at 300. Both of them are vastly different market caps. It's just Duolingo has less shares than Spotify. So they should probably, in my opinion, split the stock. It would just make it a little bit more accessible for people to buy. But the point is, he's saying there's a network effect to this platform. And the network effect of this platform via language learning is going to scale massively. And he sees the growth being pretty exponential. Him's right here at 63.10, going a little red, but still recovering from that 15% down day that it had. So I just want to say thank you, because I don't own this. Quite frankly, I don't believe in it. I don't know what drugs I was on when I picked it as my last pick in the stock draft. I do like the mission. I do like the founder. I do believe in their growth. One of the reasons I picked it is because they're growing top line at 60%. So I was like, look, if I want to be leveraged towards high beta growth, that's kind of the portfolio angle I'm going for. That's why I bought it. Unfortunately, I bought it at a very high price at $474. But now you have the biggest financial YouTuber that's pumping my backs on Duolingo. So shout out to Joseph Carlson. I will actually watch his video in depth and see if there's a real thesis that even makes me interested in actually buying the stock. But yeah, if you're buying it based on Joseph Carlson, I mean, he's a pretty smart guy. He's gotten some pretty strong picks. He got Netflix when everyone hated it. He got Spotify when everyone hated it. He's one of the he will never buy something like a Palantir ever, because he doesn't invest like that. And he could never really understand the Palantir thesis, although he admitted yesterday that 48% revenue growth is just exceptional. And even he couldn't deny how amazing it was, but he would never pay these multiples for Palantir. But the fact that he's paying these multiples for Duolingo, which, look, it's not as expensive as Palantir, but Duolingo is also kind of expensive. Like, let's not act like Duolingo is the cheapest stock in the market. Trades at 20 times sales. I know Palantir trades at 100 times sales, but still, he was making the argument. I was, again, in the little bit of the video that I watched, that it's okay to pay an expensive multiple for something that's growing. We've heard that argument many times, right? And he's applying that argument on Duolingo. So hopefully this one outperforms and can help the ETF, but also will be good for anyone who invests in it. SMR right here is up 8%. Lemonade's up 30%. Nvidia still flat on the day. Amazon at 215. And then you got Palantir 174.40, again, kind of pegged at that 174.50 level. Did anyone watch the video? Did anyone get excited about the argument that he was making? Again, I didn't watch. I think it was like a 40-minute video. But if anyone thought there was a big thesis, let me know if there's something exciting in it. Tesla right here, 308. Tesla going red. Again, that robotaxi lawsuit, I think it's nothing burger. But that one's slightly red on the day. Affirm is green as well. Affirm has earnings coming out in about a week. No, sorry, Affirm is red. But you do have a pretty nice move. I mean, back in May, this thing was 50. Now it's at 72. So you are seeing a little bit of momentum there. And then Spotify down about 2%. Hims going green again, 63.50 is green. Wow, Intel 5%. Oh, yeah. I did see the comments. Intel's up 5%. Don't know why, but Intel's up 5%. I did see some of the comments in the video. This is another reason I wanted to thank Joseph Carlson. Dude, I think there was like 500 comments. I would say almost 85% of the comments were giving him shit. Like giving him a lot of shit. You had a lot of his subscribers just being like, what video did I watch? Like, who is this guy? Duolingo? Are you serious? Are you kidding me? I'm just going to go buy more Google, more Amazon. Like, why are you talking about, why did you waste my time for 40 minutes talking about Duolingo? I think really some mean comments for a guy that was just presenting a new thesis. Like it was a little aggressive in the comments. And I guess that's because his community is so geared towards not investing in companies like a Duolingo that are obviously very expensive. Not as expensive as Palantir, but we're not talking about the cheapest stock in the world, which is why I think I was on drugs when I bought it at 474. Like, I don't know why the hell I picked it, but it is what it is. So he went through a lot of shit in the comments to be able to make an argument around Duolingo. And the fact that he was willing to go through all that shit and put out the 40-minute video knowing that his audience probably wouldn't like the pick makes me a bit more bullish in his conviction on the pick, to be quite frank. And so, you know, even with all the pain that he took in the comments, the fact that he was defending himself in those responses. He was like, yeah, look, I get what you're saying, but here's my thesis. Here's what I believe. And that's kind of what you have to do as a contrarian when you get bullish on a name. So Oklo right here is up at 9%. Lemonade's up 31%. I mean, the Duolingo thesis just got a lot more interesting because when one of the biggest financial YouTubers tells 100,000 people he's buying, I mean, you start to think a little bit more deeply about what could happen here. So Amit, how much did you pay him? Dude, I was shocked. Like, Palantir just had the best quarter of their life. The one reason my ETF sucks is because of freaking Duolingo. And then I get back from the gym and I see I'm buying a new stock in my feed. I click it. I go to the comments because he takes 5 minutes before he introduces the stock. And then I see the comments spamming DUOL. I'm like, no, he didn't. No, he didn't. He did not just tell 100,000 people he's buying Duolingo, but he did. And so I was pleasantly surprised after Palantir earnings to get that piece of news. Again, stock draft up 9.5. Tanner's getting hit because of Coinbase today. And that's why Tanner's down to 7.7. Matt's still up 14.6. Rocket Labs really got to crush it for Matt to continue his reign as being number one. So if Rocket Lab, doesn't have the best earnings, that might hurt, but we're going to see that on Thursday. Steve's up 1.95. Steve's getting a little hit because of Hims, even though that has started to recover. And then Kris, UNH, and Novo, that one's hurting him. He's down about 1%. So we're going to see. We're going to see what happens with Duolingo. CNBC is talking about Palantir. All right, let's go to them. And let's see what they're talking about. Palantir still holding 174. I think we crack 176 again, guys. I don't think that was just a one and done. When the volume is that high, I think you're likely going to see some more momentum. Maybe not, but we're going to see how it plays out. Oh, we got Brent Thill. We got Jeffries. This guy has been pretty bearish for the past 2 years. Let's see what he has to say about this quarter.
Revenue for the first time ever. That's up nearly 50% year over year. Joining me now, Jefferies analyst Brent Thill. He has an underperform rating and a $60 price target on Palantir. Brent, great to have you weigh in here. I know that you've kind of been dealing on these two tracks when it comes to Palantir. The fundamental performance continues to be impressive. It's hard to make peace with the valuation. What did this new report tell you along those fronts?
I think what it tells us is Palantir is operating at a level in the software industry that we haven't seen ever before. For a company to put up 45% growth and a 45% plus operating margin, no one in the industry is doing this. So every software CEO is taking notice and trying to figure out what is happening. Dr. Karp's announcement to you this morning that he would like to do this with fewer employees and grow 10x the revenue is also a huge wake-up call for all of us. That AI is going to take our jobs. And so I think right now we're just seeing a company that we've never seen before in the history of software as it relates to the balance of growth and profitability. And if you put this in perspective, their market cap today is bigger than Adobe and Salesforce combined. And those companies have $70 billion of revenue. And Palantir next year is on 26. Palantir will have $6 billion. So, the market's forward paying for this in a big way. We haven't ever seen multiples at 75 times forward revenue. It's never sustained. We've had 4 quarters of accelerating growth. And so what we've said is that at some point when that growth just decelerates a bit, so will the multiple. And that's the biggest concern. But look, there's nothing to be concerned right now. They're executing incredibly well. And again, I think it's a scary moment for everyone to realize that they think they can grow 10x with fewer employees. Now, they added headcount in the quarter. They were up pretty materially. So we'll see if they can hold court on that. But again, I think we're just seeing basically a story we've never seen. And it's really hard to judge because there isn't anything relatively anything near it to judge it against.
Right, which I guess maybe helps explain why it's gotten to about 400 billion in revenue, because people you can tell yourself any story. I'm sorry, 400 billion in market cap, because you can tell yourself any story about just how steep this curve is going to be and how long it's going to stay that way. The talk about reducing headcount at Palantir while having this stupendous growth is interesting in the sense that you are a little bit concerned about their sales model, right? Where they're not really going out into the field with a traditional sales staff and trying to get new clients.
Yeah, I mean, again, this super unique story, which is their deployments and their customers have spoke for themselves. So this is testament to how good their products are, that they don't need a big sales team. On every single call, Dr. Karp has said this repeatedly, that we have a tiny sales team. And he believes in no-steak dinners and golfing on Fridays with clients. He believes in producing a great product. That speaks for itself. That then spins the flywheel. And again, something super unique we just don't see across the industry. The one company, Atlassian, started this way, and now they're having to invest in a direct sales team. So I think, again, what's really different are the growth rates, the go-to-market model. And again, this speaks to the testament of how good the products are. We spoke to many customers, and the customers are very happy. They're increasing their spend. They believe in the product. So this isn't necessarily any hocus pocus in terms of the product not working. This is a solution that works and is being driven, and sales and marketing is being driven by success of those customers rather than the steak dinners and the constant sales interaction, which again is another model that many are using in the industry and are following them.
Yeah, I bring this up not because you mentioned steak dinners and golfing, but I was trying to think of analogs for a stock that had this huge run, in its first few years as a public company. Everyone said it was too expensive all along the way, and that would be Salesforce. Now, it had nothing like this revenue multiple, but certainly on an earnings basis relative to its peers at the time, there was a constant kind of big pool of skeptics out there that said, they can't really grow into this valuation. Is there any kind of rationale to that comparison?
There's been no real comparison. I mean, we've seen through the years, right, during the 90s and 2000s, Siebel and what happened there. We saw Snowflake go to 50 plus times revenue, and then the multiple came back to single digits, and then recouped the multiple, and now is low double digits. We see 2 stocks right now that are great companies like CrowdStrike and Cloudflare. They're between 18 and 25 times revenue, but then the gap to get from Cloudflare at 25 times to 75 times in Palantir, there's nothing in between. So there's no cities to stop at in between those multiples. So the highest multiples we've seen, again, most of them have come back because you can't sustain that growth for that period of time. So again, we're not saying they can't do it. We're just saying we've never seen it before. And I think that's a hard thing for many of us that have been doing this for a while. There is no comparison.
Right. Yeah. And we know the company, kind of looks to directly sell itself on an investor relations basis to retail investors. The street's been a little bit of a skeptic all along. We'll see where it goes from here, Brent. Really appreciate it.
What you got right there was a pretty humble tone by Brett. I mean, last quarter, if you guys remember in Q1, he was a bit more aggressive in terms of the level of arrogance he had on the quarter when he was particularly talking about pure valuation. And now you can just tell in his voice, it was like, well, I don't know if they're going to be able to keep doing it, but it's hard to deny how amazing it was. And, you know, the thing they said at the end, right? The host was like, we know the company has marketed them to retail and marketed themselves to retail, and that institutions have kind of been on the sidelines. That's the point. The company didn't market themselves to retail. The company built themselves, and retail found them when institutions didn't want to find them for a myriad of reasons that we can spend hours talking about. But that's the point. So, you know, it's always so funny when I hear the frame of reference of, oh, Palantir is marketing themselves to retail. It's like, no. Palantir is being the authentic version of themselves. Retail's attracted to it because retail found an authentic story that they wanted to believe in that wasn't full of crap like a lot of the other software companies that are out there, which is why now the street has to be humble and say, all right, I guess it deserves a multiple, and a very aggressive multiple at that. Now, obviously, to Brent's point, if they can't keep up the growth, multiple will go away. Like, that's just inevitable for any growth company. But the humbling in his tone comes from him kind of acknowledging, yeah, it looks like they're going to keep up the growth, even though it is insane to say Palantir is more expensive than Adobe and Salesforce combined. I get it. Like, you're not going to get me here saying, oh my goodness, that's like that's easily justifiable. But then when you look at kind of the core trajectory of growth that Palantir can dive into, and the quarter they put up, you've never seen it before. So then ask yourself, it makes you ask the question, well, should they be worth a lot more than a lot of other companies if we've never seen this before and it's sustainable? So far, the street's saying yes. And that's why the stock right here is up 8% of the day. Now, Palantir is green in a sea of red. Tesla's red, Duolingo's red, Hims is red, Spotify's red, Robinhood goes red, S&P goes red about 1/3%. The fact that Palantir is holding 8% while everything's kind of taking a little bit of a dump, Google, Amazon, they're down from high of days, is also pretty incredible. Grab goes red, Coinbase goes red. Axon, they had a really good earnings, so they're holding up. AMD goes down 1%. They have earnings after the bell. Apple barely green. XLE is down. American Eagle, nasty 9% move down after the Trump endorsement yesterday. I'll see if there's any headlines. I don't think PMI is kind of doing it. It could also just be algos on a random Tuesday here. But I don't see much that could be causing some of this pain outside of algos going back and forth. Yeah, Trump didn't say anything. I think it might just be PMI. PMI services 50.1 versus 50.8, which again, is it that big of a deal? Not really. But that could be your excuse. Or, as Lee says, people are selling some of those stocks to buy Palantir. Casual 1030 slam. Yeah, literally right on time, 1030. Adobe's green. Adobe slightly green by $1. CRM, Salesforce, that's flat. Palantir, dude, she's really teasing us. I think she wants 176 again. I really do think she wants one. You don't bust through 176 that aggressively and then not visit it again, especially when we've observed Palantir's price action, you know, for about 3 years now. When it makes a new all-time high, it like every time it makes a new all-time high, it retraces intraday and then it gets back there by the end of the day. And that doesn't mean it has to close at that level, but it definitely retouches it again, especially when it happens so quick. And I feel like it wants to do that right now. But obviously, you've got algo selling it into that 175 level. So we're going to see. By the way, the short float on Palantir is 2.4%. So, you know, less than 50 million shares are shorted of this company. There's not a heavy short flow. So there can't really ever be a squeeze, but that also means there's not a lot of manipulation of the stock. And after a quarter like that, I mean, it's really hard for the shorts to say valuation is their biggest concern, because at this point, it does not seem like the market cares about valuation. And again, by the way, this whole valuation thing that we've been talking about for the past couple of days, I will add a caveat to this. You have to be a generational company for the market to not care about valuation, right? Like, it can't just be, oh, we don't care about valuation, we're buying whatever, because that's 2021 and that's really low interest rates. And the reason you don't care about valuation in low interest rates is because you're not getting a yield on your capital anywhere else other than assets. So you have to buy Bitcoin. You have to buy pictures of rocks in terms of NFTs. You have to buy Open Door that's SPACing, right? You have to put your money somewhere. Now, when you have 4.5% money market funds, you don't have to put your money everywhere. When gold is performing the way it is, you don't have to put your money everywhere. So the lack of valuation sensitivity comes when a company truly is proving itself to be a generational company, like a Palantir, like a Robinhood, which is why I think they're getting these multiples, like a Tesla, although obviously the Tesla earnings growth is not there. But, you know, if you think Tesla's a winner when it comes to robotics, AI, that obviously does make it generational. And that's why it's sustaining their multiple. But I think the caveat to valuation being less important in this age of AI is that the company has to show or give you a reason to not care about valuation. I think Palantir obviously is giving us that reason. And we're getting some momentum. We are getting some momentum. Enphase is at 31. This one got wrecked. By the way, it looks like the Paramount deal is closing on Friday. So Enphase should be kicked out of the S&P by September. Paramount, I think, gets kicked out on Friday, which means Robinhood should have a couple more chances to get in. And if they do, I think we're going higher. By the way, you guys want to know a secret reason for why Palantir going up is really good for Robinhood? This is the secret reason a lot of people don't know about for why Palantir going up uniquely is good for Robinhood. Some of you guys may know it. Some of you guys may not. But Palantir specifically going up is great for Robinhood because of this chart right here on the screen. One of the top 10 holdings on Robinhood is Palantir. This was updated August 1st. The top 10 holdings on Robinhood are NVIDIA, Disney, Ford, Meta, Microsoft, Apple, Tesla, Amazon, Palantir, and GameStop. I don't know when this stupid stock will leave the top 10 holdings for Palantir, like for a Robinhood. Like it annoys me every time I see GM either. I think there's a lot of people that bought it in 2021 and they've just never sold it. I wish that would disappear. It's not, as a shareholder, I don't want to see GameStop in the top 10. Ford is because Robinhood gave a free share to Ford to everyone who signed up in 2019. Disney, I don't know why the hell Disney's up there. The rest of them are pretty self-explanatory. But then you got Palantir. So when Palantir goes up by 10%, one of the top 10 holdings on Robinhood collectively has gone up by 10%. A lot of people that have assets on Robinhood, like myself, with all of my shares of Palantir on Robinhood going up, that's really good for Robinhood's AUC. And that's really good for their securities lending. That's really good for their options activity. If you're selling covered calls on Palantir, that's good for options transaction revenues. If you're buying or selling Palantir in general, that's good for the company. Like, it's one of those unique positions where, given Robinhood's a growth company and every asset is on their platform, and the most important assets like a Palantir, NVIDIA, Robinhood, Tesla, Rocket Lab, et cetera, are on their platform, those stocks go up. That's really good for Robinhood. Palantir 174.50. So very nice to see that an 8% move is going to be really good for a lot of shareholders for Hood. Yeah, I'm surprised Hood isn't on there yet. I'm sure a lot of Robinhood shareholders own Hood, but not enough to be in top 10. And it really annoys me every time I see GameStop. GameStop's been in the top 10 for 3 years. So is Ford and Disney, by the way. Palantir, honestly, the top 10 companies, let me pull this up. Like, I look at this every month since like 2023 when I really started investing in the company. It's been the same. The one thing that's really made a dent is Palantir. And that was about 4 months ago. I think back in February, Palantir made the top 10. Tesla's been up there for years. Microsoft, Amazon, Meta, Apple. That's obvious why they've been up there. NVIDIA recently, not recently, but like I think towards the end of 2022 got up there before it really had a big run. So that's been good for Robinhood investors. Ford, again, because Robinhood gave people a free share of Ford when they joined in 2019. So a lot of people still have that share. Disney, I don't know why Disney's up there. I think they did the same thing with Disney back in 2019. And then GameStop, because there's a ton of bag holders that are not selling GameStop, even though they hate Robinhood so much for what they did with the buy button, but they're still holding their GameStop on Robinhood. I'm just like, okay, so I guess the user experience is too good for you to move off the platform. But that's why GameStop is top 10 as well. Yeah, Google's not up there. AMD's not up there. Robinhood's not up there, but Palantir made it, which to me is pretty incredible and pretty damn bullish. S&P down 0.33%. Open Doors up 1.4. BM&R is up 0.23. Enphase up a little bit, and then Palantir just stuck at that 174 range. VG, that's down 1%. Where are the cruise lines today? Cruise lines are down. Carnival down about 1.3. And then UNH is flat on the day as well. Who was number 10 before Palantir? I have to check. I think it was another Mag 7 name. I think it might have been Google, to be honest. I have to check. I have to go back to their investor index from like March, and I'll let you guys know later. But I think it was one of the Mag 7s. But it wasn't like some weird out there name that no one's thinking of. It was, I believe it was one of the Mag 7s. Bitcoin right here, 113. So that one's down as well. That's hurting Robinhood. And then Reddit, that's up 2%. Epsilon is up a little bit. MP, that's up 2% as well. So there you go. Yeah, Lemonade up 30% today again. Congrats to those in Lemonade. Great quarter. Market loves it. It's heavily shorted. You got a little bit of a squeeze, and that's what's giving you some momentum right here on Lemonade. Ahmed, obviously Enphase has been wrecked, but do you think it's a good longer-term investment when rates drop? My answer would be no, because it's not about interest rates. It's about oil prices. So I think people are getting the story wrong on Enphase. Interest rates going down is interest rates going up 2 years ago was really bad for them, but drilling via the Trump presidency is really bad for them. I mean, literally Trump said the other day on an interview, hey, if we need to sell more oil, we'll just drill more oil. Like Trump's not that sensitive to the environmental concerns or anything like that. He wants cheaper oil prices. And who's going to, really adopt commercial or residential solar when the price of oil is below 70 a barrel and dropping? So I think the Enphase thesis on oil prices alone is kind of hard to get excited about it. I mean, really, all the money is going into nuclear. Oklo doesn't even have a freaking product. And this thing was at $6 in January. Now it's at 81. Either that's super meme-ish or that's the market recognizing that eventually these guys are going to be a monster when it comes to nuclear energy. It was $5 in September 2024. I mean, again, that's a what? That's a 15x roundabout. That's a VC type of investment return in the public markets on a company that doesn't have a product. And I hesitate to say it's a meme stock, given how connected Oklo is with the US government. Obviously, they have the Sam Altman connections as well with OpenAI, and you probably think they're going to get a ton more contracts. It's a $12 billion company. They get a couple contracts worth $2 billion. All right, they're trading at 6 times sales. It's not crazy. It's not crazy, even though I wouldn't buy it here, right? I feel like Oklo the way some people feel with Palantir. There's no way I could buy Oklo at these levels. Even though Oklo could go a lot higher because nuclear energy demand is massive and like Oklo will grow into that TAM, just like some people can't buy Palantir because they just can't justify it to themselves. So everyone has their own, personal opinion on what they can buy and sell, and that's okay. But sometimes it requires being deep into the story. And if you were super deep into Oklo a couple months ago, you might be thinking it's an idiot because he has no idea what's coming. Just like I might be saying the same around people that are fading Palantir at these levels. But that's what makes a market, right? And I think that's what is leading to some of the differences in share prices of these stocks in comparison to their competitors in the niche. Okay, Oklo has no product, but Tesla's at least building the humanoid robot. Like we've seen videos of the humanoid robot. We haven't seen anything from Oklo. We've seen like vague commitments on their earnings calls. So, the humanoid robot's going to take some time to get here, but one could argue nuclear energy is going to be more important than the humanoid robot over the next 5 years because we need a lot of energy. And Elon keeps tweeting every day about how we don't have enough demand for energy. And so that might, might be coming from some of these names as well. RKT against Citron Research. They were bullish on it yesterday. That's up 2.7%. They call it the Amazon of mortgages. That is definitely a rate cut proxy if we do get significant rate cuts. By the way, Goldman Sachs came out this morning. They said, folks, we're getting 75 bips of cuts. They are pretty damn bullish on the amount of cuts that we should be getting. They said, we expect the FOMC to deliver 3 consecutive 25 bip cuts starting in September. A 50 bip move is possible if the unemployment rate climbs further in the next report, which would not be the best thing to see, but obviously it would be something that is possible if you do get a crappy labor report, which has all but guaranteed, based on the jobs revisions, that we are going to get a rate cut. So that's what we're going to see going into the coming months, and we'll get some more updates from Goldman Sachs and JP Morgan. Pretty much all the analysts I'm reading, they're making the argument that there should be a consensus on rate cuts. CNBC update on HIMSS. Let's watch this, and then we'll keep going from there.
Let's get to Brandon Gomez with more on what's moving this one, Brandon.
Hey, Mike. Yeah, HIMSS bouncing back from session lows. Shares were down as much as 13% after a mixed quarter. Let's start with the good, and we'll get into the bounce back in just a second. EPS beat 17 cents a share versus the expected 15. The company reaffirmed its full-year outlook, not to mention the company's long-term game. CEO Andrew Dudum saying on the call that he is reiterating a bold 2030 target of $6.5 billion in revenue. But investors who were already watching for signs of slowing growth dialed in at first on the short term. Revenue for Q2 missed the mark. Both GLP-1 and core revenues slipped quarter over quarter, and Q3 EBITDA guidance came in soft. Now, I spoke to the company's CFO yesterday ahead of the call About that, he told me the company plans to reinvest in growth initiatives, namely focused on talent acquisition costs in tech, spending more in Q3 on marketing within weight loss and other specialty products to overcome some of the seasonality headwinds. Now, you add to that some more vague warnings around regulatory risks tied to their compounded weight loss drugs. And as far as fundamentals are concerned, the growth story gets a bit shakier. Bottom line here, Mike, long-term vision is intact, but near-term execution remains under the microscope. As for the bounce back that we're seeing this morning, this stock is heavily shorted with a 33% short interest. No real catalyst for the rebound that I can see beyond that. Shares, I think, are down around 3% now.
Yeah, usually it is just technical like that. Brandon, thank you. Still ahead, Vertex at the bottom of the S&P.
All right, so that's what you got on HIMS. We are seeing a decent little sell-off across the entire market. Even Palantir, 173.30, which is down from 175. There's your red candle. I don't see any headline, guys. If anyone has any headline, let me know. I don't see any headline. I think it's just a Tuesday morning and people are taking some profits. I mean, I don't see anything crazy right here. Intel's up 4% on semiconductor tariffs. Okay, so we got to get some clarity on the semiconductor stuff because Trump said he was announcing something soon. I think there's some different stuff on tariffs that we're going to see with... Oh, this is what Trump said. He said we'll be announcing tariffs on semiconductors and pharma in the next week. Now, that's weird because I heard the pharma part. I forgot the semiconductor part. He also said the tariff on pharma will go up to 150% within a year. And then India tariffs will raise substantially over the next 24 hours. Apparently that headline, I guess, is what got some of the semis to take a bit of a hit. Palantir now 172. Now you're getting some red candles across the board. Tesla 306. Duolingo down 2.2. HIMS down 4. Wow. HIMS from 64 to 60 like that. And that could be hurting AMD and NVIDIA right here. Oklo still up 6. Enphase up 0.5%. And then Robinhood back to 104.3. Dude, if we can just survive August, I would be happy. If not, thrive in it. But it has been pretty remarkable, the recovery we had from Friday. And if we can just hold on to it, I mean, we'd have to fall another 2% on the S&P 500 to get back to those levels. It would be pretty amazing to just hold on, even if we don't expand it. UNH right here, 241. Now, Mercado Libre, they had a decent earnings, but they cited a lot of issues with tariffs as well. Mercado Libre, not a very high margin business. And they are in Latin America, right? So Latin America uniquely is getting hit by different types of tariffs from the Trump administration. Brazil already has 50% tariffs, right? So you got a lot of stuff going on there. I believe they beat on the top and the bottom, if I'm not wrong. And so, yeah, no, they missed by 13% on EPS and they beat by 2%. Okay, so their margins obviously got hit on EPS. They beat by 2% on revenue. Revenue's up 34% year over year. EPS is down 2% year over year. Didn't go through the quarter, but from what I'm hearing from some of the things I've read, CEO did cite that tariffs are going to have an issue on margins. And, company's already worth $120 billion. That's probably why the stock took a little bit of a hit, recovered right here, but you're not seeing a super green candle on it. AMD's tanking big. AMD is down 2%. Is NVIDIA also down 2%? NVIDIA's almost down 2%. Yeah, now you are starting to see some red across the board. I don't see the reason for why. It's August and it's a Tuesday, but there's not any sort of fundamental reason. Maybe Trump's thoughts on tariffs on pharma semiconductors, but it's happening at 10:45. He said that back at 7:55. So it feels more algorithmic and random to me versus reacting to Trump statements from 3 hours ago. Palantir is still holding 7%. I mean, now we're going to see based on these red candles, do buyers come in? Do they take advantage of this? These are obviously algos that are selling it off based on what the rest of the market. Maybe some people come in, maybe not. But if we can close above 170, I would be very excited. SMCI, that one's making a move. SMCI, yeah, that one's down 2% as well. I mean, look, it's also one of those things where, again, we had such a massive recovery on the S&P 500. Like literally we recovered everything within less than 24 hours from Friday to Monday. So now we're playing this game of give and take. Now we're giving back 0.5% of that. S&P down to 627. And it's going to be a conflicting game of narratives that go back and forth, because the earnings narrative's incredible, right? That's propping up the market. Labor market narrative, not incredible. That's taking down the market. Rate cut narrative, that is incredible, because now the labor market being bad means we get rate cuts. But if we're getting rate cuts because the labor market continues to be bad, is that actually good? Like, all these narratives are going to be going back and forth with each other over the next 30 days. And that, I think, will lead to a lot more understanding of price action. Yeah, the VIX up 7% as well. The VIX up 7% as well. Thoughts on the bullish IPO? I will not be buying it, but Peter Thiel's crypto exchange, it's backed by Peter Thiel, is going public, $4.2 billion valuation. I just have no idea what the company does. I've never even heard of bullish ever. So yeah, I'm not going to be asking for an allocation to that. Could it turn into a meme stock? Sure. But Figma, the reason I asked for an allocation is because I know the company. And so, like, I theoretically was interested in the investment, especially because Figma's a very high quality company. Bullish, dude, I have not, maybe got to do some more research, but I have no idea why this company is going public. Quite frankly, it feels like a liquidity grab. I don't think they need to go public at a $4 billion valuation. That's not even, like, most companies at that stage stay private. So the fact that they're going public to me is a little bit of a red flag in terms of they're just trying to raise capital, which is fine, but I don't want to be part of that in terms of them raising capital. But the name is bullish. So, I mean, you're probably going to have Wall Street bets take it up because it's bullish. So, yeah, I will not be participating, but I could see it getting some momentum. And if I do participate, I don't even know if I'm going to get an allocation. Again, Robin, it's so random with it. So the annoying thing about getting one share of Figma is I want to sell it because I just don't want to see it on my screen. But if I sell it, I'm banned from IPOs for the next 2 months. So I'm like, I want to sell this because I just don't want to see this one share stock in my screen. But if I sell it, I get classified as a flipper. So I'd rather, Robin, to just don't give me any shares if you're going to give me one share. Like, you know, people say I don't critique Robinhood. Here's a critique. Give someone 100 shares and give the other person 0 shares. Don't give 100 people 1 share. Just so you can be inclusive and say that you're democratizing it. Like, no, that's bullshit, dude. Like, just let one person make some money instead of 100 people get 1 share that they're not going to be able to do anything with. So I would really want them to change how they allocate the IPO stuff, because it's just not, I don't know. To me, it was kind of weird the way they did it. Kris Patel, good morning. How are you?
Good, man. Just watching the markets. You know, I'm waiting for some triggers to happen. I think my portfolio for the ETF thing is going to do very well next year. Yeah, but for now, it's underperforming everyone, which is not fun, but it's okay. I got my hat back, so that's a tailwind for me.
All right, so let's get your thoughts on the obvious story of the day. Palantir up 7%, $405 billion market cap. What did you think of the quarter?
I think this is a classic Cisco in 2000 event, you know, where everyone is like really hyped on a new technology and a lot of companies are exploring it. And so you're starting to see all these deals come up. And I'm sure a lot of companies are going to benefit from it. But at some point, I think the growth is going to plateau. And I think at that point, people are just going to say, wait a second, like multiples matter again. So I agree with Brent Thill on that part. But until that slowdown comes, Palantir is going to get a very premium in terms of valuation. So it doesn't fit into my framework, but I'm happy for all you guys for having it. The real question that I have for you, though, because I know every time we talk, you keep asking me, Kris, when are you going to buy? My question to you is, when are you going to sell?
Why would you sell?
Why would you sell? Why not take the money and recycle it to where it's supposed to go, into other things that have value?
I bought more at 169 today in the morning.
I know you did.
Kris, I think there's a different paradigm here. I feel like doubling down on the things that work is a form of investing that seems to have worked over the past 100 years versus getting in and out and try to find the next undervalued opportunity and missing out on a generational company. Like, I think you would agree it's not the best thing to sell a winner, to try to find another winner.
So this is exactly the trap that my dad fell in. I told you, in the year 2000 with Qualcomm. You know, he was doing really well on Qualcomm, and instead of saying, you know what, the market's frothy, he didn't know what frothy was at the time, by the way, you know, so I don't blame him. But he said, nah, he's going to double down. You see, so that's the thing. When you get too much confirmation bias, it ends up putting you in this position where you just think that the company that you have can do no wrong. And that's the thing. Like now the expectations have been set really, really high for Palantir. And that's the unfortunate reality. When you have high expectations, you run the chance of missing out on them. And the question to you is, do you think that they can sustain a 50% growth rate for the next 10 years? Because that's what it's going to require for the multiple to, for the valuation to get justified.
Well, so look, based on what I saw yesterday, I don't know if it's going to be 10 years because obviously very few companies have been able to do that. If there was a company that could take on the massive TAM that is AI and compound it, let's not say 50%, maybe 35, 40, a little bit more reasonable from there, then yes, I think it would be Palantir. The broader question is, even if they don't do 50%, will they continue to get a multiple that is as aggressive as they're getting right now, independent of purely 50 to 60% growth, whatever the metric is? And I think based on what we saw yesterday, the answer is yes. And I'm not just talking about the operating margins or the leverage they have. I'm talking about the qualitative things they talked about, where a hospital had a 1-month trial and then the next month says, we're going to sign an $88 million contract. Like, you're not seeing a lot of companies do that. Now, obviously, the byproduct of that as investors we care about is numbers.
Wait, did you say $88 million contract?
Yes, total TCV, total contract. I don't know how many years. That might be 5 years or whatever, but
what hospital is spending $88 million over how many?
I don't know. Go listen to the earnings call. That's what they say.
It might be. Was it?
I don't know. They said it in
the. It might be a network. It might be.
Yeah, it might be a network. Exactly, hospital branch and network.
Yeah.
But the point is, when you're hearing that type of stuff, and then you realize they only have 850 customers, it begs the question: if they have 8,000 customers one day, of course they might not keep growing at 50%. But if they're anywhere near 30%, 35% over the next decade, they're probably going to keep getting a pretty high multiple.
Cisco had the same thing, man. Cisco's like, we sold this many routers to this many clients. And it's not that the internet wasn't going to be a big thing. But like I said, eventually you run out of clients, you run out of customers. And then, things start to kind of just slow. It's just, look, it's the law of big numbers. You can't escape it. Unless you start going into like other segments. But then again, what do I know, man? I'm not in it. I haven't researched Palantir nearly as much. I do, however, I have been researching a lot of UNH. And one of the things that I have found out is that a lot of managing directors from Palantir have moved over to Optum at UNH. Did you know that?
I didn't know that, but I'm just saying, bro, I don't like Palantir is generational. UNH is undervalued. And that's the difference. And so your paradigm is, let's find something that's undervalued. But I think over the next 5 years, and UNH can still do very well, obviously, because it's so undervalued. I think over the next 5 years in this AI world, what's generational is going to win. Like, Weeble's not the winner. Robinhood is. Snowflake's not the winner. Palantir is. Like it's like the competitors to these companies that are just second class to these companies are why these companies are getting the premium.
I mean, they're still doing well. Like, Snowflake's what, at like 200 something right now, right?
Yeah,
it's not like
if you bought the IPO, if you bought the Palantir IPO, you're up 17x. If you bought the Snowflake IPO, you're up 20%, I think.
Yeah, but I'm saying, like, that's the thing about investing with value, right? You find things at a more reasonable level, right? And then you buy them and hold them.
Okay, but what if value is not value the way you're thinking of it, like Buffett, but rather a company can automate something in 6 days versus 6 months type of value?
I mean, that's going to be the eye of the beholder, right? Everyone's going to have their own thing. Like, some people may love Palantir, and if they like it, they're going to keep going with it. My thinking is eventually the growth is going to slow. It's the law of big numbers. It's going to be harder and harder to keep up with the growth. So like right now you go from, what is that? What are they doing right now? $1 billion a quarter, right?
Yeah, roundabout.
That means that they have to do 500 million of additional contracting next year. And then the year after that, if you want to keep again, then you've got to do what? 175?
But why do you believe they can't why can't they do that given the quarter they just showed us?
Because I think we're still very new into this AI space, but eventually it gets old.
But isn't that the point? If the entire world is discovering AI and Palantir is like literally on a handful of companies that can actually help you implement AI, governments or enterprises, Why wouldn't they take this?
That's your understanding of it. I don't think that that's the case. I think there are other people out there.
No.
It's
not, no. Hold on. This is not subjective. What other company is growing 45% with 45% operating margin?
I'm not saying. Look, I'm not saying that they're not growing 45%. I'm just saying other competitors out there, they're probably going to do some similar things, and eventually that's going to be a headwind against them. So we'll see. Look, if you ask anyone, a lot of the stuff that Palantir does is off the shelf stuff also. Okay, so there are other companies, they see the value of doing all this stuff. Maybe Palantir's got first mover advantage, which they're clearly moving right now at a very brisk pace, but eventually other companies will catch up to it and they'll start offering products at more reasonable prices, and that'll probably slow Palantir down. I'm not saying it's going to kill them, but it'll slow them down. And like I said, the valuation multiple right now is just so high that you're setting up with just a lot of expectations, and any mention of them not living up to their expectations is going to create what Brent Dill said, which is a multiple compression. And I mean, dude, you've got a PE of 575. Like, it's pretty pricey.
I get it, but also when I hear Karp talk and say, tell the haters, like Karp is not going to. So when Karp banged the table in 2022 and everyone gave him a lot of shit for that, it's because the quarter was horrible. He knew the quarter was horrible and he was frustrated. And he banged the table. I don't think you tell CNBC your quote after the earnings is tell the haters, read them and weep, if you're not pretty freaking bullish that you can keep this going. Because otherwise,
sure that's hubris, not confidence.
No, I disagree. I think like, dude, I don't. Karp, people assume he's arrogant and cocky. I think he's one of the most humble people ever, but that humility is now being shown through the results, and that's why he sounds arrogant. I don't think
it's confirmation bias that, it's working for him. So this is the thing. You can start off being a very humble person, and then you get enough string of victories. You become, you change, you turn into somebody else. And I think that's what Karp is. Karp just sees the stock price going up. He sees the
I think you're reading, but this is where I think you're reading it the wrong way. Every software company has propped up their entire enterprise on, quite frankly, a load of shit, steak dinners, PowerPoints, all this stuff that makes them quote unquote valuable. The most humble thing you can do as a software company is say, we don't get paid until we provide value. That is what I mean by humility. And then you get to brag about that, because when you actually deliver value and you put up the results that you bring up, then you can say, hey guys, read them and weep. We did the humble thing for 20 years, which is build a product, not build a sales force that spends money at Peter Luger's to get people to buy our software. And as a result, now we get to brag about it. That is why I think they're so arrogant.
So you're saying by saying, let the haters cry, you think that's a humble quality?
Yeah, because I think you're misinterpreting humbleness. So when I say let the haters cry, is that statement humble? No, obviously it's braggadocious. But what it took to get to the moment where you can tell the haters to read them and weep is filled with humility. Because I don't know what's more humble than saying, don't pay us until we prove that we are so valuable that you have.
So you think that they're the only company that does that?
I think they're the only company growing at 45% on the top and the bottom line in the age of AI that is able to get away with doing that because of being the type of force that they have in regards to their software. Like, I don't see Salesforce growing like this. I don't see Snowflake growing like this. I don't see any of these companies. And I know they're bigger companies, but at the end of the day, if the Wall Street's paying for growth and that growth's not there.
Brother, you could do everything in your power to justify this to yourself, but trust me, I see right through it, man. Even this valuation is definitely getting you nervous,
No, it's not. I've not sold a single share, and I'm not, dude. First of all, if I get nervous, I just sell covered calls and I collect premium. So that's how I kind of manage the volatility. Number two, I genuinely think you're missing the story again after this surge because you're upset that it's going higher and the valuation doesn't make any sense. Like, I think you're missing what they said on the call yesterday.
I think one day, and I'll call it right now, one day you will be buying this at $40. You will be averaging down, not averaging up.
Can we bet on that? Can we actually have a real bet? Like a gentleman?
No, I'm not betting anymore. I lost too much money. This company has cost me way too much in both mental anguish and actual betting.
I will legitimately bet $25,000 that in whatever 5 years that doesn't happen. You got to give a time frame, right? What's your time frame?
5 years? I'll take it. That's a bet I will take. 5 years from now.
25. I mean, I'm down, dude.
25K.
So you're assuming what 173 to 40 is what, an 80% decline? How much is that?
What is that?
173 minus 40. That would be, about About 75%. Half would be 173 divided by 2 would be 86.
So let's do 50. Let's do 50 then.
No, you said 40. I'm not doing 50. You said 40.
No, I'm saying let's do 50.
Why are you adjusting it then? Why are you adjusting it? No, forget that. Why are you
I'm just saying it's what is it, a few points if it's never gonna happen.
No, but then you see, this is my thing about throwing out these arbitrary price targets. Why are you throwing out 40, 50? And we're just joking.
I'm just joking about it, but I'm saying if you really want to do it, let's do 50. Come on. I mean, look, you're super confident, right? So 25K.
Why is it going to 50? Explain that to me.
I don't know. It could go to 20. It could go to 70. I'm just saying. I think 50.
But Kris, when you put out a statement,
it's a nice round number.
You're a serious
nice
guy.
round number.
People listen to you when you say no, but you can't just say it's a nice round.
I'm not. Look, you know me. I'm never one that's like, oh yeah, I'm just gonna chase an exact price. Like I can't determine the exact price, right? I will say this though. Why not? If you have that much confidence in this company, why not 50?
Dude, we could do 50. I'm just trying to get to the root of
so let's do argument. 50. 25K in 5 years. One day, if Palantir never gets below 50, listen, you get 25K. All right. And if it goes below 50, you got to call me up and say, hey, Kris, come collect this money. I will come and I will enjoy that.
The good thing is in 5 years, hopefully we're both rich enough to actually be able to put up 25K.
Yeah. So let's do it. Come on.
We can do it, dude. We can do it
right. All right. There we go. Brother, I am with you. All right.
So for 5 years, what's August 5th? We are such freaking, this is such a freaking dick slinging
degenerate
2030, August 5th. If it doesn't hit 50 in those 5 years.
Shit, I was going to buy some put contracts on Palantir, but shit, you just saved me, bro. I got a 5-year put contract on Palantir. Yes, I will take it. Thank you.
Here's my thing, Kris. To say it's going to 50 and to say that all the value evaporates. I mean, if there's a macroeconomic headwind that causes it, sure. And I think the caveat to the bet should be that it has to be independent of the market. Because if we have a recession, like, I don't think anyone can be responsible for that, right? If you have a recession, everything's going to take a hit. But if Palantir,
I mean, like, what's your idea, like, in terms of like a recession?
If we have Liberation Day and Palantir goes back to 50 like it did back in April, I don't think I should be culpable for that because then it rebounds with everything else. That's not really that's not a bet on the stock.
But then how would you judge that though?
It's pretty freaking obvious. Either Palantir goes to 50 by itself while the if the S&P is not down 20%, but Palantir is down 80%, I think it's pretty obvious.
Okay, I'll take it. That's fine. We'll take it. So basically the S&P from today has to be down 20 plus and Palantir has to right?
It's not exactly. It's not the metrics are not the. I think, dude, it's like we'll know it if we know if it's a macro thing. You know, it doesn't have to be 20% on the S&P. It could be 15% on the S&P, and I'll still give it to you, right? Like it's
okay, fine,
25, whatever it is. My point is,
no, you got to have a baseline with the S&P though.
My point, no, you're getting too specific. If we have COVID 2.0, obviously then.
Right, but then S&P will be below 20%, right? In which case Palantir will be down more. That's the question. So here's the thing we could do. Okay. And I think this is fair. If Palantir is lower than the S&P 500, right? By let's say half. So I'll give it to you by 25%. So basically if the S&P 500 falls 25% and Palantir is, below 50, you get it. You win. I mean, not you win. I win on that one. No, I mean, you win because I'm not going to hold you to that. If the S&P is down 25%, bro, there's no way in hell Palantir is not going to be down. So I grant it to you.
That's my point. That's my point. If the whole market.
Right. So basically, we're not going to consider that a Kris win. Basically, we'll just ignore that. That's like,
it'll be a wash at that point. Yeah,
it'll be a wash. Okay. And if Palantir does drop, but S&P stays above 25% drawdown, that means that you lose.
Yeah, exactly.
Okay, cool. This is good. And we have until 2030, so 2029.
Do we got to sign anything, or where's gentleman's bet? We're good for 25.
It's a gentleman's bet. Come on, man. We're not the type that would Welsh on each other, right?
All right, because I'm taking your 25 and I'm buying Palantir at 300.
By all means, take it. Take it. I'll give it to you. I don't Welsh on my bets. I've paid everyone. I've paid TJ. I've paid Adam. Actually, I paid Adam half, and then he's like, "Hey, bro, you still owe me the other half," and I forgot about it. I was like, "So yeah, I paid Adam the other half too." So everyone gets paid. I live up to my bets.
Yeah, and look, this is a friendly bet, but my issue is the confidence you have that this thing will fall 80% to me is why I'm taking the bet. Because I don't see that type of a decline in the next 5 years based on everything I've been seeing on the progress of the company. And your ability to like be that confident, that's surprising to me. Like, what creates that level of eager to say, nope, this thing's going back to 50?
I'm telling you, I've seen it. I saw my dad lose his shirt.
But what? But dude, hold on. The .com bubble. Why are you comparing that time when Pets.com was going public to a company that just did $1 billion in 90 days? Like, how is that remotely comparable?
Because it was all about valuation. Because Cisco was making money at the time too. Cisco was making money hand over fist at the time. Qualcomm was making money hand over fist money at the time. So it's not just like, oh yeah, this is like some kind of pre-revenue company that everyone's just bullish on to be bullish on. So forget this whole notion that you have to be at a point where you're not profitable to have your stock go down such a significant amount. That's the key. Ask anyone right now. Go look at the charts on Cisco, what their growth rate was when the whole thing with the .com thing happened.
Compare it to, dude, Cisco was building infrastructure for the internet, and then the internet happened. Palantir is not even building infrastructure. This is more believable when you say NVIDIA Cisco, even though I think that's not true. But because eventually people might not have to buy more GPUs, right? The build out stops. But Palantir
slows down. Yeah.
Or slows down. Palantir's TAM is using these GPUs to deliver value to what could be hundreds of thousands of clients one day. They're not going to keep growing at 50%, but that doesn't mean they have to come back down to what would be a $50 price target, assuming they completely collapse in terms of their growth rate.
And what would be the market cap
$100 billion.
$50?
$100 billion.
No, wrong.
110, 115, round about.
150.
150. Yeah, right. Because they have 2.5 billion. Yeah, 150.
Yeah.
So you would be assuming then that the market would not be willing to pay 150 billion for a company that's growing what it looks like is 50% for the rest of the year, and then 50% in 2026, and then going to 27, 28, 29. Let's say that goes down to 35%. I mean, Kris, for this thing to go back down to 50, even if they don't grow 45, 50% in 28, 29, 30, I just think you just.
I think you should ask the chat. Let's see. I mean, you have a lot of people that love Palantir, right? Ask the chat. Who do you think wins this bet? Let's see.
I mean, look, there's definitely people that love Palantir. There's also people that agree with you. Let's ask it. Yeah. Who do you think wins the 25K?
I hope everyone says you.
I mean, dude, look, I said 25K because I'm pretty damn confident. The fact that you took the bet means that you're pretty damn confident that this thing will see $50 a share from 174 today over the next 5 years, independent of a recession or a macro event. And
yeah,
I think you're undermining the deep liquidity of the markets. The fact that this thing this is traded, this is the number 5 stock traded every day in the options market. If this gets anywhere near a 10, 20, 30% decline, you're going to have a lot of buyers coming in. I mean, like you're discounting all of that for your hatred of the valuation.
I'm telling you right now,
not the company, but
I've seen this happen to my dad. And this is the exact thing, the repeat. Like, I feel like I'm going back 24 years and living this over again.
I think you're using what happened in the past in a weird way.
Yeah, because I learned from my past, brother. That's what happens. You learn from your past.
I don't get it. The past is great for lessons, but I feel like it's not the best comparison here.
You know, the other thing that you failed to mention, which I thought you would, is that they do have $6 billion in cash. That means that if it starts to go down, they have some capital cushion to basically to keep their stock from going down as much, right?
Yeah, which is why I don't get why you just decided to give me $25,000. Like, I
guess we'll see.
I'm not forgetting about this. I will ask for and you same for me. If it goes to 50, I will man up and give you the 25K. We're big boys now. We can afford it.
Yeah.
But like, I mean, in 5 years of this.
Listen, I told you I was gonna buy some puts on Palantir anyway. So this ends up saving me the trouble and the taxes, hopefully. So, you know.
All right, well,
yeah, fun time. All right. But let me get back to the other point real quick. There are other companies that are going to benefit significantly from the AI wave. And I think that's the next investing thing that you should be focusing on if you really want to get some real alpha. One of the things is healthcare AI. And this is not saying, oh, UNH, like that's why I'm like trying to talk about it. No, like there is a lot of practical applications within the healthcare space that AI can actually do really, really good at both increasing patient satisfaction, lowering times of care, and lowering the cost. I mean, literally, there's nowhere else I can think of I mean, maybe I'm a little bit biased because I work in healthcare, where the quickest bang for your buck in AI is saving people's lives and saving the cost of saving people's lives. And I think that's one of the really commendable things about Palantir, that they're so integrated within the healthcare area, and they're pumping that, right? They're really putting a lot of work into that. And you're seeing the same thing with Microsoft. You're seeing that with Oracle. Like, do you know what Cerner is?
Yeah. Oracle bought them for like 22 billion, right?
Right. But do you know what they do?
They are an integrated healthcare ecosystem. I think they have a lot of hospitals underneath them.
They are the second largest EMR, so EMR provider, so electronic medical records. So there's so much data that gets pumped into those EMRs, and the applications for AI are so vast, both from just a cost savings perspective, but then also from a billing perspective. So I'll give you an example of something that, because I'm interested in UNH, I was reading and something else. So one of the things that happened was the CMS made some coding changes saying, hey, you have to code patients a certain way. And if you don't code them a certain way, you don't get reimbursed a certain amount of money, right? If you had to do that manually, you'd have to hire a whole bunch of coders to go through all these charts, patient charts, and they have to look for all these diagnoses and clinical codes and update them and put them into the system. And so when you got reimbursed, you were getting reimbursed based on those codes, right? So basically every patient got something called a risk score. Well, with AI, you could do that shit automatically now.
But Kris, that's the bull case for Palantir. They're doing so much of this shit in hospitals. Tampa Bay General, that's one of their biggest partnerships. Like, how is that not bullish Palantir? Like, even you're bringing up but you bringing up healthcare AI obviously means we should be looking at healthcare opportunities as an investing community. Why is that not Palantir?
Because you're just talking about one software vendor that's super overvalued. I'm saying, look, let's find the other companies that are within the space that are going to benefit from that. That's what I'm trying to tell you. And I'm not just saying that,
what company do you have any in mind, or?
Well, that's the thing. That's why I'm doing research right now. There's a lot of companies that are not public yet. They're all like semi going into public space, but they're not public yet. So like, here's an example. There's this Israeli company that I've worked with in the past, where basically they take radiology imaging and I think I've spoken about this before. It's called AI Doc, where basically if a patient gets a stroke, those images go to an AWS, what is it called? An AWS bucket. It goes through an AI and machine learning algorithm and detects whether the patient has a stroke or not before the images even get to a radiologist for a radiologist to read. And the reason why is because the faster you can detect a stroke, the faster you can alert the OR and let them know this patient is coming. And it literally can save a patient's life, and also in the long term, save them from any mental deficits if if they have a stroke and you can intervene quicker. Now, why is that important? Because that company is building other products that are going to be utilized in other parts of the industry. And I think that's one of the keys that you're seeing. I would say if you want to make a lot, like good money right now, you buy these great companies. You buy the Palantir, I guess. If you want to buy CrowdStrike, you can. The question is, where are the companies that are still going to be going public right now or within the next couple of years that are going to be so niched out within the one secular space that no one is going to know them, and they're going to absolutely kill it, and there's going to be like a 10x return?
The only one I can think of is Tempest, that is actually public, that's dealing with that
See
stuff.
what I mean?
But again, you're talking about these Israeli startups. Like, none of us have access to that. So to me, the question becomes, where can we deploy capital? And everything you're describing sounds like Palantir to me. They've been doing a lot of stuff with ERPs in hospitals. I mean, like, maybe UNH if they have a whole AI angle to them as well. But like,
they do, but it's not nearly as lucrative as finding someone so young before you can get them. Like, what? Look at the stock price when CrowdStrike came out, and look at it where it is now.
CrowdStrike's actually a really good example. Again, bringing it back to Palantir, this company has been the most expensive. The last time it got cheaper than the IPO was when they had the Y2K event in July of 2024 with the Delta Airlines stuff. They have always traded at a pretty aggressive multiple.
Literally $20. And you know what's funny about this? I was using CrowdStrike at work without noticing. We have something called CrowdStrike Falcon on all of our PCs. It runs super light. You don't know it's there, continuously updates, blah, blah, blah. I just never thought, hey, this could be something that's gigantic. And I completely missed on it. Like I didn't even follow Peter Lynch's model that time. Another one that I missed because I was just not paying attention, ServiceNow. I actually was part of the organization when they first got ServiceNow, when we switched over from like I think SailPoint or something, and everyone loved ServiceNow to no ends, and I never bought them, and I regret it till this day. So that's the thing that, like I said, you have the breadth right now to speak to a lot of people within an industry, and I think that's something that you should use as your network to alpha to get in very early into these things before anyone else does. And now you can even go into the private markets, which is actually nice because you're an accredited investor.
Yeah, that's a fair point. In terms of the broader macro rate cuts, how do you think this plays out? Okay, so here's the question. Do you think the labor market weakening is good for rate cuts, or do you think the labor market weakening is eventually going to be bad for the economy, even if we get rate cuts?
The onus of rate cuts typically means that there's something going wrong. And the thing is, most of the time, the rate cuts, they're not going to have an immediate impact. It's not like, hey, unemployment is low, let's do rate cuts, and boom, everyone's like, yeah, let's get back to hiring again. Usually there's like a lag between the impact of the rate cuts and then how the economy responds. So I think one of the reasons why the Trump administration wants to do rate cuts sooner rather than later is because they see the economy deteriorating. They see the impacts of the tariffs. They see the impacts of the ICE raids, and that's data is going to eventually make its way into the ether. So you want to kind of head it off at the pass beforehand. So imagine trying to be reactive versus proactive, where the Fed is being reactive, Trump is being proactive. So every time I see Palantir get on Twitter and start blasting Jerome Powell, I'm like, bro, he's seeing something, and he's seeing something bad. So that's the other thing too. Like Powell is going to be very methodical with how he does things, and he needs to see the data before he's gonna react to it. So, and then you have data like this that comes out that's all over the place. So
how do you think August plays out then? Because I agree. Some data was good, some data was bad. Like we recovered the S&P 500 losses from Friday within a day, but now we're back down to half of those losses. Like, where do you think August ends up playing out?
See, this is the thing. In this current environment, no one knows. I mean, we've never had a situation like this outside of Smoot-Hawley, where tariffs have been put on, taken off, put on, and then it's like now you're going after other industries. Like, so this is the next big one that Trump is going after. And this one I actually support. I think Trump is doing the right thing, doing MFA with the pharma companies. You heard about that, right?
Yeah.
Yeah, the most favored nation thing. Because right now, our pharma, like when we pay for drugs, we pay in like 4 times, sometimes 5 times, even sometimes 10 times what other countries are paying. And I'm not talking about like India or China or something like that. I'm talking about like Europe. Other industrialized modern global economies paying 3 to 4 times less than us. And the justification that the pharma companies that are using, they're saying, well, if you guys don't pay the high prices, that means that we won't be able to innovate. Okay, use that argument. But on the other hand, stop buying back your own shares. Stop giving dividends then if you care about innovation versus your bottom lines.
Right.
So I think the pharma companies for the last 20, 30, 40 years have basically milked the U.S. taxpayer and done a lot of innovation. And I mean, the U.S. taxpayers benefited significantly from that also. Remember, we still have the research facilities, we have the scientists, we have the jobs, all the stuff. It's just at some point, the U.S. can't be the only one that pays so much for this innovation that benefits everyone. So I think Trump is right to say that we need to make the system a little bit more fair. So if it means, hey, Americans pay a little bit less and the Europeans, the Japanese, the South Koreans, and the Chinese pay a little bit more, I'm all for it.
I actually don't hate that idea either. I think it makes sense.
Yeah.
I don't know what implications it has for J&J and Pfizer and Moderna, but I think it obviously makes sense long term.
I mean, the thing is, this would put pressure on them to be more aggressive with the people outside the U.S. instead of just always coming at us and doing list prices for us that are like egregious. So like if you look at Manjaro and Wegovy for these GLP-1s, they're blockbuster drugs. All right, they work. They're amazing. They work. And they have huge clinical benefits. But US taxpayers, if you wanted to get it from your doctor, the insurance companies gets billed $1,000. If you get it in Europe, I think it's like a couple of $100 or something like that. It's a crazy difference between the two. So all Trump is saying is, hey, listen, stop charging US patients $1,000, charge them like $750, and stop giving the Europeans $100, give them like $250.
Right.
Like, make it just a little bit more fair. And I think the pharma companies, because they're always they want to make money, it's not necessarily that they're going to sacrifice their margins completely and just say, no, we're not going to innovate anymore. All they're going to do is just be more heavy-handed with the countries outside of the US, which is totally acceptable to me. I don't mind that.
I think it's fair. I think hopefully we'll get more deals over the next 30 days. And Switzerland's flying to Trump today to talk to him, the president of Switzerland.
The one disappointing thing, though, and I really hope the Republicans don't fuck this up. You would think that Republicans would be behind Trump on this one, right? But most of the Republicans are bought by a pharma lobby like there's no tomorrow. You know who's actually supporting this like there's no tomorrow? The Democrats. Go to Ro Khanna and watch his speech about MFA, because Trump tried this in the first administration, for the first Trump administration, and he got blocked, and the Supreme Court blocked it. And so Ro Khanna said, listen, let's actually codify this by making this a legislative thing so that, the courts can't block it, because that's the law of the land.
Yeah.
U.S. capitalism is paying for European socialized healthcare. Yeah. I mean, dude, it's the same thing with the military. The U.S. did all the protecting for the last, 50 years since the Berlin Wall, not 50 years, like almost 40 years since the Berlin Wall came down. Right. And so they get socialized everything, and we end up having to send, our sons and daughters to protect them. Like, we're not saying that we're not going to protect you and we're not going to help defend Europe. By all means, it's our, you're our friends, but that also doesn't mean that you spend less in the military and you spend more on social services while our citizens have to pay more in social service, and we have to take on debt, by the way. That's the other thing. We can't afford the debt forever. So I think in that regards, Trump is making the right moves. And here's the thing. I hope the Democrats actually support him on this one, because there are times where people have to cross party lines for the benefit of the country. I don't know a single person that's saying, no, we shouldn't have cheaper medicine in this country.
Yeah. No, I agree. And I think that's why we got the deal with Europe. And ultimately, Trump is using a lot of the leverage that we had to start getting unlocked. And that should be creating some momentum. Chris's Twitter right there in the chat, putting it here. I don't see any news on UNH, guys. We are getting a 3% move. Nothing I'm seeing yet. UNH is the number 2 talked about stock on Wall Street Bets, though. So you do have a lot more people coming into the name, and maybe at these.
Bro, I've been trying to tell people that, see, the value proposition that so many people miss out on UNH is that they think of it nothing but an insurance company. And if you understand their business model, Amit, this guy, Stephen Helmsley, he set this business up so freaking nicely, where imagine right now you have Geico, and then Geico also owns all the car repair shops. So every time a car gets into an accident, the insurance sends you to their mechanic, and their mechanic now is getting paid. So you get paid when you go see the doctor. You get paid to pay them to go see the doctor, and they're making margins on both sides of the thing. They have a technology arm that sells software to other insurance companies. Optum is where people should be looking. So right now, everyone looks at United Health and they're thinking, oh, I'm just looking at this one company. I'm looking at what is the thing called? Like the insurance company. And I'm like, no. That insurance company only has 3% margins, maybe 4 at times. But if you do a blended margin with their other businesses, their software and insights division does 20% margins and grows at almost I think 10, 15% per year. They have a PBM business, which is the pharmacy benefits manager. They have, what's that called? They have I think 4 to 5% margins. And I'm talking about $100 billion in revenue on 5% margins. That's $5 billion in operating income. coming in from just one division, you know? So there's a lot more to UNH than people think. And it's something that I think if people really dig into and do the research, they'll see. And the thing is, a lot of people are really down on the company. They see the investigation behind it and everything else. And there's definitely, you know, if you get to a certain level of like, you know, size, bro, you're going to be investigated. I mean, you know how many times you remember when Sham was brought up to Congress to say, oh, did Palantir help with Cambridge Analytica?
Yeah.
Remember that bullshit?
Yeah.
Like they're calling Zuckerberg, like, oh, what did you do? Why did you sell the US data to like outside companies? And then you had these idiots over in freaking Europe, in the UK, trying to sue Palantir, saying that they're gonna sell, like, I don't know, NHS data to people. Like Palantir's like, we don't even care about your data. Like, why do we give a shit? Like, what do you think? You know, you think we make money? Be like, who am I going to sell this patient data to? Like, no, it's dumb. So I think a lot of stuff, when you get to a certain level, you become an easy target. And unfortunately, you just have to deal with the litigations. And, you know, I'm sure that some of the stuff that they're saying about some of the practices on UNH might hold some water. But from what I'm seeing, not necessarily the case, you know. Like, yeah.
All right, Kris.
Yeah.
Chris's Twitter.
I'm gonna get back with Sam, and I'm gonna do another episode with what's it called, on Hidden Edge, and do like an entire maybe 3-hour, maybe 4-hour breakdown of UNH. Because I mean, there are just so many layers to this thing. It's like, and you have to just keep peeling and peeling to help people understand like why this company has been one of the best returners for the last 20 years. Okay, this company has compounded at 15% to 18% EPS growth for literally 20 fucking years. Selling at a 50-60% discount to intrinsic value.
Look,
You know?
I get it. They're undervalued. I get it.
Yeah.
I mean,
Yeah.
the question is just now, you know, how long does it take for them to recover? But I agree with you. I think most people
That's a
agree.
good point.
It's undervalued.
It's not going to be a V-shaped recovery. If anyone here in the chat is thinking, hey, UNH by next Tuesday is going to be $400, you might want to take a step back from that. The business is in transition. It's going to do its thing, but it'll get there. This is not meta of 2022 like a lot of people on Twitter are saying, but it could get to a very healthy level that sees anyone investing right now making good money. You know, so, and that's what I like to look at. You know, trust me, I'm already getting so much shit like, why are you talking about UNH so much? And I'm like, bro, I talked about Carnival, you know, and everyone gave me shit about that. But once you get to deep diving into these companies, man, it's a very interesting thing. So, yeah.
All right, 25 grand is on the line. 5 years. You all heard it here. Palantir has got to beat $50 at least once.
You know what? If anyone from Palantir is watching, like Chad or what's his name, Iliano, if you guys want to get in on this, I'm
Kris,
for it.
They're employees. They literally legally cannot even think of entertaining a bet like that. That's not even possible.
Why? Why can't? Well,
because they're employees. They can't bet against
right.
someone publicly about
You're
the
right.
stock
You're
price.
right.
But
you're right. You're right. That makes a lot of sense. I didn't think about that. But if they,
but I can bet on it. And so the terms are August 5th, 2030. If Palantir hits $50 at least one time within the next 5 years, and the ramifications are the 20%, 25% drawdown on the S&P. If that happens, then Palantir, you can't blame Palantir because it's a broader market swing. If it's independent of, if it's like 5% on the S&P, but Palantir is down 80%, then you win. So
yeah. And if Iliano, you're watching, what about a steak dinner? Take me to one of those, because I'll be there watching as you fucking have to pay for my steak dinner. That's what I'll do.
You know, you talked about Carp being arrogant. I think it's a little cocky to think this thing's going to go down.
That's true. I do need to humble myself a little bit. You are absolutely
correct. Now, 5
years
years is a long time. Anything could happen in 5 years, so I could be wrong as well. But
yeah,
I'm a bit more confident we will stay above 50 over the next 5 years.
You know, one thing that's in your favor, I've had to eat more humble pie in the last few years than anyone else, because I haven't won a single bet when I've made them against anything Palantir related. Always lost my bets. So you've got that working for you.
Yeah, I'm gonna take your 25K if I win, and I'm just gonna
by all means.
That's all I'm gonna do. I'm just literally gonna I'm saying it right now. I will literally take that money and just buy more Palantir.
I got time. I got time. I better buy some more UNH right now so I can pay for your Palantir bet.
All right, Kris. Thank you so much. Kris's Twitter in the chat. We'll talk
Later.
to you later. All right, folks, there you go. 25K is on the line for this bet. Yeah, we have to include a stock split clause because what if we get a stock split and then we get to $50? I don't know, dude. Look, the reason I did that, it's not even for me to be cocky or arrogant. It's kind of just like off the whim. When you ask me, if anyone were to ask me on the street, hey, you think Palantir is going back to 50 in the next 5 years? I would say no, and I'd be willing to bet a decent amount of money on that. I could absolutely be wrong. And again, I have been one of the biggest bulls that has been concerned about valuation since 40, 50, $60. But even I can't deny the trajectory of their growth. I literally bought more shares today, 100 shares. So instead of 25,000, I spent 17,000 this morning, showing how much confidence I have based on this quarter that they can continue to grow. And I just think to get an 80% decline at this point is a bit aggressive. It's just a bit aggressive from these levels. And so it'd be about, call it 75% decline. Let me do the exact math. Yeah, basically 75%. A little bit less, 70%. So 70% decline from here. I don't see that, dude. I just don't see that. Austin, thanks for the super chat. So, Mid, how are you going to spend your new $25,000? Thanks for the show and everything you do. Austin, appreciate you, man. Austin, OG Palantir community. He got a lot of his family into it when it was in the early days as well. And Austin, by the way, Austin is someone who I really respect for his investing prowess. He cares a lot about valuation. Like when Austin thinks about investing, he starts with like, the way we should think about the multiple the company trades at, all that stuff. And even he, because he's a retail investor that didn't only care about the market cap when buying Palantir, back when it was $7, he really cared about the story, the value, what they're doing, listening to the customer testimonials, employees, all that stuff. And that is what has allowed someone like him to deal with the valuation because he knows what he bought. And I think that's the big difference between a retail investor who just bought it for the hell of it and then the stock went up and they said, all right, let me sell, it's getting expensive, versus someone like an Arnie, like a Matt, Amir, myself, Austin, so many of you in the chat that have stayed with the story and the story has kept rewarding you because you just understood what you were buying. How about you all take us out for a steak dinner and Kris has to watch us eat the 25K? Yes, maybe we do a steak dinner in a nice city. We spend 25K on the dinner. Maybe we do that. Dude, if Hindenburg does a story, first of all, Hindenburg Research shut down. They're a short selling firm. They shut down. But if they did do a story on Palantir, it would be the most bullish. The last time someone wrote a short report on Palantir, I had them on my show and I debated them for those that haven't seen it before. It was a guy who writes a Substack called The Bear Cave. And essentially his argument, dude, for people that haven't watched that debate, I'll link it right here in the chat. You can watch it later. But it was a big moment for the community at the time because that was the first public bear report we got. Karp was asked about it at AIPCon, and Karp was like, the bears can go back into their cave or something. He was like, I don't really care what these guys are saying. But I invited him onto the show to have a live debate. And I talked about his thesis, and he was like, well, I talked to all my friends, and they say that Palantir is just like a consulting firm. And I was like, wait a second, what friends did you talk to? And he was like my friends who graduated college. And I'm like, why should any of us care about these friends? Like, what are you talking about? And then he started going into SPACs. He's like, well, these SPACs are a scam. And I'm like, no, the SPACs are just bad investments, which, by the way, they've now broken even on. Amir showed us that chart yesterday. They're now break even on the SPACs. I'm like, look, the SPACs were a bad investment. We can objectively, but a scam? Like, what do you mean scam? Like, it's all these accusations he was throwing out. And that was the first test for the community to be like, oh, the bears really have nothing. Like, they really got nothing. The only argument they had at the time was lack of growth, which obviously now that argument is not there. Now the argument is valuation. But they had nothing substantial back at $15 when that bear report came down. And yeah, and the biggest thing is I asked him, all right, so what's an ontology? He was like, well, like, he didn't really have an answer for it. And I was like, dude, that part matters. Because as literally Morgan Stanley's entire report today was about the ontology being an operating ecosystem to implement AI models. So when I asked him what is an ontology, and he was just like, well, I don't need to know that. Obviously it was a bit confusing. I'll try to find the video. I got to go to my YouTube studio to type. I forgot the title of what the video is, but I'll share it for people. Shout out to Palantir Hotline. This guy, I believe, is 100% allocated in Palantir. He's been buying every run as it's gone higher. And he's been rewarded as well. You got a red candle right here on Palantir, 169.88. Again, could this thing go back down to 150, 160? Absolutely. As much of a good quarter as it was, valuation is aggressive. But does it have to? I don't think so. And now we're going to see how many dip buyers come in, if you want to call this your dip, versus how many sort of sellers you have as we get towards the end of the day. Let's get a little bit of an update from Goldman Sachs on this market and where they think the market's going, and I guess how bullish they are if we do get some potential rate cuts.
It would be 14 percentage points, and it ended up being 22 percentage points. I think that is a key number to think about, that the surprise, the magnitude of the surprise, was really concentrated in those magnificent six until we get the NVIDIA in a couple of weeks. So I think that's a key issue. I think the broad takeaway from earnings thus far, we're about, at the end of this week, we'll be about 85% of the way through earnings season, is that you had positive surprises, you had guidance, and the commentary from management was generally positive. And that's a good backdrop for equity market, generally speaking. So first of all, you had 2/3 of the companies beat earnings expectations. So expectations coming in was around 4 percentage points of earnings growth. It ended up being thus far 9. So that's a positive surprise. Now, admittedly,
although almost all of it was due to six companies.
A lot of it came from there, but
and the rest was 4%.
It was still positive, surprises or expectations. The second is the improvement, the guidance, and companies were raising guidance. And I think here you get a sense of the breadth of what's taking place. You had basically half the companies this quarter raise guidance for the forward year, whereas in the first quarter, only about a quarter did. So therefore, you had these results. And to your point, yes, you had good results in the Magnificent Six thus far, but really it was the breadth of their commentary. And then the third issue we take away is, what did management have to say about things? And they are of the view that they can mitigate the cost of these tariffs. And that's an important distinction. That's really where most of the portfolio managers are really asking a lot of questions on right now. It's tariffs and rates. And the tariff side of it is 60% of them expect to raise rates. 75% think they're going to push back on their suppliers. And ultimately, they will be able to maintain their margins.
60% think.
And that's also why you're seeing a little bit of weakness for these very interest rate sensitive stocks, and stocks that don't have the best margins. I mean, even in Amazon, which, great margins on AWS, but everywhere else, their operating margins went down. And Angie Jassy really tanked the stock on the earnings call when he said, we don't know who's going to take the cost for tariffs, which implies it might not go to the consumer. And if it doesn't go to the consumer because Jassy doesn't want to piss off Trump and Amazon's going to eat that cost, obviously that could be bad for Amazon's margins. So that's another thing that we have to think about. Yeah, he did just call it the Mag 6. They're obviously excluding Tesla. They should be excluding Apple from this whole Mag 6 discussion. Like Tesla, I still feel, although the earnings suck, the potential for them when we talk about a magnificent company is the most potential in the entire Mag 7. Whereas Apple, which did have a decently good quarter, the potential here is a bit lacking. I mean, now the big rumor on the street is Apple's going to buy a Perplexity because they don't seem to have any other choice. I don't know if I'm Arvind, if I would sell Perplexity. Like $30 billion is a lot of money, but if you think Perplexity can be a Google 2.0, even if it's not as big as Google in terms of volume of queries, Perplexity is going to get to 100 billion in the next 5-10 years. It's not going to be easy, but it has a shot to get there. And I don't know if he would sell for 30 to Apple. Mag 4.5. Yeah, I mean, look, could Palantir be in the Mag 7 one day? Yeah, obviously they're very early in their growth trajectory. I mean, here's the big thing about the share price as well, right? Like, do shareholders wake up one day and say, oh my goodness, this company's 400 billion, they're doing 4 billion in revenue, what were we buying? And then it just immediately, starts tanking aggressively. Could that happen one day? Sure. I think what prevents that from happening, same thing that prevents what's happening with Tesla, is the potential of growth. And Tesla right now is in the potential phase. They're not even in the growth phase because, the earnings have been bad the past couple of years. Palantir's in the growth phase now. I was telling Steve this last night. Palantir did a 20x before they had their NVIDIA quarter, which I wouldn't say yesterday was the NVIDIA quarter because, NVIDIA quarter, you have to hold it up to a really high standard, but it was as closest to an NVIDIA quarter as we could possibly get. And the fact that the stock ran up, NVIDIA didn't get the share price run up until they had the quote unquote NVIDIA quarter. Palantir had the run up for whatever reason that you want to explain it for, and then put up the NVIDIA quarter. And so now you're in this weird conundrum if you manage a lot of money and you own a lot of Palantir, or if you're a retail investor and have a lot of Palantir, which is, okay, I got share price appreciation to the tune of like what people wait a lifetime to be able to achieve. Before the stock showed me it was worth it. Now the stock is showing me it's worth it, but obviously even putting up those numbers still doesn't scream $400 billion of steal of a valuation. So what do I do? And I think a lot of people are just saying, I guess I'm just going to hold. Because there's not, because if, why would I sell into growth? You know, it's not like Palantir's at $1 trillion right now. I mean, it's like just absolutely insanely egregious. And 400 billion is still pretty up there in terms of the level of multiple it's getting. But you still have people saying, well, if they're going to keep growing, even though it 10x, 20x before the growth, now that the growth is here, maybe it doesn't need to 10x, 20x again, but it also doesn't need to go down 80% to $50. And I think that's also what keeps people in the stock. And obviously, if you get a dramatic dip, I think people will buy that dip as well. Do you think Palantir can be bigger than SAP? I think Palantir today is bigger than SAP. SAP is at 332 billion. SAP trades at a price of sales of 8. Palantir is at 401 billion. Palantir trades at a price of sales of 117. No logical investor can make sense of that from the numbers. I get it. But I feel like focusing on that has fundamentally missed the story. And by the way, I've been guilty of this as well. At 60, 70, 80, even I was getting really, really concerned about it. I should have been buying more. Should have said, no, there's something deeper here and I need to double down. And so I'm guilty of that as well. And I'm pretty bullish on Palantir. So everyone, like, I think has been humbled, all of us, on where Palantir can go in terms of their trajectory. That doesn't mean they need to get to $1 trillion tomorrow, but does that mean they need to go back to 30, 40, 50? I don't think so. And I think when I talk to Steve next time, you guys will get some of his perspectives as well, which is, which is a relatively bullish perspective from someone who hates the valuation on Palantir. Duolingo has earnings tomorrow. The main earnings we have today are AMD, which I'll be live for. I know a lot of you guys care. We're not going to have Technical Tuesday today because I know everyone just wants to hear the earnings call. So we're going to go straight into AMD's call at 5 p.m. We also have a bunch of other companies, though, besides AMD. SMCI, A-Lab, Arista, Upstart, Rivian, Toast, Snapchat, Lucid, Zeta. I know Zeta is becoming a big one. Amgen, Coupang. You got a lot of companies. There's probably more that I'm forgetting that are reporting. So AMD will be the big one, but we'll be looking at all those companies as well. Yeah, I think you guys will enjoy the Steve chat. I think you guys will. We were on the phone for like an hour and a half last night, and I was like, Steve, are you actually saying this? He was like, yeah, dude. He's like, I can't deny this quarter. I just can't deny this quarter. It's pretty incredible. It's pretty incredible. Regardless of what happens to the share price, as an actual long-term investor, for so many of us that bought a long time ago, we really did see some momentum. SMCI right here down 1%, NVIDIA down 2%. They're really taking the semis down on a Trump comment about semiconductors, which wasn't even that big of a comment. But they're taking the semiconductors down just based on that, which is a bit annoying. But yeah, you're seeing that pain. This is what he said in the morning, which I think is causing some of this pain on the semis.
Though, or in those investments, what kind of teeth are in those investments, meaning that would force the EU to make those investments? If they don't make those investments, what happens on the other side?
Well, then they pay tariffs of 35%. No, they brought down their tariffs. So they paid $600 billion. And because of that, I reduced their tariffs from 30% down to 15%. And a couple of countries came, how come EU is paying less than us? And I said, well, because they gave me $600 billion. And that's a gift. That's not like, a loan, by the way. That's not a loan that, 3 years comes up, we have to pay it back. There's nothing to pay back. They gave us $600 billion that we can invest in anything we want.
The deal that you
and nobody knows it, Becky. Nobody knows it because they don't know.
No, we have been trying to figure out the details on that, Mr. President. So
well, there are no
the
details.
Clarity on
the
that.
details are $600 billion to invest in anything I want. Anything. Okay. I can do anything I want with it. And the purpose was they've been, ripping us for so many years that it's time that they pay up, and they have to pay up. we couldn't afford to have the deficits. Look, I did something with Switzerland the other day. I spoke to their prime minister. The woman was nice, but she didn't want to listen. And they paid essentially no tariffs. And I said, we have a $41 billion deficit with you, madam. I didn't know her. I said, we have a $41 billion deficit, and you want to pay 1% tariffs. You wanted 1%. I said, you're not going to pay 1%. We lose, because I view deficit as loss. You know, you have some people, by the way, I think
pharmaceuticals are a big issue with Switzerland. I think
well, I'll go into pharmaceuticals. Yeah. They make a fortune with pharmaceuticals, and they make our pharmaceuticals in China and Ireland and everything else. And within the next week or so, we're going to be announcing tariffs on specifically. This is this is a separate class than the 15% tariffs on sort of everything. These are excluded classes, I call them. I like to call them excluded, like steel, aluminum, etc.
Right, the
well,
232.
We're going to be announcing on semiconductors and chips, which is a separate category.
There you go. That statement right there. Semiconductors and chips. And I guess that's hurting NVIDIA and AMD. Why are they doing tariffs on, like, it makes no sense, bro. This is where you kind of got to look past what Trump says. He knows semiconductors and tariffs and chips on, or tariffs on semiconductors and chips are not going to be good for American innovation, like in a meaningful way. So, and semiconductors have been excluded from pretty much every tariff that has been announced so far, especially the ones in China. So sometimes I feel like he just says shit to say shit. And like, it could help some companies, but for a lot of them, I don't think it's going to help the overall narrative that semiconductors are growing. So that is a bit weird. I know he wants to produce here. I get it. But like, it's also a fever dream to imagine we're going to start producing all the chips in the world here. Like, that's just, and if you want to use tariffs to incentivize NVIDIA and AMD and TSM to start building factories in the United States, okay, but you're going to give up a lot of growth for those companies if they have to pay massive tariffs. It's like asking them to build iPhones in the United States. Like chips, I do think we should build a lot more in the United States, 100%. And that's probably why Intel is going green right now, because that's what Intel's trying to do. But like, you can't tariff the crap out of NVIDIA and AMD just to do that. It doesn't make a lot of sense. Moon Money, thank you for the gifted 10 memberships. Appreciate it. 10 of you guys just got a gifted membership. American Jedi, thank you for the $100 super chat. I'll put $100 on it for you, Amit. Look, if we have to pay Kris $25,000 in 5 years, I will do it. I mean, I said it with confidence because I really do believe that $50 on Palantir. I mean, if Palantir gets if they let us buy this thing at $50 again, I mean, I think I would go full port. Like, I would just be like, okay, you're giving us, barring nothing happened with the thesis and nothing happened in the macro. Like, I don't see that happening. I thought he would suggest, like, I wouldn't have made the bet if he said like 100. Like, could I see that happening? Yes. Like, obviously I could see that anything is possible, but 50, if we get to 100, I mean, you would imagine the amount of people buying that dip to get to 50 from 100, which means to decline 50% after we already declined to 100, I think would be very difficult over 5 years, especially if Palantir grows the way they're expected to grow. And given some of the preliminary conversations I was having with Steve last night, it feels very possible. Let's see if he picks up. He wanted to get his article out and then talk about it. Let's see if we can get him on the phone for a couple minutes. He might be in meetings right now. He might not be able to talk. But he said he wants to write his article first and then talk about it on the show because he's going through the numbers and he's pretty excited. What'd you say?
I'll call you back in 2 minutes.
Okay, cool. All right, cool. We'll get him in 2 minutes. And we'll see what he says. Bitcoin, are we dumping on BTC? 112,796. We are dumping on BTC. Chris's bet is that valuation will matter again for this stock at some point. So I think that's a fair argument. I think valuation will always matter to an extent. My point is, I don't know if valuation mattering means the stock goes back to 50. I mean, I could see it going back to 120, 100, 75, like if we really want to get aggressive. But I just think we're underestimating the amount of sheer volume of selling that would need to happen. Like when you talk about an end phase, like when you talk about a stock that went from 300 to 30, this is kind of, and by the way, to Chris's credit, he called this. He didn't short end phase, but he called literally at that top that this thing was not going to be pretty over the next couple of years. And he's been right about that, right? 300 to 32. But his logic that created the amount of selling pressure was due to massive macro uncertainty that uniquely screws over Enphase because it's rooted in interest rates versus the cost of solar panels and solar financing, which as rates go up, most people don't care that much about paying the interest to make their home a little bit more cleaner when it comes to energy. And then number two, oil prices. And I think Kris had a hunch that we are producing a lot more oil, so the cost of solar is not going to be as attractive if oil prices go down. What is that similar macro argument for why Palantir needs to go from 170 to 50? The only thing I could imagine is a thesis-breaking quarter where the growth slows down so significantly. They put up like an August 2023 type of quarter, 13% growth, where the market's like, there is no way in hell we can just, and then it goes down now 30% in a day. I don't see that quarter coming over the next 5 years. And I would be very surprised. And if it does come, quite frankly, he deserves to get 25,000 from me. Because the only way I think Palantir gets down that low is if they have such horrible execution at this point that the selling pressure is so dramatic that $250 billion leaves the stock from its market cap. And then I probably deserve to pay out 25 grand because I was way too aggressive in thinking that it couldn't get back there. But based on all the data and evidence I'm seeing and the macro tailwinds around AI, it is just hard to not take that bet. So I'm like, wait a second, I don't think that's necessarily going to happen. Even with this New York Times nonsense, like that didn't take down Palantir because no one cares about, like, the media stuff didn't affect them. Government stuff, I think, is only, dude, they grew government revenue 53% year over year. Like, that's just, it's absolutely incredible. And so I don't think that's slowing down. But if it does, then, I will have to pay up. I don't really see that necessarily playing out the way some people do think it could happen. I think Chris's thesis, Palantir can't go up much from here, and next year they're going to have comp against this year's number. So I agree, like, it's going to be hard for the comp, and it's going to be hard to continue expanding the multiple. But that's not the bet. The bet is that it goes back to 50. And that I feel a lot more like if he said, oh, in 5 years, Palantir will be 250, I would not take that bet because I don't know. Like, I don't know if the street's going to give it almost, $650 billion market cap. I can't be cocky enough to predict that that's going to play out. But to get rid of the multiple to such an extent, I feel a little bit more on the side of, okay, I can take that bet versus betting that it has to go up rather that it doesn't have to go down as much as people think it has to go. We did have Dan Ives yesterday talking about this quarter as well. Let me just pull up what he said. Again, we saw a lot of the analysts this morning were very, very bullish on the quarter. Obviously, they are excited about some of this growth. By the way, Jensen will be headlining GTC in Washington, D.C. So NVIDIA's GTC conference will be happening in Washington, D.C. in what do you call it? In October 28th. It's actually a day after my birthday. And so that will be important for them to do that entire conference in D.C., where, a lot of decisions take place. And obviously that will be very good for some of the lawmakers that we'll get to see NVIDIA's technology up front. Here is Dan Ives on Bloomberg this morning talking about Palantir.
Palantir to $200, writing, we believe in the next few years, Palantir has the potential to be a $1 trillion market cap as the AI revolution takes hold. Dan, I'm sure you were listening to what Mandeep was saying about how there is no way for the valuation of Palantir to be more than the combined market caps of Salesforce and Adobe. They can't grow into this quickly enough. What is your counterpoint?
Yeah, I wonder what Mandeep's going to say when it's $1 trillion company in the next 2 to 3 years. I mean, look, my view is the reason it's the Messi of AI, they are owning the use cases on the software side. And I think the street continues to underestimate where this growth is going. And I believe over the coming years, Palantir, it's going to be on that Mount Rushmore of tech. And that's why investors are recognizing it. And we believe, I think this is just the beginning of this AI revolution, and Palantir is the gold standard.
Dan, this has been a company deeply associated with the Defense Department, deeply associated with the U.S. government and various contracts. How much are they able to parlay that into the public sector? How much does this remain very much a company intertwined with the U.S. government?
Yeah, it's a great point. Look, I mean, if you go back to their history, their roots, it was government. But now it's kind of the 1-2 punch because they're getting massive deals on the government, on the federal side, because when it comes to AI, who's the first call? It's to Carp and Palantir. Then on the enterprise and the commercial, you're basically starting a whole new business. So that's why this is such a unique company. And I understand what Mandeep's saying, but my whole view is, look, the bears, when they're sitting in the caves, they can see AI in the spreadsheets. And I think that's how they've missed this move. And I think they're going to continue to miss it on Palantir.
Dan, when it comes to Palantir, though, the company is deeply connected to Republican politics. Does any of this change if there's a changing of the guard in Washington?
Yeah, look, I think that's something you got to cross that bridge, when they come to. I do think that the technology continues to stand above the rest. I think, because I can tell you all my time in DC, the agencies, that's what they're focused on. And look, that's why Palantir has been elevated to a special status. You look at Oracle, you look at Microsoft, who they partnering with, Palantir. And I think what's essentially happening here is it's revolutionizing software. But when it comes to AI revolution, we could talk about all the hyperscalers and all the growth that we saw over the last week or two in earnings. The use cases, the golden goose, is Palantir.
I mean, look, to give Dan credit, he's been ahead of the story from the rest of Wall Street, him and Bank of America. And since 19, he hopped on and he said, hey, this thing is going to work. Palantir right here, 169.50 on the day. And if it continues to work, then, maybe we will see a lot more momentum here. I did an AMD pump or dump poll. I think we'll end out the stream on thoughts of AMD. Actually, no, we can't end out the stream because I have someone who's calling me. Steve, good morning. You're on the Market Open.
It is still morning, isn't it?
It is 3 minutes away from afternoon, so yes.
This is correct. You're going one time today.
We started at 7:50 today to listen to Trump on Cnbc. So
you're putting in the hours today.
Putting in the hours. I barely slept last night because
I don't know how you would have slept last night.
It was my sleep score is 65. It was a little tough to sleep, but
okay.
Yeah, I know you're working on an article, and I know you've got a lot of thoughts that you're compiling on Palantir, and we'll get your full reaction on Friday on the close when your article comes out. But we just had Kris on the show 20 minutes ago. We ended up making a little bit of a friendly bet, a $25,000 bet that Palantir won't see $50 again in the next 5 years. So that is now out there in the world.
25K?
25K.
Can I get in on this?
I'm assuming you want to get in on my side of the trade.
I mean, I kind of want to get on your side of the trade. We may need to make like an options prediction market on this. Can take sides and get ads. We're gonna have to figure something out, but I would like to get in on this action somehow.
Dude, I said 25K to hyperbolically to just make the point that I'm bullish, but then he actually pinned me down to it. Originally, he said 40, and I was like, all right, let's do it at 40. And he's like, no, let's do 50. And I was like, all right, whatever, 50. So yeah, it's 25,000 next 5 years. The terms of the agreement are, it can't be a macro-driven event. So if the S&P 500 falls 25%, obviously.
It should be, it has to be for a 3-month period or a 2-month period.
Yeah, basically the terms are it has to be independent of the market. Like we'll know if it's like COVID 2.0, obviously everything's down. But yeah, that's the bet. And so based on your answer to wanting to get in on my side of the bet, I imagine you thought the quarter was relatively bullish.
I mean, I don't even think you can say relatively.
Okay, so you have the floor. What did you think about that quarter?
It was, look, everybody knows that I am still pro Palantir. I have just criticized the valuation a lot because I think it's run way too far. The problem now is they're not a company that's just doing $1 billion or $2 billion. They're doing $4 billion in revenue, and their revenue growth is expanding. That's really never been seen. And despite trading at 100 times sales, you can't dispute the fact that they just grew at 47.5%. And I backdoored my way into the numbers. They're going to put up 50% growth next quarter. And then they're going to put up 45% growth in Q4. The next 2 quarters, mark my words, are going to be 50% and 45% year-over-year growth. And I got to tell you, I don't know that the train slows down. And I don't know that you see a quarter under 40% in 2026. have not done like a full model on that, but just on my quick napkin math, I think you could see 40% year over year again.
Yeah.
But I really got to look because the floor is so much higher now. So I got to look and really see how much of these contracts do I think are going to be in there. The growth could be in the 30s next year because the floor is going to be so much higher now that you have, after this year's over, 3/4 of over $1 billion as a starting point. So you need $1.4 billion. So 40% may not be achievable next year. But then again, with all the contract, we've never seen contract growth like this ever from them, which makes me think they could have 40% growth. Either way, I cannot believe I'm going to say this because I like looking at the business side of it. The valuation may not freaking matter anymore for Palantir. And I hate saying that because it is so ridiculous to think that a company that is going to do, 1.2 or 1.3 billion in net income is going to trade at 300 or 400 times net income and 100 times sales. Like, it is still very expensive stock, but I'm starting to warm up to the idea that it is warranted. And I'm starting to warm up to the idea that this may bounce around between 150 and 200 and consolidate within that range over the next 2 years or so. And it doesn't have to have a gigantic retracement unless a macroeconomic event happens.
So this is why I think people really like you, just like as a human being and obviously as an investor. You are not emotional. Like on SoFi, you were annoyed for the past couple months. And then as soon as SoFi put up the big boy numbers, you're like, no, I'm not going to deny this. Like whatever emotions I have about the business banking, yada, yada, I don't care. I'm moving on. And you're not ideological. You don't stay stuck to one opinion. On Palantir, my audience will attest to this. You have been one of the biggest bulls since $7, but the past 5 months, you've been really annoyed at the valuation. But when you get a quarter like this, and by the way, the entire street took this thing up to like 170 today in terms of their price targets. Outside of Rishi, he got us to 45 now, finally. It's hard to deny the growth. So I guess the broader question to you is, how are you reconciling how much you care about valuation with growth? And do you think you're a prisoner of the moment here, or do you think this really is something that you can't deny?
No, I'm not a prisoner of the moment. You can't deny this. There's nothing to deny. I mean, this is something that very few companies could ever achieve. This is a Meta in the early days or an Amazon in the early days with growth. Like, only very few companies can do what Palantir is doing. There are still things I don't like that they're doing, but that should not overshadow what they are accomplishing, because the things that I don't like have nothing to do with revenue growth.
Yeah.
And I think that's where me and other people differ, because I can sit here and discuss dilution the way I have in the past and the way that Tesla dilutes shareholders. I can discuss how their interest income is still X, but I got to tell you, their interest income, while it grew, it declined by about 50% as a percentage of net income because the net income grew so much. So it's not as big of an issue as it once was.
Mm-hmm.
But look, there are things I could pick apart about the actual profitability and EPS side. But what I can't pick apart is the revenue growth. I can't pick apart the free cash flow margin. And you have to give credit where credit is due. And they came out and they hit a grand slam this quarter. And I think they're going to hit another grand slam next quarter.
Are you interested in buying at these levels?
Well, you know the answer to that. I wouldn't be putting new capital to work as a new investment. I have a different situation than other people. I may be forced to add next month in order to write at the money cover calls on it to generate a bunch of premium to help myself buy back all the cover calls that are underwater. So I would be comfortable doing that because I would still have, with the amount of shares I think I may add, it would bring my price per share up to the $45 to $50 range, because my cost,
which is still an incredible
so
cost
low.
basis. I mean,
right.
For an average to be
then,
50 and the stock to be trading at anywhere near 150 is amazing.
Yeah. So, and the way that I'm looking at it is, okay, let's just say the cover calls are 175 is share price. I would write them at 177.50, just one mark up, and take all the premium on a weekly or bi-weekly basis. And if the shares get called away, they get called away and I just rebuy them. Because at this point, we're not going up another 500% in the next year. Like, I just don't think that that's possible. So I'm not worried about getting in the same situation with a new set of shares. And if it goes down, I'm not really going to cry about it because my cost basis is still low and I'll still be able to generate a bunch of premium. It'll allow me to eventually buy back my covered calls with other people's money instead of coming out of my own pocket.
So
it's going to be a long-term project, but I think that's where I'm at.
Yeah, to summarize what Steve is doing for everyone who just is trying to reconcile it, basically he has a lot of shares that are locked up in covered calls, meaning he needs to buy those covered calls back to free up the shares. Now that the stock has gone up so much, it's going to cost a lot of money to buy it back. So he's thinking of buying shares here, selling at the money covered calls every couple of weeks. The premiums are juiced up on Palantir. And if Palantir stays range bound, which it hasn't for the past year and a half, but let's say at 400 billion, 350 to 425 billion, maybe the range is where it stays at, he can consistently get income off those shares and then use that income to then buy back his previous covered calls and free up the rest of his shares. And if the stock were to go down, you can always roll down those calls. And if the stock does go down, it'll be cheaper to buy back the covered calls. So the only worst case scenario, ironically, is if Palantir goes to 200, 250. But at least you'll have more shares then, right?
Which isn't a bad situation because unlike last time, I will not be rolling these.
Yes.
At least upwards.
Yes.
So I'll just let them get called away. And if I have to put in a couple more bucks to reestablish the position, it's fine.
Agreed.
And the best part, like not the best part, like I'm not in a great situation with this investment. I never thought it was going to do this, but I do have, this was like DEFCON 4 plan of how to unscrew my position. And you know, I'm just kind of waiting until it looks like it's going to even out. Because if I start doing this at 125 or 130, I would have got caught again. But it would have been annoying because of how violent it is. But now it's at a level where I don't think it's going to be any crazy jumps from here. And I only have to buy back one call option at a time. I don't have to buy back the entire stack. So every call option I buy back allows me to write one more call. So I'll be able to generate more premium as time goes on, and it'll be quicker each call option I buy back because I'm generating more income from more calls. Like it's going to be work, but it's doable.
So here's a better question. If you're only expecting it to be range bound in the next couple of years, why even buy Palantir? Why not move on to a better opportunity that's more asymmetric?
I need to get my money out of it.
Hmm.
I can't sell my shares and hope it goes down so I can buy back the calls at a cheaper price, because if it goes up, they're now naked calls that completely screw them up.
Right.
Because the loss is infinite at that point. Like at least if Palantir was to go to 400, at least I still have the shares to freaking make good on my obligation.
Right. And I think after you saw that earnings too, you're kind of like, all right, well, what other massive AI opportunities are out there? If you were to, you know, say, screw it, I'm just going to move on to something else. Like that's, I think, the biggest question of the day. And I think from the analyst reports I've read, the reason they're upgrading this thing across the board is they're like, wait a second, what else is there that's that exciting?
Yeah, nothing. Okay, nothing. There are other AI plays out there, but you're talking about multi-trillion-dollar companies. You're talking about Meta and Amazon.
Yeah.
And look, Palantir is getting expensive. I think it's going to trade range bound because I think it's going to be really hard to say that they should be valued more than Oracle. And then at that point, more than Berkshire. You know what I mean? Like they're getting to a territory where it's going to be really hard to justify them as a $600-700 billion company right now.
Yeah, like it's already hard. So, but it's happening. So you're saying for it to get even harder, you take the under on that, which means that's why you buy shares right now. But you're also not arrogant enough to think it's going back to 40, right? And that's the
nuance. I mean, do I think it's worth 40 a share? Yeah, I think it's probably worth 40 to 50 a share. That doesn't mean it has to go there. I mean, Amazon always traded a premium. I mean, Tesla's always traded a crazy premium. The difference is that Palantir now trades at a crazier premium than Tesla's trading at, which I think is going to help a trade range bound. I don't think they can take it to $500-600 billion for a while. I think it could get to $500 billion if they have 2 or 3 really good quarters. I could see it going there, but I don't see it going past $500 billion for a while, because now you're talking about the top 10 companies in the world or in the U.S. and the freaking underlying metrics are so much different when you start talking about that group that it's already hard to compare Palantir to Oracle. I think it's even harder to compare them to freaking Broadcom.
I agree. I mean, it's just one of those quarters where you look at it and the only red flag is valuation. But outside, I mean, international growth is not the best, but
who cares about international growth? I mean, they are at a point where just let them do what they do. U.S. commercial is the most important aspect behind the U.S. government. Let them cook. Let them do what they're going to do. And I don't even know if I see this going back to 70-year-old at this point.
yeah, that's the reason I brought that up with Kris. I'm like, the amount of selling pressure that would have to happen outside of a macroeconomic event for this to independently go down, even though we all know it's expensive here. So, but is everyone going to wake, just like Tesla, right? Does everyone wake up and say, oh, Tesla's actually worth 100 billion as an auto company, not 900? That's 800 billion of market cap that has to leave this stock somehow. It's just unlikely. And you can bet that that's going to happen all day long, but you're likely going to be wrong. So the idea that $200-300 billion leaves this market cap doesn't have to gain the market cap in the coming years, but does it leave? Hard to say.
Hard to say, but I think I'm putting a freaking bullish rating on my next article. Like I'm 1 foot on bullish and 1 foot on neutral because of the valuation, and it's a tug of war. Because from a business aspect, I'm bullish. Valuation aspect, I'm cautious. But in this case, the freaking business metrics may be more important than the valuation.
Yes, and I don't know if you watched the call yet.
No, I'm not. I refuse to watch it.
Yeah, because
I'm gonna read the transcript. I'm not gonna watch it
because you would buy like 5,000 shares if you like. Even Carp would get you so hyped. I mean, like that's the thing. Like when you watch the call, you kind of forget about everything other than the fact that Carp is on a mission, and you're watching a guy who's spent the past 30 years of his life dedicating himself to a mission, and now the moment is here, and he's executing against that mission.
I'm gonna give you his flowers. He is a freaking unicorn, just like Zuckerberg. Okay, he is one of the most inspiring CEOs, gets emotional, but I'd rather have him freaking talking about a company than a lot of other CEOs. So,
Agreed. Pretty incredible, Steve. I mean, again, a lot of people in the chat right here just showing you respect because on a quarter like this, it's hard to deny the value of it.
Yeah, I mean, what are you going to do? Come out and say that, it was a bullshit quarter? I can't say that.
And this was the quarter where I think they had the most pressure because they had never had a quarter after having a $350 billion market cap. So if they didn't put up last night, it would have been ugly. And they put up. And it's getting everyone to
remember what I said? I said if they don't put up at least 40 to 42%, this thing is scaling back dramatically. And they fucking crushed. They crushed it.
Yeah.
So don't be surprised about 50% year-over-year growth next quarter because that's what the numbers suggest.
Agreed. So. All right, Steve, we will wait for your article and we'll get you on Friday to talk more in depth about it.
I will talk to you later.
All right, talk later.
Bye.
Palantir on CNBC again. Are they covering it again? They've been giving so much airtime today to our little Palantir, which is now, yeah. Oh, you got Josh Brown giving his thoughts. All right, let's see. What do you guys think? Is it going to be bullish or bearish? I have no idea. Let's see. Got Joe Terranova, Josh Brown. All right, here we go. Let's see what they got to say about Palantir.
The stock has just ripped. We've mentioned it on so many occasions because of what's happened in the high beta universe, where most of those stocks have ripped. But this is the one that investors have continued to zero in on. Yes, valuation might be high, but you know what? Performance is high, and it remains that way, Joe. When you doubt it, it smacks you in the face and says, we can do it. We can do it. We can live up to this high expectation.
These are staggering numbers. Fundamentally, when you combine the revenue growth with the margins, I know the rule of 80 is coming into play here, the combination of that, but they have delivered here beyond the expectation, and the expectations were obviously and needed to be remarkably high. I do think, and I mentioned this yesterday on the show, the analyst community, surprisingly enough, really wasn't embracing the type of price action. There was skepticism there. The 12-month price target was $116. We've got a lift in that today to $142. So look, quite candidly, I'm relying on the rules-based nature of the ETF strategy, which has been in the position since January of 24. There is no way, if I had discretion over the account, I would have kept us in Palantir for the entirety of 900+%.
Well, look at the move. Let's go back. Let's go. Show me the chart prior to one you just put up. From the April low until right now is extraordinary in and of itself.
Absolutely. And listen, when we declined in April, I was at that point saying to myself, okay, this is a shakeout that could take this stock back down to $50 or $60. And I was wrong there as well. So I'm relying on the rules here to keep us in the position. But you have to credit this company. They are absolutely delivering on all the fundamental metrics. So if you're skeptical here and you're just blaming price, if you're saying, no, this is just a representation of momentum, it's the reason why, and trees don't grow to the sky. It's more than that. It is actually delivering on the fundamental AI story.
Not all momentum type names are created equal. Deutsche Bank, to Joe's point about the analyst community not necessarily buying in, so to speak, Deutsche Bank throws in the towel today. They had a sell call on the stock. Current valuation still challenging, they say. Can't wrap our arms around that. But our conversations with multiple customers in the company over the past several months have further reinforced the view that something special is going on here. That doesn't underscore the really? I don't know what does. So they're at hold. They can't bring themselves to buy it because of the valuation questions that they continue to have, but they have taken it off of sell. Josh Brown, why know you here? Why don't you own a name like this?
So we have exposure through the S&P 500. This was added on September 23rd. I'm one of these idiots that's worried about the valuation the entire way up. And I don't always do that. And in this particular case, I just absolutely missed. I missed on the story being as powerful as it is fundamentally, just purely in terms of the growth. This was never a cheap stock, all right? So it's up 124% year to date. Even at those April lows that you just put the chart up, there was no like opportunity. It was never selling at any sort of a discount on like price earnings growth, just literally never. And this is a hallmark of some of these classic growth stories where they just don't let you in if you're thinking with like 1980s or 1990s brain, because that's not what's moving the stock. What's moving the stock, they have signed almost 1,000 customers. Forget about all the government contracts, which are, of course, huge and a major part of the story. Alex Karp spent a lot of time in his remarks talking about the business customers, the commercial customers, and commercial revenue was up 93% year over year to $306 million. The government revenue only, I say only with air quotes, rose 53%. So a lot of people are looking at this like a defense contractor, but in fact, their commercial business is growing at double the rate on a year-over-year basis. Now, they're guiding to $4 billion in revenue this year, which is great, but the market cap is $400 billion. So it doesn't make sense where the stock is trading, but I understand it. I listened to the call. Alex Karp is the new Elon Musk. He's downright messianic. He comes on the conference call and like one of the first things he says is, sorry to the haters. The new class of investors, they love that. They care more about that than anything a sell-side analyst who's accustomed to covering Lockheed Martin learned in business school. So that's the component of this that I missed. Not only are they executing, they're doing it with swag. That's what investors want. And you look at like growth managers who are not in this name, and they have a mutual fund with, 200 positions, and Palantir is not one of them. You ask yourself, who the hell is buying this stock up 7% today after this huge run? That's who. I don't have to do that for a living, thank God. But a lot of people do, and that's where that buying pressure continues to come from.
Karp's the kind of guy who he kicks you know what, and then he gets in your face afterwards, and he tells you that he just did that. And I mean that as a compliment.
Look what he just did.
Clearly the market
can't
does,
argue
and
with
investors
it.
seem to
By the way,
I'm not arguing with it.
Karp doesn't set the valuation. Karp manages the business. And this company, with a rule of 40 score of 91 or 92, you can't make a chart of that and put other software companies on the same chart. The scale, like they wouldn't. So what he's doing is amazing.
He doesn't decide the market value is going to be $500 billion on $4 billion in revenue. That's not up to him. That's what investors have decided.
Right. There are, if you want to use air quotes, we can put it around culty stocks. Maybe this has entered that universe like Josh was talking about regarding Musk and Tesla. Do you see Lemonade, guys, today? In terms of, if you want to say some of the, and I'm not putting Palantir into the lower quality category by any stretch of the imagination, but meme-like names. Lemonade surging today, up 29%.
All right. You got a very Steve type of answer from Josh Brown. I mean, this is why people like Josh Brown. This is why people listen to him. I love listening to his content. I mean, he is one of I think it's him and Tom Lee that are up there on CNBC that I really want to listen to when they talk. He's not going to get every stock. I'm not going to get every stock. Steve's not going to get every stock. I'll be wrong many times throughout my career. So will Steve. So will Josh Brown. The humility to admit it is what matters. That is what people respect you for. People don't really respect your picks. That matters, but they respect your authenticity on saying you're right or wrong. Netflix got that one completely wrong. Thought this thing was never going to be anywhere near $1,000 a share back in 2022. Completely had the wrong thesis on premium content versus user-generated content. You got it wrong. So when it comes to Palantir, obviously Josh Brown is not a fan of the valuation. But as you can see, sort of universally across the board, there's only praise. There's only praise. And I loved his line of they're doing it and they're doing it with swag. They're doing it with swag. Like that quote of read him and weep. I mean, it's just, it's remarkable when you have a CEO who's willing to do it with swag and he's not worried about what the analysts are going to say or what that guy's going to say, that bank is going to say. He's like, no, we're doing it. And I don't care what you have to say. I will say the F word on the earnings call. I will bang the desk. I will come up with the weirdest metaphors and analogies, like telling that we will take the Coke dealers to their home if they try to short Palantir. Like, I will say whatever needs to be said to get people to realize this is the real me. Even Karp started off the call by saying, my lawyers told me I should be a little bit more modest, but it's hard to be modest when we have results like this. And again, the broader argument I was making with Kris about humility, and I think this, some people understood what I'm saying, but I think other people didn't fully get it. You have to be humble to get to the point of where they're at. But as a byproduct of being humble, you get to brag a little bit. Right? Like tell the haters read them and weep is not humble by any sense of the imagination. But the fact that the haters have to read them and weep because the past 20 years you spent in humility building a software company, not propping up the company in the same way that traditional software companies do to fuel the software industrial complex, the SIC, that is what takes humility. Karp saying, on the call yesterday that our clients are being creative with their contracts and they're coming up with ways where they don't pay for something until they get value after 6 months of using it. And we are open to negotiating with them in that frame of mind because we want them to only pay us if they get value. That is humility. Like the most humble thing you can do is being able to get the market to accept your ideas and values and care about your opinion if you actually deliver the value to get there. And then when they do, you're allowed to brag about it. Like you get, as Karp said, the ability to exercise your First Amendment right of free speech if you have the unit economics where people actually care about what you have to say. And so, when you think of Karp being cocky or arrogant today, it's because they spent a lot of time really building the business to get to this point. And then it's like on a day like this, you take a drink. You take a drink. Then you go back to work the next day. And given what I know about the Palantir employees, they probably celebrated last night and they are right back to work this morning. A lot of these employees, again, they're not there for the money because they would have left a long time ago when their stock wasn't appreciating back in the 2018s, 2019s, and 2022. They stayed for the mission. And the fact that Karp said we want to lower the headcount and 10x the revenues, are you kidding? I mean, the operating margins are going to go through the roof if they actually figure out how to do that. But that's the mission. They publicly said yesterday, that's our goal, 10x commercial revenue and lower the headcount, or at least without increasing the headcount, which means every employee that's worth like $800,000 of revenue, they're going to be worth like $3-4 million of revenue to the company in the next 5 years if they actually 10x the commercial revenues in the U.S. business. Yeah, without Europe. I mean, they're not planning to do that with Europe too, right? So I don't know, dude. It was just very, very exciting. Obviously, I'm off a little bit of a high today. I'm also trying to come back to reality and understand this company is worth $400 billion, and I don't think we can deny the market capitalization given you know, how insane the multiple, how crazy these multiples are. But then you get back to, okay, well, why is it just GameStop in 2021 trading at a stupid multiple because Roaring Kitty convinced everybody like this, like, because it's 150% short. It's like, well, it's not shorted, so there's no squeeze. Yeah, there's retail involved, but retail got involved at $6 and 60% of the float is now institutional. And then I don't see GameStop getting upgraded by JP Morgan, Goldman Sachs, Mizuho, Oppenheimer, but I see these very reputable firms that are telling their very wealthy clients that this is the name you have to pay attention to at these prices, at this market cap. Like, why aren't all of them saying to sell it? 400 billion, biggest bubble ever. Because it's hard to sell when you put up those types of numbers. And I think, that's the reason why it's very exciting to see what's going on with Palantir. So, all right, folks, I've been streaming for 4 hours and 33 minutes. I have not freaking slept in like the past 24 hours. Honestly, I don't know how I've been talking for this long. So I need to get out of here, and I'll be back on the market close. I know that AMD is tonight. I will stream the call. Again, I don't own AMD, so I'm not that emotionally attached to it, but I'm excited for it. I do have it in my stock draft portfolio, so I hope it does very well. And I know a lot of you guys own it, and so I really, really want it to do well because I want retail to get a win on this. And it's not a retail heavy only name. Like, it's not like, I don't know what the split is. I would imagine it's like 70-30 institutional, 30% retail, or at least 60-40. But a lot of retail have been talking about this name for the past year, including Sachin, who's a friend of the channel. He's heavy into this. So I'm really hoping it does well. Matt's up 13% on his portfolio. Tanner's up 6.7. I'm up 8.2. Steve's up 0.18. Hims really hit him today. And then Kris is down 1.76. So we overtook Tanner. And now we just have to see. It's going to be between me and Tanner to see who can solidify second. And then eventually for Matt, it's more so a question of some of his names potentially coming down versus my names going up. But his names have done very well. So as long as he holds some of these names like Rocket Lab, SoFi, then he should be good. But if we can get a little bit of an outperformance on mine, then we might be able to get into that first spot. Got a long year left, though. It's only been 2 months since the challenge, so we got a long time. This is the fun thing about ETFs, right? Like you have all these stocks, all these different narratives. One company has a good quarter, one company has a bad quarter, so anything could happen, and then it could determine, like where the rankings end up. So we'll keep track of it over the next year. I'm not going to take a nap. There's no way I can take a nap, because if I take a nap right now at 12:30, I have to get up by like 3 o'clock to get ready for the show. There's no way. So I'm not going to take a nap. I'm probably just going to go for a walk. I wanted to go to the gym like in between the shows, but I didn't know the show would go this long. So I'm probably going to go after the market close again. Also, I slept for 3 hours. So running or lifting weights is going to be a little tough without sleep, but I'm going to try to stay awake and not miss the market close, especially because we have AMD. So, all right, I think that's it, folks. 172 on Palantir. Let's do word of the day, and then we'll get out of here. And we'll be done for today. Again, speechless. There's not much to say. There's just not much to say. Fusty, even though we talked for 4 hours. There's not much to say, even though we talked for 4 hours. Fusty, word of the day.
Fusty.
Old-fashioned or out of date? Old-fashioned or out of date? Those fusty curtains made the whole cafe feel gloomy. The board still clings to fusty policies from the 1980s. I think some of the people that are valuing Palantir are doing it in a fusty manner. And I think we just got to have a whole different approach when we think of Palantir as a growth company, given this new paradigm. So, I don't know, man. Pretty incredible stuff. Pretty incredible stuff for retail. Anything could happen to the stock. It could go up, down. We got a long month ahead of us, long year left, but I don't know if S&P 6,700, 6,800 by the end of the year, Palantir keeps growing. You heard Steve. He thinks 50% growth is very possible. Which I think they will do, because they got it for like 47%. They beat on average by 3-4%. They're going to see a 50% quarter. Like, that will happen. Will the stock move up on that, or will the stock just sell off based on market dynamics? No one knows, but the actual underlying growth of the business and health of the business seems pretty strong. And as long as that's the case, that should be good. All right. What did you guys say on the AMD pump or dump? 73 say pump. Okay. Honestly, bro, I have no idea. I don't know enough about AMD. So I'm hoping it's a pump. I really don't know like if they're going to beat metrics or how much they need to beat by. I'll try to do a little bit of research on their last quarter to try to come in and see what they say. I think the call is going to be at 5. So we'll get the results. We have a lot of other companies after the bell, and then we'll stream their call, and hopefully Lisa Su can deliver. And if she does, it'll be very bullish for all the semis, very bullish for NVIDIA. And hopefully we can keep it going towards the end of August. All right, folks, that's it. Thank you, everybody. Appreciate you all being here. Congratulations on an incredible journey that really does feel like it's just beginning based on the growth that we saw. And we will keep following this journey for the future. And how long is that future? I don't know. But based on the results that Palantir put up, it looks like that future has a long way to go. So thank you, everybody. Appreciate it. We'll see you guys on Market Close. Bye, everyone. Have a good one.